Good morning. It is March 16th. Morning on. You are the first one. Well done, sir. Sorry for my absence. Yeah, a bit of an emergency. We're back. We're going to be streaming price action, technical analysis, trading, stocks, options, futures. Not bonds. Haven't traded bonds yet. But yeah, sub up, like up, comment down. Happy money sticks around. Discord server I've linked up there and pinned. It's free to join. Our Twitter is at Happy Money YT. Here we go. Let me get set up here. My chatting today is probably going to be somewhat limited, just because I have to take it easy and lay down. But yeah, figured I would give her a go. So I guess the jobs day this morning didn't have a whole lot of effect on the market at all. It came in close to expectations. The housing data to me looked like hot, like a lot of new builds. Well, that would be bearish for the market. The jobs, though, look like it would have been bullish for the market, so maybe they equal each other out. And then I think the ECB rate decision just came in. That's what we just had. Had a move from QG. Figure out, is natural gas, does it deliver in physical? I'm gonna have to get out of that. I don't think so. Not these minis. Like they give you physical natural gas, but I'm gonna check. Cash, okay. So what's nice about that is I can basically let these contracts expire, and however much I'm profitable on it, they'll just deliver it to me in cash. That is neat. I'm not rolled a future yet. I don't know how that works. I'd like to, though. Okay. Need some hopium, maybe an investment. Good morning, big hugs. I not much like hopium. I don't know. Yeah, I mean, price goes down, it gets tough to hold if you're just looking at your P&L. But if fundamentals haven't changed, then price goes down as you like that. They raised some more capital, I think, since last time we streamed, which was like 100 million. I guess Hudson Bay signed one of the filings, so I think it's confirmed that they're one of the holders of the warrants, I believe. Still two other unknowns. Got about 9 minutes. I'll go over the trades, kind of the trades I've done. I traded a little bit in the last couple days. Thankfully, I had kind of nice exposure I could just kind of slowly get my way out of. Market's coming down pretty heavy here. I think I think this is ECB. Let's see. US short-term interest rate futures traders add to bets on Fed rate hikes after ECB move. ECB banking sector resilient. Monitoring market tensions closely, ready to respond if necessary. ECB refrains from signaling future rate moves in statement. I don't see what they actually said. Is that it? Nothing. Mark didn't like it. Morning, Indy. I trade futures on E-Trade. So nat gas and then MES or ES. Morning, Christopher. Thanks for your thumbs up, guys. I appreciate it. Sorry for my absence. I could have come back and just done like a background stream and not really been able to talk, but I figured that wouldn't be as appreciated. So waited to come back till I could actually sit down here at the computer for a bit. Might not be able to be quite as active, but yeah, we'll just see how it goes. GME is up 1.3% pre-market. Got about 7 minutes to open. BBY is pretty much flat. So it continues to kind of give us these false signals of a bottom. This engulfing candle, which wasn't quite engulfing the way I like it, because I like the body to be bigger than the previous body. So I think this low, I'm not sure, but I think this low is, can I see on the candle body? No, I can't. I think this body is the same height or the same low as this one, so that might not technically be an engulfing. But our MACD as flip bullish, and any little uptrend, any little bounce here, and we get a bottoming point like here on the RSI, and we'll have that divergence from here to here, which would be a bullish sign. So basically, without this MACD coming as low as it was back here, it's signaling the bottom. So if this keeps coming down so much, but not only so much, so fast, like much faster than it has been, which I don't expect, then we're gonna get that RSI divergence, which is to me a good signal of a bottom, especially on this long of a time frame. That's going to be solid, more solid than a one candlestick pattern. It's kind of interesting how it's setting up. I've never been able to anticipate an RSI divergence for this long. I'm trying to think if there's any way it couldn't form. I mean, yeah, I'd have to just excel. This RSI would have to get lower than here, because this is lower than here. So yeah. Hey, first morning. The trades that I got out of, so I had the short on, I had puts on GME, sold those some yesterday, some the day before. Those are actually pretty nice. Those were like 200%, I think. I had covered calls on BBY on here. Closed those yesterday because they were basically, yeah, max profit. Here's the puts. Oh, and then the Rivian put debit spread I closed, that was like 140%. And then my Tesla put debit spread. So I closed the first one at like 120%. And then I closed the second one at about break even. So figure about 120% on that play. Could have closed them both then, but I figured Tesla would keep coming down, and then I decided to just close it yesterday because they're weeklies, and I mean, I had them for like a month. I've had them for a while. I got them back here, or where was it? Here? I got them here for a month, and then Tesla just held up for Investor Day. Sold off after Investor Day, which we expected, but then it bounced and it's just held up so well. So I sold the first one of these days. So that covered my cost basis, so I was free. And then I sold the second one for about break even, so basically 100% on it. And I wasn't expecting, it was too risky for me to hold that, because I would have needed Tesla to really start accelerating to the downside the next 2 days to make any money on it. So I'll spot break even. I'm like, I'm gonna jump out. I've had enough. GME finally getting some big moves to the downside. Bigger, not that big, but a little bigger candle intraday. I did close all my puts yesterday, given they expired this week. So I think we'll probably keep coming down into the end of the week on GME here, and then we'll just see if next week we get a bounce. Maybe Tuesday, maybe Monday. This downtrend could speed up, it could slow down, but I think we're still downtrending. And I will probably be scaling into leap calls on GME, or January calls. Probably get another one today. So far I've got 7 of these, I think, and I'm just doing cover calls on them. I've got 7 January 20 calls on GME. I've got 7 20.5 short calls, kind of a calendar spread with weekly expiration. So I'll keep running these short calls on it until the trend reverses and we're headed up. But I want to keep averaging to this. These are now down 32%, these January calls. So I'll just slowly scaling into it. Banks are dropping. Thanks, Jason. And hamster. Well, we're cranking right now. Hamsters are fed, so screens haven't gone dim yet. Bunch of members in here, thanks to you, Ace. The casino. Yep, we're recovering, we're good. Oh, nothing permanent, it seems like, so that's definitely something to be thankful for. And on BBBY, I did close some cover calls yesterday. They were max profit. Haven't opened any new ones up. That engulfing candle, I just started closing everything, but then we kept dropping down. So now I'm just need a little price action. Need a green candle and like a little bit of green, and then we'll have that divergence, and then probably get some. Might even get some actually one strike cash grid puts for next week on BBY today. Oh yeah, and my futures. Actually done pretty well in futures, just like passively trading it. Which I know that. Not over trading. I have more spending money at the casino. Alright, market's about to open. We'll see. I've got these shorts, so my futures. I opened up these 3 last night. Actually got a good entry on one of them. It was a double top in the after hours. And short, it got another short, so got a nice little average on there. Might close those this morning. These are shorts. And then my net gas I've stacked up. Pretty good position here. So that swings pretty big. Alright, market's open. And we'll see what we got. SPY might have a little bit of a rally here to the upside. Just some gap filling, basically. I guess it's not much of a gap. Let's see. Yeah, no gap, but just trading back where it was, extended hours. Get some lines drawn in. Oh yeah, my Rivian play, I need to get out of that. So it's like extreme levels there. I don't think I'm gonna do any cover calls in BBY today. I've got the ones I'm still holding, which I'll put orders to close them. I'll show you guys. Get max profit on it. If it stays below that price, which I think it will. $1.50. My lowest cash secured or cover call on BBBY. I think they'll probably try and keep it below $1.50 for this OPEX, which is tomorrow. Morning, Donrow. I'll do more shares without leverage. Nice. Yeah, I've got. Let's see this. Oh, there we go. So yesterday's levels. Yesterday was pretty choppy. I trade a little bit. I'm not going to use stop because I'm not active enough on it. And for how the price action was, I just didn't have a clear setup. Did some trading though. Alright, SPY's coming down here a bit. Whoa, GME's flushing there. Wow, 2% down on GME. Guess that's a move with the SPY, but yeah, it broke yesterday's low. 15.5. Nice levels. I'm not jumping into any banks yet. We're kind of at the beginning of the crash. So even if the bank scare is over, they're going to come down with the overall market if there's capitulation. ECB said 50 basis points. Yeah, I was looking for the info on that. I didn't see it. It's a little, yeah, too early to buy dips on banks, unless you're just quick trading it, or to invest in dips. Yeah, I was actually wanting to get some First Republic short, but it's taking a hit so much, down 35% pre-market. Wow. I think that might be the next one to go. I wanted Wells Fargo because I don't like that bank and they're sketchy. If there was a big one to go, I feel like it might be them. Of course, there's Credit Suisse too, which I think is probably going to go also. That volume bounce. 134 million on Credit Suisse yesterday. Wowzer. Got bailed out. Oh, by the Swiss? I was seeing something about that. It wasn't like an American type bailout, I don't think. 54 billion? Is that a bailout for them? 54 billion? A loan, yeah. Yeah, a loan. If we could, if I don't want to bail out banks, but if we had a good contracts with the banks and it was strict terms and they actually enforced it, the government loaning money to banks would be a great play. As long as it was a bank that they thought would stick around at least with their money. Or the Fed, or however that would work, I guess. Big wick down there. BBY ripping 5%. Okay. SI also to the moon. Dude, look at that. Crazy. I might do some cover calls today. They might rip it up to $1.50, but them closing over $1.50 today or tomorrow would be unusual. Okay, I'm gonna pause this for a bit. Whew, I like the yes. We'll bring it back. Untradeable. Are there more reports? I heard Robinhood was doing that, but option halts. Jeez. Too cheap not to buy. BBY is up 6%. Broke pre-market's high. About to break yesterday's high? No, hit right at yesterday's high at $1. Kind of interesting. Yeah, I saw huge inflows on the new banks, or on the big banks. Oh, there's a break of yesterday's high. That is neat. And that is something, as this is like a penny stock algo trader. It trades those even numbers, so that's it's, you know, it's basically like Pong. So we broke that. Now we're at this one. Oh, just broke that. Okay. Up 9%. All right. That ain't bad. SPY's coming down. We're getting a little inverse beta. Fake out. Yeah, potentially, but fake out's good as long as we can hold some levels. Gonna go 100% today? Psh, could, but maybe not. But if we're green or even just not down 10%, that'd be a good change in direction. There's up 10%. There's up 11%. Okay, there's yesterday's pre-market level right there, 1150. Great for the Fed if they could loan to the banks. Personally, it's just a. Yeah, I mean, it'd have to be a good bank. I'm just saying for the Fed's balance sheet, we had some way to make money off of it. But they're all interconnected, so it probably wouldn't work anyways. Hey trader, let's go BBB Bobby. We've only made up some of yesterday's losses. We're way past yesterday's losses actually. We are back to pre-market or after hours of 2 days ago. Almost the after hours high, which is 1150. So if this can sit up here for a little bit, the calls are going to start to get some value, and I might sell some calls again. Got to sit up there for a little bit though. Theta in there. What's our other one doing? Just moving with the SPY. Not even as strong as a SPY. I don't know what that level I have drawn is. 160. All right, I'm gonna start looking at some covered calls. Let's see. Do them on there. Oh, I did. I opened up one strike cash secured puts. Nice. I didn't realize I did that. Maybe that was that yesterday? No, it was this morning? No, it must have been yesterday. I didn't realize it filled. I'm gonna do some cover calls. I could do 24 of them on here. I'm gonna start picking them up, putting out orders maybe. The cost basis on here. It says 250 on Thinkorswim. I don't know if I'm buying that. No, it probably is actually. That's from being assigned on those 2.5 strike puts. So I'm not gonna do 250 strike. I feel like next week we could rally though. Okay, SPY's kind of rejecting that little peak from yesterday. We'll see, it might blow through it though. Same as it ever was. Same as it ever was first. Same as it ever was. Sorry, what you said just reminded me of that song. Pretty heavy. That song? Old one. Oldie. Should have closed my ES shorts this morning. I know to do that. Closing it now. It's up like 350 on it. Oh, that's fine. I'll wait till the volatility chills out this morning. Ever see got halted to the downside? Halted up. Oh yeah, sorry guys, sorry for my absence. I had a family emergency. Yeah. And today I'm definitely not back fully, so yeah. Thanks for your likes though. We've got 17 of them. I appreciate it. SPY, yeah, broke that little level from yesterday. BBY chilling out, but it did break good levels so far. Broke yesterday's high, which is a good sign. Now it's just below yesterday's high. If we use this as support, that would be terrific. 1101. Again, like I'm saying, the RSI, we're just waiting for any sort of uptick. And look, even today, just with this move, this would be an RSI divergence if we close where we're at. If we close and this little RSI is flat or level to where it was yesterday, which is 35.47, it's not diverged yet. But if we close with this thing up at all, it's going to be good. Good for a trend reversal. Hey, short Fridays, thank you, I appreciate it. What is MACD for? It is moving average convergence divergence. So it takes moving averages and calculates when they converge and diverge. Basically, it's a formula. I don't know, have it by memory, but that's it more or less. So let's see, too late for cover. Well, see, it didn't hold up. A lot of premium to be put in there. I'm gonna check the options chain. Let's see. For next week, 1.5s. They probably haven't gone up. That's the thing with these like penny stocks now, that the options are, they also trade like crappy. Yeah. Oh, that's next week's. See how much these calls went up this morning. They went from 5 cents, or it's 7 cents now. I might try and get a fill at 7 cents, I guess. Not up a whole lot yet. Everything to clear. We're not crossing any borders on stream here, Ace. GME, the 15 range, finally, 1572. 1541 is that low. It could very well flush through there, and same with BBBY, set up an RSI divergence. So yeah. It's pretty weak compared to the SPY this morning. Okay. Yeah, there's all sorts of ways to trade the MACD. Some people just use the histogram. Sorry, guys. Yeah, SPY's coming down there. Looks like it's set a little engulfing candle up. Just kind of trying to be chill on trading futures on that right now. But the trend is definitely still down. I did see Wall Street Bets allowed GME now. I didn't look into it at all. Why? I mean, it was off before, just basically because of people's emotions, I think. So why did it get put back on? I don't understand. Let's sell. Looking to sell next week's calls, 1.5. Don't buy. Such little credit, man. Oh, I'm not going to sell any more calls. Figured that RSI divergence today. SPY is the number one meme stock. That is true. Lizard do 50 basis points. European Central Bank, I think, is talking about 50 basis points. Oh yeah, Rivian. Nice. So my spread on Rivian is now, I think it's in the money, so I'm actually better off waiting, which is kind of the thing with spreads. Let me see here. Yeah, I'm like right on the cusp. So basically, it's staying. If we stayed right here, right this price on Rivian, we didn't have to stay here, but basically by tomorrow at close, I'll make more money on this play if it's at this price tomorrow at close that it's at right now than I would right now if I closed it. So as opposed to just like a long put, if Rivian stays flat from here till tomorrow on a weekly, you'd lose money. But on this play, the short leg, I'm making money on it just trading sideways at this point. If it comes down even more, I won't really make any more. I would today if I closed it, but tomorrow I wouldn't. So that's a Rivian. Oh, I guess I did close one of those yesterday. Okay. Don't see anything. Any kind of bounce, but it's basically max profit. I might as well put an order out for it. 164 is max profit. Yeah, I'll just put an order out to close it at the ask. Buy's bouncing up here a little bit. Might be another choppy day. Rivian's actually green. BBBY's holding up. Look at that. Look at all you haters. All you haters.
Are you done with the fight?
Bior. Yep, when it is popping. That is interesting to see. They had a chicken choose if dip in earnings or not. I don't know. I'm still somewhat hopeful. Ace. Freaking guy. Thank you, Ace. I appreciate it, man. Do I even have audio on for that? Ace just gifted you guys subs. All you degenerates couldn't be here earlier, Ace. So they celebrate Christmas in Mexico sometime in March for some reason. And so he was just gifting out subs like crazy. And I don't know, maybe it's the new year there now or something, but yeah. If you haven't if you haven't enabled gifting of memberships, you can do it, and he will you will get one from the man Ace. So click on that box that says gifted 5 happy membership subs, or the box at top, and just accept it, or I don't know, receive gift, accept a gift, however it works. Thanks, Ace. Appreciate it, man. Um yeah. Okay, do that. I gotta do a GIF. I gotta find a very good GIF. This is what happened to me. This is why I've been absent.
The ego on you.
Thanks, Ace. Appreciate it, homie.
The ego on you.
There you go. Yeah, you guys are enabling it. Good. Well done. They're printing money or just bailing out banks? So how do you bail out a bank? Where does that money come from? Gotta come from somewhere. 150 by Friday and fireworks. Ooh, above 150 would be something on BBY by Friday. There's like 60,000 options, I think. 65,000 on the 1.5 strike. Next week. Next week there's there's still a ramp. Yeah, there's still tons of options. Crazy. LSPN had bad earnings, tank for platforms integrated with the latest chap. Interesting. LPSN. That gas is rallying up. That's nice. GME is not getting the push from the market here. Yeah. Okay. It's crazy to do to have to go to work. Good point. The gifting enabling stuff. Jason got it. Well done. Do it. Do it. Nice barnstormer. Yeah, all you lurkers can come in and accept your gifts from Ace. You get on chat though. Taking out some bait. I don't know a whole lot about it. I know a lot of people were hating on it if that was actual one of the holders of the warrants. I think they're hating on it because of prior history with Hudson. Potentially was them being malicious with the companies that were in and purposefully driving them down. I don't know if you can confirm any of that. So I'm kind of indifferent to it, I guess. There are still 2 other holders that we don't know about. So I'm kind of indifferent to it, I suppose. If you guys have more information on Hudson Bay though, yeah, feel free to share it, because I don't know a whole lot about what their prior history is or why it would be so bad. Thanks, Jace. Appreciate it, man. Yeah, I mean, the fact anybody wants to put money into this bankrupt company seems pretty bullish. Donero, you gifted 5. Donero, thanks, man. I didn't even see that. Just cruising through. Appreciate. I don't have a Donero gift. I gotta figure it out. I know that's not how you say it, but Donero sounds nice. It's like French. Thanks, Donero. I appreciate you. You've been here for a long time, man. Long time supporter. Awesome. There's probably a lot of gifted subs or memberships that you guys need to claim now. I can show you real quick. If you're lurking and just listening, come in and grab your free membership. Jump on our Discord. I'll give you the Happy Crew role. And
Let's get nuts.
Let's get nuts. Funny that donation came through. Thanks again, Jason. Appreciate it, buddy. Yeah, right here. So BY is holding up really good there, guys. If you on mobile, you probably have to view chat. So hide the description or something, then view chat, and then click on the gift, and click on like receive gift or accept, or click on these three dots and do it there. So you can enable gifting of memberships. SPY is moving up here. BBY is holding up well so far. It is still early, and all you guys are PTSD on this thing dumping. So it could happen. Hasn't yet, but looking good so far.
And you can see that here, 214.50 is the break even. This is just over 2 weeks away, so not a ton of time. Get about $3, $4 in cushion on this one, and the risk definition. So in the event that this one really does turn sour, we know that worst case scenario, it's that $200, which you get from the $2.5 wide spread net of that 50-cent credit.
Okay, so selling downside, high probability. You know, you're not swinging for the fences here, but how's the approach for five below, a stock that's got a lot better of a chart right now?
Yeah, a lot better chart, but a little bit weaker price action today. So actually very comparable, same strategy, but going out to that monthly expiration. So this one, because we're able to go out in time a little bit more, there is a little bit more trading activity in the options in five below. Jeffrey's described five below even after this as a steady ship that's navigating choppy seas. I thought that was an interesting take, and I think that allows for a neutral to bullish trade to actually take opportunity in this downwards reaction in earnings. Obviously, implied volatility on the whole has gone up as a result of what's going on in the financial sector. That's weighed on all markets. Even though you've seen NASDAQ names outperform, you've still seen volatility creep higher. But selling a put vertical going out to April here on this one, below the market once again. And this allows for a situation where, yeah, it's a bullish trade, but it's a bullish trade that just can't be wrong. It doesn't have to be right. And that's always what stuck out to me with this style of trading. The current share price is just below 195. Well, this one's break even is below 180 at 178.50. And so going out to April, the 180, 175 put vertical, $1.50 credit. That means we're collecting $150 here on $350 in risk. One of the loose guidelines that we've talked about for years on programs like Fast Market is kind of 30 cents on the dollar of risk. If you're in that area, it's somewhat of a comfortable risk reward for many, and so it's not a perfect, it's more of an art than a science, but this does fit right into that as, of course, $5 widespread, $1.50 credit on this one. But same strategy, a little bit different time to expiration, a little bit more risk because it's $5 wide as opposed to $2.5 wide, and we're looking at a discretionary name that's under a little bit of pressure today.
Okay, all right, nice. So kind of similar in nature approach here. Five below, Dollar General, though very different stocks in the last 6 months. Thanks, Alex Coffey. As we get back, we're going to head into hour two, talk some more trading as FedEx is on our list. A few other economic data points to look for, but earnings for this company will be our focus coming back.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you an active trader? Our active trading webcast series is designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
I'm Nicole Petalides coming to you live from the New York Stock Exchange every single market day from the opening to closing bells. Tune in to the TD Ameritrade Network.
When traders tell us how to make Thinkorswim even better, we listen. Like Jack. He wanted a streamlined version he could access anywhere, no download necessary. And Kim, she wanted to execute a preset trade strategy in seconds. So we gave them Thinkorswim Web. Because platforms this innovative aren't just made for traders, they're made by them. Thinkorswim by TD Ameritrade.
Trading has changed forever as a new generation of investors make their impact on markets.
It's more important than ever to navigate through the frenzy of meme stocks, IPOs, and the next wave of tech.
And that's where we come in, discussing strategies and example trades on trending names.
Take control of your financial future. Next Gen Investing, weekdays at 1 p.m. Eastern, only on the TD Ameritrade Network.
Welcome back to Morning Trade Live. We've got some strength building in the NASDAQ, tech leading strength once again as we see the market now pricing 25 bips.
Again, thanks, Donald. Thanks, Ace.
Week after the ECB went 50. Stock okay with it right now. Dollar still down on the day, and we've got bond yields firmly lower as well.
See the happy crew tag on DC.
Talking some earnings.
Yeah, but I think I gave it to you. DM me again if or DM me if you haven't.
Though we've been so focused on the macro economy and the bank situation.
I think there's probably still a lot of memberships to be given out if you guys haven't
sale now seemed to
enabled it.
The indication from a big drop in the stock
These legends.
price there. Chartmaster is going to take a look at Lennar.
I pronounce it like happy. Yeah, it's because we're smart. That makes us smart.
As well as Block. Right now, I've got Ben with me in the studio.
It's
Host
historic.
of futures here every morning before MTL. Interesting response here. Market kind of firming up.
Boost us up 20%.
That was our big event for
I don't
the
know about
morning.
witchcraft
It doesn't
either.
look like it's disrupting too much just yet.
It's not disrupting.
Yeah, our side of Verge would be great on
at this point, but
BY and
initially
GME. I
it
think
did
making them
sell
both.
off on the initial announcement of the 50 basis point rate hike from the ECB. There was some doubt as to whether they'd be able to go that aggressive with the developments in terms of Credit Suisse and some of the banking situation that we've seen.
Yeah, we're doing good. Thanks, Ruthless. Grateful and thankful and feeling blessed for sure.
That she made, but Oliver, I thought it was interesting because if you remember back in
myth.
the beginning of February, she talked about how they were going to go with a 50 basis point rate hike unless something extraordinary happened. And well, one could argue
Look
that
at you,
extraordinary
Donro, with
has
your
happened.
orange
Actually,
membership badge.
before the hit,
Oh,
the opposite
gee.
of extraordinary would be unexceptional or unremarkable.
BY still holding up that 5%.
Under that category,
BY kind of chopping around. I got to see where we're even.
Unextraordinary is basically what Christine Lagarde is saying that this was ultimately, and I think that's why the market's
Got some
rallying.
yellow shorts on the top.
She talked about how basically
On SPY.
she said inflation's projected to
Yeah, I
remain
mean, it could
high for longer.
could
right?
have a
That's
big
the
day down,
statement
but
we're
I don't know. It
echoing
might just
comments we've been hearing. She talked about the elevated
be
level of
consolidating basically
uncertainty
for
reinforces the importance of data
more or less
dependence,
3
the
days.
approach to governing
Big range of
currency
it, but
policy rate decisions. She talked about
you know,
monitoring
basically
current
all
market
this is
tensions
consolidating.
closely and stands ready to respond as
Oh,
necessary.
probably
to
before
preserve
more downs.
stability and financial
For the
stability.
momentum
But
showing at
I don't
least.
think it's so much sorry Credit Suisse for not being extraordinary or unexceptional or unremarkable, but more so that she said the ECB's
He's
policy
holding
toolkit is
down
fully equipped to provide liquidity
2%.
support to the euro area financial system if needed to preserve the smooth transmission of monetary policy. So basically, I think Christine Lagarde in a Mario Draghi-esque moment kind of saying, look, by all means necessary, we're going to do whatever we have to do to ensure financial stability here, drive down inflation. Keep in mind, they're still targeting 2%. It's 4
my earnings
times that
tonight.
right now. But
Got exposure to that.
Talk out of both sides there a little bit makes me wonder if it sets
Didn't
the
see a
stage for
divergence, so I
Powell
took
to try and get a little bit of
on SPY.
balance between rate hikes and balance sheet unwind.
Oh,
It's
okay, my
important to remember
Rivian
that,
short
we've been
closed.
having quantitative tightening, selling off the assets, but we've also been hiking rates. So it's possible he could still hike rates and then say maybe we're going to slow down some of our quantitative tightening a little bit. I mean, there are nuances here that are available,
Yeah, I don't
and there's
look at
only so
Rivian
many
anymore.
ways where if they wanted to provide liquidity to markets while hiking, they could. And
I guess
that
I
would
could
arguably
get
be
more
wrong.
shorts,
We
just
kind of
longer
already
term.
did by some definition. What we did
We'll
in
see
the
though.
past
Next week we
is
might we might have a big bear market rally
real question here and the
from OPEX being over and new money and the triple witching. So a lot of fresh capital can just,
next week at the Wednesday.
all the strikes are new and people just, I don't know, the market just moves much freer after it, I feel like.
The impact that all of this is having globally on central bankers' decision-making process.
Banks report no fear among customers.
Firm right now.
Your money is safe.
But look at where it is. In the middle of the range that we established last year, we were bottoming out around 94, rallied up to 114, smack dab in the middle here right now.
$1.
So this is a reflection of a market much like multiple markets. We could point to the S&Ps, the gold, yields for that matter, I would argue. That's just waiting for more information.
The ego
Obviously,
on you.
This was, well, again, not
there you go,
extraordinary, not the information that the market was looking
think
for.
Donero or Ace.
Whether you're talking about ECB,
membership.
the banking debacle that we've seen as of recent, look,
that's
again,
yucky.
very comfortable at 104.
Okay. Stocks caught a little bit of a bid there after making the low. That's important, as you mentioned. Stocks went down after they heard from the
gift,
ECB,
man.
came back up. So we're still kind of finding out.
Finger motions up 9%.
My take on this was that if the
BBBY is still holding
really
up
didn't
5%.
get hammered here,
Yan.
then it seems that
Jan
means
1 is up
Powell
15.
is going to go, because a week ago markets were expecting 50 from the ECB, 50 from the Fed.
Hey,
the dollar
Seymour.
was firming up because there was more of a surprise that the Fed was moving back towards
Jim.
something more hawkish. So the fact that ECB went 50, Fed funds futures now are pricing in 25. I
You
think
click on
that,
it.
And the dollar's
You just
firm.
click on
I
the
think that's
gift.
telling us that Powell
Might
is
be
gonna do
gone
something next
now.
week.
I don't
I
know.
would argue that that feeds into the divergence that we had
There's an
talked about
alternative to
in
Robinhood?
relation to
There's
the
many
upside
alternatives to
dollars we
Robinhood's.
have as far as what
Robinhood.
we'd seen in 10-year yields recently back to November levels prior to the pullback, the massive pullback
Where?
we saw
Oh,
last
no.
week. But 10-year yields recently.
Yeah,
back
there's
to
lots of
November
alternatives to
levels. The
Robinhood.
dollar was well below the 10-year levels. If it was
You're-
back
you're
in
paying,
10-year, it would have been up around
You're
110
paying a
and starting
big
with 105
commission on
at the time.
Robinhood.
So
One of the
I think
biggest, even though it's
On
commission
Fade,
free.
your point here today, if the dollar's going to stay
That's
firm,
right.
we might see Treasury's yields start to rise.
And the dollar potentially starting to play catch up a little
You're
bit.
paying for it with payment for order flow,
Very interesting.
bad
Okay. Buy
fills,
low,
internalization, whatever.
and,
Slippage, not even
10-year,
slippage, just
still down
yeah, they're
big.
fills.
All
They
the bond yields
skim.
down big, but if the
So
dollar stays
you're
firm,
paying a
we might
commission on
watch
it.
Bonds to kind of try and come back as our 10-year still sitting at 3.4.
You know, as I look at 10-year at 3.4, kind of again, middle of the range, and what we're seeing.
I have a
in terms of
Weeble link in the
price action
description.
today, I already
That's what
mentioned
this
the
is.
Russell by 1 1/3%.
I like it all right.
Russell
It has
still-
better
or
fills than
Nasdaq still
Robinhood, I
positive, so
think.
again, a market
A lot
that's having a
more,
hard time
I guess,
making
powerful
sense
for
of it.
brokerage.
Okay. Thanks, Ben. Appreciate it.
Thanks, Ace. There you go, Tenzin. You can click the gift.
To the ECB. So far, quite a bit of nuance.
You know, someone would
but
prove naked
no
options.
big drop in the dollar. Tried to, but it came right back. And
What kind of naked options? I mean, these margins for that.
All right, earnings in focus. Kevin Green taking a look at FedEx for us, our senior markets correspondent. Kevin, what do we expect here from this company?
Eyes coming down there.
Yeah, we might see a little bit of.
That was for you, Tenzin. You better. Oh, Seymour got it.
The market has an implied move of about 5.4%.
The tooling is solid. Yeah, they've got. It's pretty powerful, really, and the UI is quite nice. It's not as clean as Robinhood, but they have a lot more.
Will that continue? I think that's.
So I guess it's kind of to be expected. Won't be so clean and still give you
not only the domestic
a lot of power, I guess, a
economy, but
lot of
also the international
customization, flexibility
as well, because of the exposure of the product mix that FedEx actually does offer here. But let's go over the numbers. First and foremost, revenue estimates right now are coming in at $22.64 billion. The adjusted earnings per share estimate right now is sitting at $2.64, and it is trading at about a 12 forward multiple. So at the end of the day, Oliver, right now it's actually trading in between its range. But we will talk about an analyst note that came out here this morning that's going to be very interesting. But we want to be able to look at what FedEx Express is really going to do. That's going to be really the shipping by air and the one that has the most international exposure here. From an international standpoint, it's about 41% of total package revenue. And then if you're looking at FedEx Ground, our U.S. exposure to the broader market here, it's about 46% of total revenue. So that's how that product mix between domestic and international is really going to play out. Is the Asian markets going to show a boost in the economy as we have seen China reopen? I think that's going to be the question. That's going to be more of a guidance question here. But overall, they've been trying to cut costs significantly for the last year. Are they going to be able to make ground? Are we going to see that actually being reflected in the adjusted earnings per share? They've also increased and introduced new charges in order to offset fuel costs.
There you go, Tenzin. Yeah, jump on our Discord if you guys haven't, and send me a message if you become a member.
in.
DM me a
and
message.
offset
I'll
some of the
give you the
losses
happy
as
crew
the
roll in there
average daily
too.
shipping rates are starting to go down. So there's going to be a lot of questions when it comes to this earnings announcement. Once again, it's looking at about a 5.4%.
Yeah, there's some perks like on our Discord right now, but
okay.
yeah, I'm open to suggestions on what you guys would like.
And I think that's reassuring because
ideas.
for a while it kind of looked like that this
Proves you're cool.
industrial business is going to
Proves you're not lame.
be
You're part of the club.
a COVID beneficiary. COVID.
You got chosen. You were last to get picked. Okay.
With all the
you won't get a dodgeball to the face now.
By being around for so long. And that's kind of how it felt.
251.5 calls for tomorrow. 50-cent cost basis, Julian.
But
oh, it's awful.
Through like $220.
Sorry to hear that.
This is still a downtrending stock now for more than 2 years. So it does seem like that COVID boom is still pretty hard to recover from.
Yeah, it is at this point in time here, Oliver.
Yeah, SPY's just chopping around still.
BBY's
BBY's holding up well so far.
Name at this point in time, and Steve actually up
drinking a
FedEx
huge
as well, and kind of noting the same
chalice of electrolyte.
The stock to a buy from hold with a new price target of $222. That's up from $171, and they're kind of noting that same thing. COVID-19, obviously, we saw that rapid expansion, and then we saw the contraction last year. The
in order to close
stock,
this,
but they are bullish in the fact that they believe that the inventory gluts that we have seen in the marketplace for the last 6 months are pretty much at a bottom, and they do believe that
put an order to close. So I've got
discounted compared to
my exposure on
right now,
BBY on the TD account here. I've got 2,400 shares
rapid expansion
and
in the Asia markets.
41.5 cash
here.
grid
So
puts,
that's why they have that bullish
and 51
on the stock,
cash grid puts for tomorrow.
The
These will have to roll most likely. These I'll just close out, or I could even roll them, but just close them for now. Not now, but I'll put an order.
We'll have to have a bottom, and I'm not
in
sure
order to
that's
close
right
them for the
now or
minimum,
not,
which
but
probably won't get filled
the
till
time of
tomorrow.
opening does provide a lot of these stocks.
So yeah, it's at
especially
4
international
cents, 3
exposure
cents.
here,
I'll just put it for
the
1.
ability to
I'll do
potentially
good till
offset
canceled.
some of the slowdown that we might be able to
That's the
see
thing with
here,
so many
domestically
contracts. Look at
as well
this,
as potentially
and with
in the
contracts that are
European
so
markets as
cheap.
well. So I think
It's
that's
like I
where,
received.
the stock is seeing a little
I received
bit of a bounce,
$215
positioning
for those 50 cash
seeing
grid
some form of
puts.
an economic boom, especially in the Asian markets.
Now I could just let it expire worthless,
Bold
which
move
I
from
might
the
start doing with
analyst
some of these.
with earnings after the bell.
Because
It's like
to
50
close
bucks,
it, it costs
right?
$50.
They jacked
It's
up the
like
price target?
a huge eat on the profits.
Yeah, about $50.
Yeah.
All right, so they were a
I
little
might just let those expire.
as we're trading at 200, they were at like 170ish or something.
I don't know.
Somewhat of a catch up, but also pretty big sentiment to put out there.
You can dodge a wrench, you can dodge a ball.
Thanks, Kevin Green, for breaking it down for us. Appreciate it. Let's do some trading with Scott Bauer, CEO.
Terrible.
at Trading
You can
Academy.
sell them even if it's for a
Earnings
loss. You don't have to
season
hold
all
them
the
till
time,
tomorrow.
Scott, FedEx here is in a
I know
nice
you
little
want to have hope.
multi-month
and
run.
It could happen, but
Still has quite a bit of chart ahead to contend
like
with
a-
after a couple of years of sliding. What do you think?
Absolutely, and I was just having this discussion with some of my clients about
market makers giving you a chance on that 1.5 call of
that's a real gutsy call
15% actually.
But you know what? I like it. And
It's
when
much
I look
higher
at
than I
FedEx
thought.
here, even though there's a lot of
But your break even is
eco data,
much higher than $1.5,
headwinds,
I would
if you
assume.
will, the chart does look
So,
pretty good here.
yeah, you
And I
could
do
you
think,
could hold
as
it.
Kevin was
You're
just
probably down
talking
what, like
about,
90%
that
on it already.
potential in China
So
is going to make up for a lot of
maybe
what
maybe
they
not.
see
Not a reason to
some
close it.
disappointment here. So when I look at this here, I do think that we can get a nice run off earnings here. And so what I'm going to do is
Okay,
I'm
thanks,
going
Big Hugs.
out
Yeah,
to March
I'll add it.
31st
I'll add you.
expiration, so a couple weeks. And I'm
We
just
chat in
running
general
a
on Discord.
bullish call spread here. Now, when I sent this to you literally just a little while ago, stock was lower. But what I want to buy is the 207.5,
Nothing
215
fancy.
call spread. I'll pay somewhere $1.60.
You want to talk? You want to come
$1.70,
chat?
might be a tad
No, you can come
higher than
chat.
that right now. But I really like the upside here because there is some resistance in the stock right around 212, 215. And that
Small
kind of
bull flag on the 5
coincides
minutes.
with the
Certainly
expected
does,
move,
Jim.
what
Certainly
the,
does.
market is pricing
Down
in.
8%.
So
I mean,
like
I don't know how
that
much
as a
capital you have
target
into it
move.
or
This
your
is
financial
totally
situation at all, so I
risk
can't
defined.
tell you
FedEx doesn't go up.
even what I would do in your
okay.
case
My
because
investment is what I
don't know
pay
that
for
stuff.
this
But
spread. I can't lose more than that.
yeah, I
do
mean,
like
15% chance market makers
upside
giving it.
here, more so than what I see potential to the
For me, I
downside.
would if we had if it ripped even more today. I don't know.
start breaking
I'd
even
maybe
on
cut
this.
losses on it.
So if we get a pop, we've seen the stock can definitely move on earnings. We've had some pretty big swings.
Depends on how high we
last,
close today, really.
A couple reports. So
If we close at a higher
it does
level
get
like
a
here,
pretty
then yeah,
quick,
I'd be
pop
more
to get out of there,
optimistic that
take
it,
profit and
you could get closer to the money tomorrow.
because you are capped out. You kind of know when you're getting close.
SPY kind of come
Count
down a
out,
little bit
and, I
here.
may take some profits. I may also have the flexibility to maybe turn this into a butterfly spread if we
I
get
gotta
a
learn how to
rally and I
roll
can
these,
get a, decent
roll these
enough
futures.
credit. But
Okay. How would you do that, Scott?
I would be looking for, somewhere around a 70-80% return on this, which probably have to see the stock trading right around
Looking
the
for an exit.
209 level.
So you want to sell when it's exciting.
after
So
earnings here,
usually
I
the
think we
morning
can
the
win.
IV is higher,
Okay. Well, you got some time.
and you also
March
have
31st,
BBY is
expiry,
up
so end of month, got a
and
couple
had this
weeks
big
here.
pump. So
All right, bullish FedEx.
the
Thanks,
premiums
Scott
Thanks,
might be
Alan.
the best they'll
Yes,
be
sir.
all day.
Power. Okay.
right now.
Market's still mixed
Well,
right
really,
now.
10
We'll
minutes
take a
ago.
short break, come back
But,
and keep talking about how to
or
invest.
if you think it's going to
now
keep
that we
going,
have
then
a
sure you can hold
small
it.
financial crisis
You get like a
under
late
our
day rally or
belts.
something.
Doesn't look like it's going to stop central banks.
What's nice is if you're probably not going to get much theta decay if it stays flat up here today. I mean, if we start to come down, then it's going to start to lose value. But those contracts are already so cheap. I've noticed that they kind of they don't decay much just intraday if it stays flat.
Nothing too alarming there.
You already have it out. There you go. Already have it ordered. Then yeah.
That's helping the Nasdaq stay afloat.
Yep. Links to news and media tab. You got news? Oh, you're just telling me what to do. So media tab on Discord is really just for media, whether it's, links to news can go there or any sort of media. You guys put a lot of DD in there, which shouldn't go in there. That should all go in DD. Like any sort of write-ups or, because I'd like media to be, like DD, I guess, to be used more and media to be used more just strictly for media. Not necessarily like DD, I guess. Senate Banking Chair Brown says expects first oversight hearing on recent U.S. bank collapses by April. Okay, so ECB increases rates by 50 basis points. Okay, so that's what happened at 9:15, I guess. That's what you guys were saying. What's First Republic Bank's ticker? That FRC. Yeah, I wanted to get puts on this. Wait for another bounce, I suppose. Premiums are crazy now, though. I actually had orders for some Wells Fargo puts, which I might open back up today. Yeah, I didn't keep them open. Eyes kind of down here. And not trading it now. January. I was looking at March. June. November. Okay, let's see. Crazy how much these contracts have already moved, though. from 11 cents to 60 cents just in the last couple of weeks. Oh, but actually, if you look at it, kind of interesting. So, contract I'm looking at, here's the price on it. Even back here in October 2022, it was the same price as now. Huh. Kind of the same stock price, I guess. So not a whole lot of extra IV has been pumped in from here. A little bit because all this time you lost, but not crazy. I might grab a couple of those. Start scaling into it. It's intraday pricing on here. Yesterday these were 43 cents. Jeez, all right. Okay, I'm gonna wait. Put 38 cents. I'm gonna do 38 cents. 38. Okay, so here's what I'm doing. I just looked at the options chain for the options pricing, the chart you saw on this strike. This is January 2020 strike put on Wells Fargo. And then yesterday these were trading at 38 cents, so they've
The ego on you.
doubled. There you go, Joshua. You can thank Jason or Donero or Ace or Donero. Yeah, I think so. So this, yeah, these doubled. Crazy. Just in a short amount of time. So anyways, I'm gonna put an order for 38 cents. If we get a little bounce on Wells Fargo tomorrow or even next week, they should come back down here. So that's how I'm gonna do it. I'm gonna put it in for 38 cents where it was. I'm gonna start with a small order, start getting a few of them, then change that till good till canceled. So this order will stay until it basically gets filled. I think it has like 60 days. So I don't have to think about it. I'm just gonna start small with it. It's way out of the money, it's all the way out of the money. But if Wells Fargo starts to collapse or any sort of scary news on it, those should go up in value tremendously. And Wells Fargo's, it's sketchy. It's a huge bank, but sketchy. See. Yeah, that's the thing with the penny stock options, Julian, is like you have to do so many of them. I mostly just do shares, but I've been selling the options because the premium's so high. Yeah, even selling the options like costs a lot coming in and out of them. Whereas with trading shares, you just get cost. There's no commission on like per share. It's per trade. So yeah. Average at 230. That's not bad. 230 euros. How does that translate? Is that 230 on the stock price? DD and tinfoil DD channels. Well, that's where UG notes is for. I don't know. That's where DD is. Either DD could be tinfoil DD, could be real DD. And that's where, well, I guess I put some tin, I guess, in my happy DD, but I try and keep that separate for people that I guess are in the Discord to hear from me. So that's why I made my own. Felt pretty pompous doing it, but I'm like, I guess it would make sense. Oh yeah. Yeah, I think Nat Gas, it's building a nice inverted head and shoulders. Oh, the Jimmy was a countdown. BY's looking good. I mean, it's up. Well, it's up 5% now. We'll see if this level holds. This is pre-market highs. On this rally this morning, we did break yesterday's highs and made it up to post-market levels from the day before. So, yeah, it really matters how we close. Intraday doesn't matter a whole lot. Really open to close. Buy's kind of moving up a little bit here. Pepe's in Discord. I'm not sure. I don't think so. I'll splash out for Nitro. Sometimes it's good, sometimes it's not. SLGG up 8.5%.
The banks in particular, people generally have an association with this sector as being fairly explosive. They're worried that this is the type of shock. I mean, does it look like there is now a higher potential of sort of a shock event, or do you still see the situation economically as generally kind of being a slow burn?
So our base case is for a global U-shaped recession. I think
sometimes you lose,
in terms of the
other times you lose.
And the potential for that to create defaults or increased defaults into the end.
Yeah, thanks for your likes, guys. Appreciate it.
A real possibility.
30 likes, well done.
It isn't the base case, but it certainly could happen. We could have a few shock events that do cause significant volatility in overall markets. But if we're looking towards a recession, really see a steady unwind of earnings over the next 12 to 18 months. So, the stubbornly high inflation and the continued issues that we have on supply chains are really increasing expenses, along with the fact that interest rates themselves are increasing interest expense for companies. That is potentially weakening earnings going forward. And we don't think that this is going to be a rapid deceleration in earnings and earnings expectations, but it will be something that will play out over the next 12 to 18 months as the markets reset themselves at a lower base and we get back to a more normalized economy and have these issues work through the system rather than have them all occur at once like we had back in 2008, 2009, the global financial crisis. We think we're very much in a different environment today. That is, again, not our base case, but certainly there's always a possibility that we do get shocks through the next 12 to 18 months.
All right. Great convo, Nick. Thanks for the update.
Yeah, let's see. I've got no covered calls on my BBY on my
Nick Milliken,
on the big shares. So that's good.
CAS Investments.
I'm fine with that.
Prolonged U-shaped
We
recession
get a pump later in the day, maybe.
Come back. Let's talk some housing with Lenore
Not sure.
after earnings.
Just let it ride though.
Home data's been pretty
Again, if we get a close at this level,
stocks are a little changed
we'll have that divergence there.
We'll also take
so
a look
that's
at Foot Locker
that's good. That to me is better than any of these engulfing candles that we've seen. As far as confirmation. Boss riffing. Is Rad ripping? Oh. Invested part of my education. No, you're getting the education here, man. This is a real education. Yeah, if you look on UNG, you can see this nice little inverted head and shoulders that I've been scaling into heavy, and it literally hit nice little supports there and bounced. So yeah, the thing is that the only concern for me is the recession and demand destruction, how much that's going to weigh on natural gas. But nat gas is already so cheap that I feel like it's almost only up from here. I guess that's what people were saying at oil when it was getting close to zero, and then it went negative. So always that. Brad, 1 minute chart? You're bullish on the 1 minute chart? Yeah, I had a spike of volume. Yes. Yes. Super League Gaming up 10%. GME popping up here some with the SPY. That gas kind of coming down. I might get more natural gas futures. We retest that kind of shoulder. I'll put an order. Start doing some adding to my GME leaps here. This is how I do the poor man's covered call or the calendar spread. Buy pretty far outdated, leaps. And usually near the money. Could even go in the money a little bit. I bought these kind of at the money at the time. So they're down a bit. And then just sell cover calls, sell calls against those long calls. Because this gives you the right to own those shares at that price, right? So you can actually sell calls as if you own the shares because you have the right to the shares. And then selling them gives you the obligation to sell those shares. So this right allows you to have this obligation. So you can make money while you wait for your option to work. 108 is still holding. Nice. I'll put an order on these. Let me know if you guys like me showing you kind of these trades. I feel like I would like that, and I do like that. So that's kind of why I do it. There's my short call on the calendar. It expires. Yeah, it expires tomorrow. I'm just going to put a bid out there for the minimum. In case there's news after hours or something, I always like to close. I always like to close my short options. Not just let them expire worthless. BY in this case on the cash secured puts, those I might leave just because there's so many contracts and it's not much premium. And it's a short put, not a covered call. But yeah, either way. I'll do that. And then instead of day, I'll do good till cancel because this might not fill today. I'll have that. And I also want to average into some more leaps. GME. On here, let's see. Don't use this platform. All right, here we go. I've got these. Yeah, I just put an order at 300 and see if it fills. Just start with one more. Nice slow scale, and I think GME's potentially getting to a low. If it flushes through that 1540 support and doesn't give us a divergence, yikes. But if it does, then this will be a nice scale in. SPY still just chopping around. GME back up a little bit. Above VWAP. Let's zoom out here a little bit on it. Yeah, so 1553. It got real close to that 1542. So even if it hits here and doesn't make a new low, which would give a divergence, it starts to show support and a bounce, then that's a nice double bottom at least. Into what could be a very bullish earnings. But the market sucks right now, so any rally won't be sustained, I don't think, for a long term. Yeah, BBY kind of broke through that support at $1.07.5. All right, yeah, $1.07.5. It's probably going to come back down for this gap, looks like. I made HMO after hours to prepare for the last couple of days. Well, yeah, you guys, was that you mentioned it? Some of you guys are mentioning after hours were weird on this thing. Yeah, is this what is this? What's this say? Biobanking? Cell-based therapies. Okay. Biomanufacturing. GME getting a little pump up here with the market. Ivy's still really low on here, I believe. Wait, what? 121. What the heck? Is that because of earnings? Dude, what happened? What? This was like 80, 70%. Why is it all over 100% now? The world. Is the Ivy just pumping on everything because it's coming into earnings? But all these strikes, all these dates. I guess it's probably, calls are probably still cheaper because the price is lower. But that is strange. Crazy. Juan, you just bought 12,000 more BBY. Prove it. Yeah, this isn't a great spot to sell GME. BY getting a little volatile there. If GME breaks through the low and then holds down there, that would make sense to sell because it's going to probably keep going. If it breaks and has kind of a bounce and we get that divergence, then that's a good time to buy. BBY had a big spike of volume. Wick down.
Will have challenges with Adidas, and it has an ongoing share loss to Nike, which we know exited a lot of its retailers because it did more direct to consumer, right? And then it says that it's just going to be an overall challenging consumer environment for athletic apparel in general.
Okay. Pretty good report and pretty good response.
Yeah.
3%. I mean, Foot Locker's beating even the tech hideouts today. Looks like kind of steady higher highs and higher lows. Rick, anything bad to say about Foot Locker? I mean, there were a couple years ago, but I don't know. I guess when you go 9 months of a steady climb, it's starting to look like it's in a good trend.
It's been pretty encouraging for the bulls here. We did make those new yearly highs just recently. The price target of 50 would still be about 18% to the upside, so it would be a bit of a climb still for this name here. However, it actually looks kind of like a similar chart to Lennar. We were recently in yearly highs but backed off a little bit. In terms of our more recent price action, we were in an upward channel as denoted by those two pale yellow lines. But more recently, we broke out to the downside, and it's looking like price is forming a broadening triangle, also called a megaphone type pattern here. One of the more difficult trading patterns that you could try to contend with here because the targets are continually moving away from each other. The two trend lines are diverging farther apart. So a bit more fuzzy, not as easy of a price action to maneuver here. Now, we're sandwiched in between our yellow 21-day EMA to the upside near about 43 and our orange 63-day EMA to the downside near about 41. So those are the two short-term levels to be watching here. So the moving averages themselves, mostly flat. Our shortest term moving average, our 21-day EMA, is trending a bit downward here, but overall it's suggesting that the former uptrend has been broken and the environment's a little bit more trendless now. However, one thing that stood out to me that as important was that we did stop our decline right around the 40 level, which is that green dashed line. You can see that price peaked out there, I believe about 4 times or so in recent months. So that was an important spot to hold as well. It's significant that we didn't have a big breakout below that level here. We also did slip below our volume node, so look for price to move back up
that's 17.
around the 40,
that's fine.
43, 44
That
area.
makes the market. There's a buyer, there's a seller.
Conviction on the part of traders here.
Or there's not. There's a market
as I
maker
said,
that's
resistance at the
doing
21 EMA,
or
support
brokerage
at the
that's internalizing.
63 EMA.
Okay. So pretty close to basically where we're at right now for
Foot Locker, like Christopher Walken would.
Just did
I gotta hear it. Dang it!
Kind of
I didn't hear it. Foot
some
Locker.
support in a way. Stock kind of firming up.
This guy with the glasses, I know he does. He talks kind of funny. Not funny, it's just he's so chill, like Christopher Walken. I mean, he's high half the time, so I guess that makes sense. Spy ripping. There's some news there. Holy rip balls.
Still, we've got that intermediate term uptrend. That's
GME getting it also.
All right, last one here.
But
it's all pretty
GME's now green.
today, Renita. Block still has support from Kathy Wood. She bought some more stock. Shares up about 0.75%.
Yep, it's because of an upgrade over at Mizuho, which took this stock to a buy.
He's in the stock market to make money.
Neutral,
what an
boosting the price
idiot.
target to $93 a share from $80 a share. That suggests about a 23% move.
Could have been DRS, could have been split. Who knows? I don't think it's either one of those things, honestly.
Is making a pivot to profit.
If anything, I think it was
nice,
more
right?
a split, but
everyone wants to hear that.
Yeah,
and
you're fighting the most powerful entities in the world
to rein in costs
because of their
and become more
they're
efficient.
powerful because of their
And
money.
So the firm's cost
It's like,
analysis show up to about 30% potential.
if you win,
upside
they let you
to
win.
Block's
Or if you win, you
EBITDA
actually didn't win,
guidance.
but they made you feel like
And
you
the
win.
analyst also says that Block remains uniquely positioned to be able to achieve what it calls the holy grail of operational or creating a comprehensive network, a one-stop shop, saying that by connecting point of sale, Cash App, and then the buy now, pay later ecosystems.
Get a load of this guy.
A one-stop shop.
Get a load of this guy.
This entire network.
All right, well, they certainly are trying to lead the charge on that. I saw some commentaries from BlackRock's Larry Fink that he thinks we're behind on the payment system compared to the world, which we definitely were a while back. It feels like now we've got everything.
Wicking down on Spy. I don't even check their news there.
Like that, largely thanks to what Block and others have done with their POSI systems everywhere. So on the year, Block though has kind of been a little bit of a sluggish stock, Rick. There's been a lot of resurgent winners in the
Nat Gas Storage came out.
Block hasn't really been one. It's been kind of sideways.
58 billion.
Like,
Estimates was 61.
Last year, right?
That should be bullish, right? Less than estimates.
And there's also a bit of tension
that's
here
really
because
close,
on
I guess.
one hand, we have an upward channel that began near our
That's
yearly
probably what that
lows that we saw. And by the way, we are up about 45% since that point, so it hasn't been all terrible. But on the other hand, we have a shorter downward channel, and they're both still kind of in
Should be
play
bullish
here.
for Nat Gas.
So you can see
slightly.
that we are.
Elon says
near an
SVB
important
suffered
point on
bank
the
run that
chart
led
as
to
well,
liquidity
that red
problem.
dashed line
What?
Near 75. That was an area where price
Liquidity problem happened before the bank run.
It's also right
That's
around
why they
the
were
point
having a
of our
bank run.
yellow 21-day and orange 63-day exponential
High inflation is the
moving
number one
averages here.
economic problem.
We're in a
Biden's
bit of a
top priority. That's what
congestion
Yellen
area.
says.
It'll be really
I
important,
disagree.
I think, to see if we can cross above and hold above that 75 area, or if we
They
kind of
wouldn't be
falter and slip below it.
giving
Because that could
inflation
be,
stimulus
one of these
packages.
areas where we see increased trading activity. There's a volume node. There's these moving averages coming together all around this level. There's a lot of reasons that this area could be important to hold. So looking also at what we might expect
BBBY
to
falling.
find some potential support.
BBBY really doesn't follow the SPY. That's one beautiful thing about it that I love. I've already got my GME for that.
Right around the 64, 65 level or so. If we do slip below that, look to our volume profile point of control, that thick red line near
It's
about
totally
the 63
isolated.
level. That could be another point of support.
GME on the other hand, there you go. There's your investment if you want
could be
SPY.
at the upper line of that short-term channel near about the 79 mark.
That's true.
So
Inflation is
those
also
two
not concerning.
areas
It's not a
would be
problem.
worth watching, I would say,
But then now it
especially
should be the
if
number one
momentum
concern.
continues to
Now that banks are
decline here. We're
failing
kind of in the middle, but we
around
are
us, we
in
should worry about
bearish territory
inflation.
for that.
All right, no more.
All right, so Block.
People taking profit on BBBY? I don't think so, Tenzin. I don't believe this is people taking profit.
In a quarter or so. All right, looking better. Looking better.
This was most likely a liquidity pump, satisfying some sort of obligations they had, most likely, and
similar to the chart we were
now they're trying to suppress the price.
A moment ago, where you've got a little
Back
bit
again.
of a downtrend within and uptrend off the lows. We'll see which one wins out. Nice perspective on the charts. Thanks, Rick. Thanks for the rundown on the notes, Renita. All right, when we come back, market meetup time after an update in the energy patch. Jay Horn's got the latest on Oxy. It seems like Warren Buffett saw yesterday's sell-off as an opportunity.
Buffett's buying into Oxy, huh? I don't know, Buffett. It's a bit premature. Yeah, I think oil and energy I keep coming down. But nat gas, I think it's at too low. I think it'll go up. My going back up to that level is ripping it. Yeah, oil's stayed pretty bearish here. Buy ripping now. Filling that gap. Whoa. World. This is why I closed something like this. I thought maybe could happen. That's why I started to close stuff yesterday. My bearish stuff. GME's up 2.3% now. Tesla, yeah. So my short on Tesla I closed. Rivian, I'm glad I got out of that also. Tomorrow being a triple witch, we might see volatility from that even. GME just following the SPY though, still subdued volume. But it's possible that was our low today, 1553. It is possible. Take Kenji 101. No wallets. Turka again? Really? Wow. Fully filled in pretty much all those gaps. Yeah. Pretty nice. This is MOS probably. Probably SS. Got a nice big engulfing candle there on Turka. It closes any bit above here. Nice. Moon missioning. It's got room to the upside. We have their gap. It's filling up here. Kind of late on a long, but see what happens up here. Buys now up almost 0.2%. GME is up 2%. How long can they suppress the price? Well, yeah, let me tell you about a stock called GME. Now, GME, they could suppress it for so many months, and they couldn't. You'd see big rips. Big rips. Big rips. However, each time they suppressed it, they were bringing the lows. Not each time. We did have a floor that we were setting. For here, we had a floor. And it would have big rips, so basically sideways more or less. Not sideways, but it wasn't going up or down. It was kind of just flat, big consolidation more or less. And then they broke that floor, that low, which was like, oh no. Long suppression, then big rips again. These rips, I think, were even bigger because they were coming from a lower low. Then we continue to respect the support, big rips, suppress, big rips. Then everything got weird in here during the split. Now I don't know if this is suppression or just it's fixed and it's just a normal stock now. But we should know or have some good insight this month on GME if it is or not. BBBY, it's really in a similar situation somewhat in the fact that it's been suppressed in a different way. It hasn't had as much, I don't think, pressure, so it hasn't needed to be suppressed as much. But even without the pressure that it's had on it, like GME has had, it still has had huge rips due to them having to fulfill obligations at certain times. So if you're looking purely on just dates and charts, I think I had it for sometime in April or even May where we'd be due for another one of these moves. I think it could happen sooner, but I don't know. And lots of you were like, oh, I'm fine to wait for April or May. That's when we were up at like $2. Nothing's changed. April May still is coming. We're still going right on the chart. Just come down. So if you want a 300, 500% move, it could still be coming. Just have to hold through some lows. Now it's holding yesterday's little top there. Still up 2.9%. SPY is melting faces off. Company's worth more than $3. Here. Super complex iron one-legged short condor with a curved beak. Wow, look at SPY. Woo. Yeah, I mean, breaking this would have been kind of a level. Now it's filled that gap. I don't like to chase though, so wait till it starts to reject and maybe have on a pullback, maybe even grab a long or take this short. But I don't think we're maybe finding a temporary bottom here. Big test of it will be once it gets up to these levels, 391, 393. If we break that, we have this range to the downside. I don't know if the split. I mean, yeah, I mean the split maybe had something to do with it. I think Ryan Cohen was actually trying to. I think he was trying to force shorts to close by having that split. I do. I don't think there would have been any other reason why he would have a split via dividend. Maybe there's. I remember reading there's some other purposes to have it, like for accounting or something, but I don't know. I'm still under the impression that he was doing it to expose the naked shorting and force them to close potentially. It didn't go that way because brokerages just did a normal split and just created synthetic shares right in front of our eyes. So if they fulfilled obligations with that, I'm not sure. But if the stock is now fixed, me saying that would be, the conclusion would be that over this period of time, they were able to unwind and unravel through all these liquidity rips. Somehow they were able to unwind their position to a sustainable level to where now it's not a problem. That would have to be my only conclusion to why it was doing such predictable cycle patterns. Very, very predictable, but in the same sense, so abnormal to any other stock for 2 years, and then now all of a sudden isn't. So yeah, wow, SPY, look at that thing go. Woo. Getting a bear market rally or something. Is there any news catalysts on some of this stuff? I mean, ECB raises 50 basis points. Let's rally. Yeah, I don't know. Profit taking probably on the shorts and bulls taking advantage. No news that I'm seeing. The jobs report I think was maybe a little bullish, but that was much earlier. And the ECB news was quite bearish. So I think GME's slowing down. There's the SPY slowing down. I don't have any levels drawn, but looks like this could be one. That was that rip end of day. One up here.
Perspective, you know, the broader range is 3,800, which has proven to be formidable support. And then on the upside, I think the medium-term inflection point continues to be that 50-day moving average, or the purple line, right at 4,000. I do want to point out a change in character. Since not only the FOMC,
yeah, BBY doesn't move with SPY more or less.
Last Friday,
sometimes it looks like it has.
SVB issue kicked off.
The other day when it had this big rally, actually, this morning on BBBY, it looked like it was moving with SPY, so I am kind of keeping an eye out for when Bed Bath looks like it's moving with the SPY, because then we might have another rip like this.
There we go.
And then I think yesterday or the day before, it looked like it was starting to,
guys, Mr. McCurr and Mr. Theodore.
but maybe it was just coincidence.
Stocks now are green across the board. Every index is higher. We also have reports that two of the big banks are looking to support First Republic. JP Morgan and Morgan Stanley in talks to bolster First Republic. Here's your breaking news item on the banks for this morning. Stocks are up.
I like when SPY saves me last second. Yeah, it seems to happen right at support. It's like, it is strange how that works. Or it dumps it right when we're at the critical point of breaking out 35 or 30 or whatever. That's right when SPY just... Very, very strange. I think this would be a bullish signal though. If we get an inside bar here, this daily candle, especially with this wick down here, if GME closes around these levels. So that would make me think we might not get a RSI divergence, but potentially just a double bottom here. Or what these contracts have gone up. Let's see. So yeah, those leaps haven't really moved in price, those January calls, since from this rip. So that's what's nice about longer dated. Safer options. That gas moving up a bit. Do it, do it, do it, do it. Save those cash secured puts. I think I'm gonna get some more dollar strike cash secured puts for next week on BBBY. I don't know. So now Bed Bath is getting that same sort of inside bar potentially. But as long as this RSI stays higher, that's a divergence. That's what we want. No ace, it's what I said. Yeah, no, people did say they're exiting or whatever. BY is bouncing here pretty good, that's nice. To me, I didn't have any reason... Ouch. I didn't have any reason to believe that until it looked like it's been fixed. You could short on the SPY even right here. He's engulfing. Let's see how this one closes. We've got 3.5 minutes. Bath getting a little poppy there. Yep, yep, yep. I like it. At $1.70 or not 70, $1.79. 1070. but bouncing on that level from yesterday. That engulfs. I don't know if I want to take the short. Seems like the momentum's to the upside. I'd even wait for a dip somewhere to go long. Morning, Mohammed. I don't know exactly the share price. We're at this level we have it though, so it could come down a little bit from here. Basically, we're 35.47 was the RSI yesterday. So today we're looking for any RSI over 35.47. The higher over it, kind of the better, I guess, but not necessarily. I mean, this is a pretty nice little move. I would like to see the next day, though, too, also hold a higher level. Because sometimes you'll get a little RSI divergence from a little bounce, and then the next day it just comes down lower, and then you get just a little peak on there on the upside, too. So... but basically, any little up action we get at these levels below here is going to create an RSI divergence, so... yeah. Guten Morgen, Muhammad. It seemed appropriate for your name. Kind of want that short though up there.
Not necessarily a one-story-fits-all type of situation, because we are still seeing First Republic shares are halted. It's lost 2/3 of its value.
Did you forget to take a shower?
Week and a half. Western Alliance also halted today on reports that First Republic could be exploring a potential sale.
Is halted?
Different movement today in some of the U.S.
First Republic?
banks.
Was it FSR? No.
All right, thank you for all of that. A good look at those names, so important.
FRC. It is halted.
This is such an indicator of our
Wow.
economy. But your thoughts? We have earnings later today. The analysts over at Stifel, an upgrade, right? Tell us what they were watching.
So earnings are not completely
There's engulfing,
behind us,
but
which I guess is
with this
good
amount
news
of
we look
pump,
forward to today
I
after the
suppose it
close
could
when
just come
FedEx
back
is
down.
expected to report its third quarter, and we saw a really positive note from Stifel today saying it's actually time to buy FedEx, as this analyst thinks there's too much opportunity to ignore. He did raise his rating to buy from hold, where he's been at for the last 6 months, while also raising his price target to $222 a share.
It's hard to know. I mean, I've taken big loss on BBY, so it's hard to average all those in.
Right now is an incredible buying opportunity.
You know what I mean? Because I've closed out and I've bought back in. But right now, the shares that I've bought and I've been averaging into and I haven't sold. So that happened here on this engulfing candle. So I've been accumulating since about $1.50. And I've averaged down a little bit in here. But I'm also doing cash grid puts. So, let's see. Yeah, so like $1.50 or so that I have these shares. So it's a little less than that, but and then there's wash sales, so wash sales sells me $2.40. I don't really know. My account goes up, I'm just gonna sell it. Up higher than it was before.
Nice to see you, markets correspondent here on the TD Ameritrade Network. Let's get some insights.
So there's an engulfing candle. I should take it. I should take this short.
Bring in my good friend, longtime, lifelong trader, Peter Tuchman, senior equity floor broker at Trade Moss.
Yeah, I took this short.
Hey, Peter
Finally,
Tuchman,
we're together.
You are here. He's also the most photographed trader on Wall Street, and he's also referred to as Einstein.
Oh, is a crazy guy there? There he is.
That being said, you've had a lifetime on this floor. What do you make of the recent bank weakness that we've been seeing? There was
Good morning to you too. Yum, waffles.
Is it contained?
I don't think it's contained, and I think there's way more that we don't know than we do know right now.
That guy's like
and I
4
think
feet
that's
tall.
where the concern lies.
Right.
I think that it's all about confidence. I've been talking about this for the last couple of days as we've seen this happen, right? What keeps a bank solid and what keeps people from going to the bank and running and taking their money out is confidence, right? And I think we saw a lot of confidence start breaking down with the FTX story. Right? We started
it's supposed to be German, but maybe
people who put people on pedestals. We think they're great in this industry, whether it's crypto or just investment and trading, and then suddenly they fall. We don't know what's going on behind the curtain. And so that starts breaking down the whole level of confidence of people in this industry.
He's
And
right, you
once
know.
again, everybody always thinks, okay, I know if I put money in the bank, I'll always be able to get it out. Right? We can go back to that It's a Wonderful Life story with George Bailey.
Yeah.
Obviously,
George Bailey.
our biggest fear is that this money we
Homie.
work so hard for, that we put in the bank, people don't even know what the bank does with our money. Right? Banks exist for a reason. There's a business model
Sure,
behind
they're
it.
busy
So
trading
while
it
they're holding
themselves and
demand
lending it
deposits,
out,
they're
right.
trading themselves. So do I actually know what they're investing in or what their risk profile is?
Right.
Apparently, we don't.
Right.
And if you even, I was listening to my friend Kevin O'Leary over the weekend because everyone's trying to now put blame on. Who should have known? Where is the blame on all this
Right.
thing? Because it's a big deal. For a bank that, one of the largest banks, and to start seeing bank failures in America is truly one of the scariest things. And I'm sure the retail investor is sitting at home going, oh my God, they may even want to start pulling their money out of their bank. But I learned something interesting this morning, that one of the things, the contagion that we're seeing with FRC, First Republic, which is a bank that people really love. I mean, if you do a little of your homework and you see that people actually
gas
it's a
moving
bank
up.
that's quite favored,
GME's holding up
turns
here,
out
so
where
is a
does the
SPY.
contagion lie
Took
with
a
them is
short.
that the fact is that a lot of
Maybe it was
their
foolish. We'll see it. It's
depositors
engulfing.
are
It's
large depositors.
hold
Okay,
down
one of the
nicely.
things, JP Morgan
Might
is
take
a
some
huge
time
bank,
before we actually
obviously,
reverse.
but a majority of their investors are smaller, not investors. A lot of their depositors are
month.
small level people, hardworking people who are not necessarily going to, if they yanked their money out, would it actually have an impact on the liquidity in the bank? It turns out with FRC, a lot of their depositors are big.
Ah,
They
SPY's
would
ripping.
wouldn't
Alright.
fall under the realm
Stupid
of the
trade.
FDIC 250,000 pullout. That means that if they were to fail, and if people were to start pulling money out, it would impact the liquidity. That's what we saw happen in
Ooh.
Signature.
Should've
That's
gone
what we
long.
saw
I'm out.
happen in SVB.
Oh man, look at that thing
Okay,
explode.
so the takeaway here is that we still have uncertainty.
Correct.
Wow,
Markets
Matt
don't
Gas
like
ripped there too.
uncertainty.
Correct.
But
Is
when
this-
there
is
is
there no news
uncertainty,
going on?
there also lies opportunity.
Yes, ma'am.
Right? So, and you and I were
Riches.
discussing that. And this is something you focus on. You like to focus on trader education and give your lifelong lessons. What do you tell folks now?
Okay.
It would've been nice long, though, consolidation
I
for
work with
another
my partner
breakout.
David Green at Wall Street Global Trading
Wow.
Academy. It's an academy teaching younger traders or new first-time
quick-
investors about
quick little
financial
loss.
literacy,
Kick
technical
off the morning.
analysis, risk management for the young retail trader.
Right.
And what we're finding is that a lot of people don't know what really goes on here. They don't know. They didn't get the playbook on how to navigate this kind of a
Art-
market.
Art
Look, I
Beam?
always use the analogy when your favorite jacket goes on sale. at
Never heard of
Macy's,
her.
do you run and hide, or do you go in there and try and buy something at a discount? I get it that people are scared. They're
Yeah,
very
this is
scared.
shorts
From
closing,
the
I'd
retail
say, and
trader on
bulls
down. And
taking advantage,
so what I
buying the
tell
dip.
people is that there is opportunity here in this marketplace. That the world is not coming to an end. This is not the
So
end
what
of the
should they
banking
do?
industry. Well, I think they need to go out there and find whether they come to me and David Green at Wall Street Global Trading Academy, or they go and do a little shout out to myself. We always talk about TD Ameritrade, or they go out and educate
those rips
themselves
and
about
spies
the
would scare me.
opportunities within this market.
Guess I could've held that
There is
short,
a way
'cause
to learn how to navigate it
it probably
successfully.
made sense.
So
but-
what's the key? Is it diversification, looking for dividends, having some risk,
I'm not gonna
some
tell you.
safety,
Okay,
some
so
value,
there are two
some
lanes.
growth?
There are
I
two
mean, what are you
lanes. There
telling
is
them?
an investor who should be looking at companies that still make money within this environment for the long term and diversify clearly. But there is a whole nother community that you guys called out during March 2020. 45 million new retail traders came in to the world around the time of COVID with
Right, it's
isolation,
true.
staying at home. And that's our audience. That's our audience at Wall Street Global
lot of
Trading
new
Academy.
traders.
Okay, so it's a matter of trading. Day trading is an opportunity, right? Using risk management. What does that mean? That if I'm a day trader and I'm buying or shorting a stock, I need to understand that I can, if I'm doing it for a right reason, and I use what the stock market gives us called the stop order, I'm able to identify the downside risk that I'm going to take and look and try and benefit from the upside, right? So this is a wonderful market for small retail traders to trade the market and make a little money. As long as they know the rules.
Volatility.
Yeah, and pay attention to the rules and how to do it. And don't get greedy, right? Because
Don't get
we always
greedy.
say bulls make money, bears make money. Pigs
And
get
pigs get
slaughtered.
slaughtered.
Right? Thank you for helping me. I almost I hadn't said it in so long, but I got it. That being said, last but not least, when we focus on the Fed,
Yeah, it's got all
just
the
had
pictures,
ECB,
yep.
They were full speed ahead. I mean, I know
Ancient
Credit
one.
Suisse is really not under the
It's not that old, man. That's
European,
what
central banks
trading on Wall Street will do to you. He's like
domain,
24.
But they went forward 25 with their 50 basis point hike. There was a lot of talk that the Fed was going from 50 to 25 to 0 back to, I mean, now we're back to 25. You think that's what the Fed does? What should the Fed do?
I appreciate the question because I think it's just crazy in my opinion. Look, everyone, there are people who are fans of the Fed and Jay Powell. There are people who blame him for everything going on. We have a situation, it's called inflation. I'm a firm believer it's a function of what happened during coming out of COVID. At the end of the day, if you hold a strategy and you're confident with your strategy, even if it's a data decision-based strategy, at the end of the day, what does a banking crisis really have to do with our strategy affecting inflation? Right? If we're holding our ground, whether it's 50 basis points or 25, for a reason to pull money out of the system to curb inflation, the banking industry and the banking crisis that we're in at the moment is, while there's contagion.
Did bring down rates, though. The 2-year Treasury came down at the fastest pace, over 100 basis points since Black Monday.
Look, why would we then look? If
That's crazy.
there are already eyes on us to know whether we are confident in our strategy, right now, Goldman Sachs said the Fed should do nothing in the next meeting. But why? I don't understand why we're letting that commingle with each other. At the end of the day, we have a situation with inflation. Let's deal with it and hold ground.
So
right?
25. You're back.
Well,
in the
whether
25
it's 25 or 50.
I mean, are you rip the Band-Aid off?
I'm a believer in rip the Band-Aid off. Yeah, absolutely. But right now, the fact that we are trying to,
I like you, Nat Gas. I like you going up.
We have a banking crisis. We need to deal with that. We need to open the hood and see what's going on there, whether it's regulation-wise or looking at the risk that they're under, and then we have an inflation problem. And let's deal with that.
There's also a lag effect. I mean, we have to sort. We are seeing oil coming down. We've seen
Dude, why wouldn't they put a share up?
Jigsaw puzzle used to be a 500 piece.
They have some respect for the man.
It's very complicated.
25. He's almost middle aged.
But we need to stay in our lane at the time and try
he's
and
on
get to
the
the
office
end
chair. Just pull a button when he's not sitting on it. Let it go up. Give him a phone book or something.
Thank you for being on with us, Peter Tuchman, Senior Equity Floor Broker at Trade.
Dude's awesome.
Thank you for being here.
Peter Tuck.
Plenty more to come right here on Trading 360. Our 360 Spotlight takes a look at Sport Radar, the company's latest earnings report. Our disruptor is
no, I need to listen to all those too. I haven't caught up on stuff. You DM me, right? I saw those intros. Those are pretty sick.
Our 360 round looking at those discount retailers. Dollar General.
There's always something with this news crew going on.
Next, it's the big three. 3 stocks, 3 charts, 3 trades.
Always something. GME's holding up good, guys. So didn't have a big flush. I mean, it's 11:15. EU closed in 15 minutes. I just panicked, closed my position for a loss there, which was maybe dumb. But after this dumb move, I guess not that bad. But yeah, Bed Bath. This is looking nice. This is looking like a rounding bottom. Need to hold some levels though. Gotta hold some levels. Other rounding bottoms like we've had here. I just didn't hold. So gotta start holding. This trend reversing. Oh. That's so sketchy. Big hug to you too. Yatko. Yatko. Thanks, guys. Salud. Isn't that also like cheers? You say that for both? Yeah, I think so. I know it was. I know it was. I just wanted to speak it. Yatku. SPY looks like it's going to move up some more here, consolidating. Just GME's mirroring it. Yeah, maybe a long. I mean, got more levels higher up. Good to keep going. Big green candle so far today. GNS shares have come down. Like this thing's been melting down lately. I'd love another rip up here. Well, more well equipped now. I think I had 4 or 5 contracts for this rally. I didn't take profits. Got 7 now. So let's get up there. Let's go. I noticed natural gas sometimes kind of moves with the market itself, it seemed like. Which kind of makes sense. I mean, oil does. How long have I been day trading? I mean, like I've been trading for years. I don't know, 3-4 years. Day trading, like I haven't really started doing it. But the futures is what I've been doing until more recently. But in the last, since I've been trading, I've done day trades. No, I like them super short. If it's something I'm gonna put on, all my videos, like less than 5 seconds. Yeah, I know there were jokes. That would be such a ridiculous intro. Have like a 45-second intro to every video. Some ridiculous long anime.
Retracement relative to the area that we're currently forming. So right now, again, currently forming 195. We don't want to see it below 187 because that would invalidate the working assumption that we're trending higher, establishing areas of value at higher and higher levels. So a very well-defined bull trend. Again, this is a textbook example of the 2 phases, and I just want to point out vertical.
I've traded before. I'm not in it right now. I'll probably invest in it once it seems like we're at a market bottom.
But eventually we
I think
will
crypto
find a
will
stop
follow
in
that for the
price
most
and
part.
start to consolidate if this is a true breakout. All right, let's move away from the intraday
I've traded
look here because I
some
want to show you what's going on with the daily time frame. A very similar pattern,
much
right? Here you
success.
can see as I went ahead and just drew that high
I've always
conviction
been
to the
careful
upside,
to
68
not,
back in the end of 2021, beginning of
not always,
2020,
but
and then we
I'm careful not to
rallied up,
chase,
and then we
so
went sideways around
I didn't like make a bunch of money on
throughout, the last year and a half, 2 years. But
crap coins that
even
went
within
crazy.
this pattern, as you take a step back,
I just kind of watched
them
them
going on here,
basically.
a very similar situation where you can see this repeat itself over and over again. So you can either look at this kind of on a more granular or just that bigger picture as the longer term trend of the upside, giving the benefit out to the bulls, breaking out here, conviction to the upside. Lastly, I want to show you where we are in terms of the 50-day, the 200-day moving average. It really speaks to the conviction here to the upside. These 2 moving averages really pointed north here. RSI,
playing the breakout.
Not necessarily what the bulls want to see. It's not participating, but definitely a longer term trend environment to the upside that we're trying to break out here. So an initiative move in line with the, again, trend we've been seeing where value's been moving higher.
Oh, okay.
Yeah, and to
that
your
makes sense. I'm
point,
like,
Ben, you
what?
said
This
we
isn't
don't
me.
really see many
Happy.
charts like this one with this uptrend right now.
Ace.
I guess that
Thanks,
it is
man.
somewhat concerning that the
Appreciate
RSI
it, dude.
isn't
I think we still have
participating in
ones
the
from
same
the last
way.
time you gifted
but
subs.
Tom, what do you think here?
Dude,
When Ben was talking about these
Thank you, Ace.
consolidations,
All right, guys,
to
if you aren't a
me,
member,
that and
Ace
folks
just
who
gifted
really
you guys
get to
a sub
understand how this
or a
works.
membership.
I call that building cause, and
Everyone
building
ought to be
cause
members.
is how stocks can go.
I mean, I guess
a lot
Javier
higher
isn't.
and or a lot lower. It's like working out. If you're swimming a lot, you're practicing for the Olympics. You're basically
Trying to have a nice
practicing, and then you do the contest. Those
Gonna have a nice
sideways
buffer
moves,
of them in case anybody jumps in. Ace for Prez.
That's what you're looking for, and it's just like
There you go,
let's say a
Rad
triple
Riches.
decker.
Remember, welcome. DM me on Discord. I'll give you guys happy crew. You can jump in on stream with me and chat.
Much stronger on the way up and on the way down. It works both ways. In this particular case, Caden
Yeah, you can just watch.
doing it all the way up on a
Javier,
consistent basis
but you can get a free membership. Ace just gifted it, so
understood. Okay.
might as well.
Next, we are looking at Republic Services. This one's
During
trading
earnings
around
and stuff, if chat gets
134.
crazy,
What are your
I
thoughts
might
on
turn
this
on
tape, Tom?
membership only. So there's advantages to have
That's
it.
the bottom line. We'd have a Caden. I mean, we'd have a Republic here. You could buy it
It's
at this
two
particular point.
stragglers.
You put a stop.
No man left behind.
131, 132, and this also, last few days you have big volume. You're breaking a swing point with volume. Your highest swing that I'm looking for this to go after, is that 54 area. The bottom line. Same deal. We took out the swing with nice volume. We took out the swing with 2.5 million versus the 2.1 that's out there, and you got action in it today. And we should have action in it today. The market wants higher price today. But my take is that wants to run up to that next swing up there at basically the.
This is Ace looking for no man left behind. Hey.
Right. Look,
Hey, do you have a membership?
Nice move today.
Wait a second.
What do you think, Ben?
Tom, you had me when you said same deal. This really is the same deal in many ways, except for the
Thanks,
bigger picture, longer term. We're not quite seeing the same conviction to the upside, but look at it first
There
and
you go,
foremost on
Javier,
the
you got
hourly.
it.
We'll get into the daily in just a second. You can see longer term trend playing out here to the upside. We've got a bottom left corner low around 121 all the way up to 135.
Freaking chat full of members, man.
We're trying to break out of
pretty
balance,
awesome,
but
actually.
I went ahead and identified two areas. You got consolidation around 123, right? Easily identifiable, overlapping, rotational, high conviction to the upside. You actually pull back a little bit, but notice you never go back below the 123. Look at this big move to the upside. This is earnings, imbalance, that initiative phase higher. Imbalance gets created by news. Sideways consolidation as you accept that upper level. And again, just pointing out that we're holding 130 right now. So actually breaking out of it, I should say, of attempting to get vertical again to the upside out of 130 right now. All right, let's step back here. Let's look at the bigger picture as we pull up the
There you go,
daily time
Matthew.
frame. You can see a similar
Yep, if you're a lurker,
bottom
just
left
listening,
corner
you
to
can
top right
jump
corner.
on
You've got
chat
a
and get your free
well-defined trend
membership.
environment to the upside where you see most of the conviction throughout 2020, 2021.
But you must
Since
thank
the fall of
Papa Ace
2021, we've mostly
as you
been
pass
sideways
through.
again around that area that we just identified. And well, here, let's just go ahead and show you some of the areas that I'm looking at. You got 92 where we see that consolidation, overlapping rotation. Look at this high conviction to the upside, and then we start to balance here around 100. Similar pattern. This is the move we just looked at, sideways
Great guy
around
indeed.
130. So there's no rejection of this well-defined
guy.
trend here. Again, not
that
as
gas
high
coming down a
conviction
little
to the
bit,
upside
but
in terms
I'm
of
liking the
what we were
trend
just
so
looking at a
far.
minute ago as far as that breakout, but no rejection as of yet. All right, lastly, I just wanted to take a second to go into
I don't know
and
what
show
this
you where we
does. You guys
stand
know what
in terms
that
of
does?
50 and the 200-day moving
It's
average, because
an
I got a
updated
chart for that
Webull.
as well. Breaking above the 200,
Like a
that's significant.
timer?
The bulls are going to be
Oh, I can turn the timer
energized by
off.
that.
Oh,
You've got
okay, yeah.
conviction here
I actually
as we
like
just
that on there.
supported at the 50-day
So with this
moving
Webull
average.
updated,
And
have
in
this little
instance,
timer.
Nicole, RSI
So I'm on
is
the hourly
supportive
candle.
of the move up here.
So it tells you when
is
that hourly candle
leading in
ends.
many ways, a
It's counting it
reflection of
down.
what we're seeing
Kinda
price
cool.
activity. Again, a lot for the bulls to hold on to here.
Yeah, and look, you're really showing that recent move higher, which, when we look at this stock, we're saying 1 month it's up 7.5%. So certainly a significant move. And you're
SPY
watching
breaking
that
out to the upside.
139 area, Tom. Final thought, please.
Yeah, as Ben said, when you hit that 139, that 140, that's going to be some heavy resistance, because when we
Look at that
came down,
hourly
that
candle.
came down in a week, in a day, from 140 to like the 132. So
What are you talking about?
I
Oh,
expect
it's
when you
that
get
guy.
to that point, that's when, if it's going to go higher, you'll start building calls. You start going sideways again, because you're not going to get through that the first time. That was a heck of a day. They came down to 2.1 million shares there. So they'll be flack when we get up to that area.
Oh, Mount Tyson.
And last but not least, we're
Word.
looking at Boston Scientific. It's not too far off that 52-week high
BBY
hit
popping up here.
recently. Why do you like this one?
This
Is
would
that a
be the
move with the
same one
SPY?
as, cadence,
Perhaps?
basically. Okay, didn't pull back at
SPY
all, in this downdraft.
ripping
that we're
now.
talking about
Wow.
Right now, you're trading out at the 47.90.
Breaking
You
through
can buy
that
it here.
level.
Bottom line, you put a stop
I
at
mean,
about 46.
we're getting close to the
And
top
I'm
of this
looking for
range.
this to trade to 54. The reason
Tippy,
being
tippy,
is that
top
what you have here is that you are
393.45.
basically coming in. You can see we rejected lower
scaling
price
into
today.
shorts
We
there, like
rejected lower
1,
price yesterday.
2,
You have that
2.
high volume swing. The high
Support
volume
from way
swing is
back
laying
here.
out there right now at the 48 area. And then when we take a look at this and we just
We hit
look
it,
at it in
393.46.
basically a
We
little
did.
bit longer area, we actually already broke over. As long as this stock stays
Wow.
over basically about that 46 area, I expect the next level is going to be coming up there. And that next level,
Everyone has, like,
you know,
two
nothing
accounts.
heavy,
That's
but I
true,
think
they
it's gonna
log in
get
with their
down,
other
like,
accounts.
to the 54 area.
I see. Okay, so what are you thinking here, Ben, when you take a look at Boston Scientific?
Nicole, I'm so excited. Tom just said the 46 level, and we did not set this up ahead of this discussion here today. That's an area I'm looking at right now relative to the strength we've seen in the area consolidation, or the collar, as Tom put it, that we're forming right now. Take a look at this move from the beginning of November of last year. We rallied up, and we've been a little bit more sideways as of recent. So I went ahead and sort of just went and drew, first and foremost, the just big move up with that high conviction you see on the left side of your screen throughout November into December, a little bit of follow through in the end of January, beginning of February. But here you can see overall we've been kind of hanging out around that 46 level. Tom just mentioned here. Now, hold on one second as I show you, because throughout all of this, well, again, you can see that this pattern repeats itself multiple times over and over again on a more granular basis. And notice here, as we're currently forming that area around 48, what do I always say?
I got one short
the
here.
Middle of
We'll
the
see.
past area of balance that formed prior to the one that we're forming right now.
This is a big level.
Which is
Breaks here,
46.
then
So as
I should
long as
get
we
longs,
hold
really.
above 46, as Tom just pointed out, we're
Just like
still
I said back
stacking
here.
up these collars, and
then
again,
again
seeing
here,
this high
but
conviction
I
to the
didn't.
upside here with value moving higher. Let's take one more look here at what's going on, because the daily time frame really points out a very similar pattern. Now we're going all the way back to July. Similar situation, 36 to 48, and that's why I like this vantage point, or looking at the market through this lens, because look, it repeats itself multiple times over and over again, whether you're talking bull, bear, stocks, options, futures, commodities, currencies, treasuries, and here again in this instance you can see it playing out 37, 41. Okay, I labeled this as 46 on this, 47 on this one, but it's kind of around the 46 area, right? Well-defined upper extreme, well-defined lower extreme. Lastly, Nicole, you know, I've got a 50-day and a 200-day moving average for you in this instance. Similar situation in terms of what we were talking about as far as our last stock, but a similar situation in terms of cadence here as far as RSI. It's not really joining into the upside, so let's keep an eye on price right now. Balancing for BSX. Long-term trend environment to the upside, supportive of what we're seeing here on the short term, and all of this holding above a key level, as Tom pointed out, 46. Keep an eye on that.
Right, understood. All right, thank you for that, Ben. Tom, just a quick thought. You know, we're approaching with the Fed. Fed's in the quiet period now. Everybody's waiting to hear what the Fed may do. We did have the ECB hike of 50 basis points as expected. That was what their trajectory was, and people didn't know whether they'd do it. What do you think the Fed may do, and what do you think they should do?
I suspect they're going to go up at least a quarter. You know, I think what people have to get in their head is that, you know, it used to be the extend and pretend. This is never going to stop. I mean, you know, in general, because it can't.
The ego on you.
Every, you know,
Thanks, BX.
let's say crisis, right? There'll be some people that go
Look,
out of business.
you can thank
right?
Ace for that.
That being said, though, every time that there's a real problem, they're going to put more money in it. You know,
Spy's holding up
people
really
that
well up
say,
here. I
okay,
don't maybe we
sometime
should jump out of this
it's
thing.
going to end. It's not going to end. This is how the whole world runs. This is how it goes, man. You know, this is how it's gone since well, I've been in the market since 1980. So the bottom line is that that's how it goes. I mean, I know it's weird, but it's not. Because that's how it goes. So it's who is going to go out of business. More money goes in the system.
Not sure if it's a rejection or consolidating.
Then you go
So
up again. But
consolidating.
you know, that's why, you know, a dollar today, you know, is not worth what a dollar was a long time ago. But you know, the system's not going to fall apart. That's the bottom line. So.
All right. Good. Okay. I like how you're providing us a backstop. Tom O'Brien, thank you. CEO of TFNN, thank you. And Ben
Have a great one.
Lichtenstein,
Have a
of course,
safe
with
one.
the charts. Yeah, you too. Thank you both. Coming up next, today's disruptor is something we'll be talking about On Holding, an international athleisure company. Caught an upgrade over at Wedbush. We'll do some comparisons there and a lot more coming up.
On? Not sure what that is. But Bat's still holding up 3.8%. $1.07. It's the price there. The SPY's coming down a little bit here. I guess if it kind of holds up this level, probably close the short, maybe even go long. I don't know if we'll go long, but because it seems like it might want to break through that level if it consolidates up here and doesn't just reject it harder. CNHI. A little luxury here. Very bearish. This bank or something? Financing. Oh yeah, it's just moving with the banks, it looks like. Wait, sale, financing. Yeah, it's just got bank exposure. So if you're doing a short-term trade, you could, you know, try and get a bounce, dead cat bounce, but to invest in something that's just got momentum to the downside, it's I think it's too early. Tractors. Yeah, but it's just financing. That's why I say, like, you can see it looks like a bank chart. Right? The company is engaged in the design, production, marketing, sale, and financing of agriculture. Oh, the design part. Oh, production. I didn't see that part. Huh. They're out of UK. Big UK tractors. Not sure why they've. I guess they've. I don't know. They've sold off with the market or with the banks. Maybe some of their financing exposure. I mean, I guess a lot of stuff just scaring the market. Yeah, it's kind of interesting. A one-time dividend or yearly? Nice. Beat. It looks bearish. You said they had earnings that beat, but beat. Doesn't necessarily mean it'll rally though. Depends on expectation. I guess it beat expectations. So let's see. Q3 loss, 3.5 million. It beat. What did it do on EPS? Did it beat there too? Oh man. It missed. Let's see. EPS misses. So missed on EPS. Beat on, or no, it's so confusing. It says beat everywhere. It missed on EPS, and the chart looks bearish. So looking for a short. Trying to time the bottom on stuff like I don't try not to do unless you're like day trading it, I guess. It is at the support here from back here, where it's kind of right at. So maybe it'll bounce here a little bit, consolidate, and maybe new lows for bottom. I mean, you've got a gap fill down here. I wouldn't be hasty to jump in here, but you could always scale if you really can't sit on your hands. Get some exposure now and then give it like a week and see if it's broken this support, which very well could. And if it's here, you could get some more exposure here, like one of these levels. And if it keeps coming, then get more once it fills this gap, because it very well be coming back down to this $1.60 or so. 30. Yeah, 230 level, 245 is kind of a level 2. There's no divergences or anything showing an upside so far. And they just missed earnings, so yeah. Yeah, looks like SPY's consolidating up here, so probably close my short. Or not. We consolidate before a drop.
A story of a brand that's becoming very trendy, both domestically and internationally.
This
It's
break
not
would be
necessarily
big
a
on SPY
large
though.
mega cap, retail or apparel company.
Sure,
like
Javier.
Nike or
Sorry, yeah,
Adidas,
not a whole lot of
but there are
insight. It
some
looks bearish.
speculations out there that this company
Basically,
becomes very attractive as it's growing its trendy brands as well as its sales. Not necessarily, of course, a situation where balance sheet is constrained. It's got a strong balance sheet with about 400 million in cash and about 6.5 billion in market cap. And overall, like I said, they're rapidly growing. If you consider the earnings profile as well,
still green on it anyways.
there's actually earnings coming out next week for the company. They're expected to report about 6 cents a share in terms of adjusted profits. Now that's a complete swing from 5 cents of a loss last quarter, the same quarter last year. And sales are expected to be about 294 million, higher by about 89 million from 205 last year.
I think,
now that's about
you saw
a 44% increase.
I'm guessing
in
you
total
saw an
sales.
uptick in activity on there just from
next week on a year-over-year basis. So it's a very interesting story for a company
just from
that is growing its top line
the
sales
stream not
tremendously,
being
but
on, so
also
more people are
expecting
active on there.
full-year
I'm assuming.
profitability at least in the next year.
Yeah, and what's interesting is the landscape. I mean, not that many people have heard of On Holding. I mean, they've heard of Nike and Skechers and Under Armour and some of the other names. I mean, how does a name like this continue to get some traction, you know?
That's Wiz King. He's been around a long time.
It comes down to trendy brands. One of the things, I've noticed, just following the markets over years, Nicole, is strong trends and brands are very powerful, and that's irrespective of maybe economic conditions as well. I'm going to throw other companies out there like Goose Holdings, for instance. That was a trendy brand. The stock just took off because of high price point products, and you can actually see that here with gross margins of this business, about 56% of total sales. So that's one of the things that this company's got going for it. It's a small company, but its brands have been growing tremendously, very popular, and now it's becoming more fashionable as well to own these brands. And so the ultralight nature of their shoes and accessories from an activity standpoint also meets that fashion standpoint. I think that's, again, something that's very powerful.
Yeah, I mean, and you're right. I mean, that brand has become very popular. I see it all the time, everywhere. So thank you for that.
Right.
George still has a good look there at On. We appreciate it. Thanks, George, for the disruptor today. And up next, we will spotlight Sport Radar. The company's CEO will join us, diving into the latest things on earnings. This is a sports betting company. Revenue has been rising, particularly here in the U.S. He'll tell us more about it.
Getting a little food here. BY just pumped up a little bit this morning. It was up like 11%. And it's holding up now, which is good. Basically, we're set up for an RSI divergence. So any day with like another day that has a little bit higher price, that divergence is going to be confirmed. So yesterday's low, now with today being a little bit green, we'll have a divergence here if it closes this high, which is a good sign of a reversal. Higher RSI, the lower price, the divergence. And SPY could be, we could be an uptrend for a bit. I'm not sure. This is a big level to break. Excuse me. It's a big level to break on SPY up here. And looks like it's about to. So I mean, depends on your time frame if it's uptrend or not. But definitely seeing a bounce today. And getting this much exuberance today, probably a pretty solid Friday. If we get a solid Friday, probably a pretty good Monday. So if we do continue to sell off, might not be till later next week. Maybe trying to retrace back up to kind of that 50 moving average. If it drops below $1, I think more or less. I don't think it's quite that simple. But yeah, that's kind of my understanding of the contract is they don't have the same obligations. Yeah. I don't know who that exactly applies to, what the time frame is on that or anything like that, but and it's not just I don't think it's necessarily just a stock price. I think that was the part of the wording where it's talking about the VWAP has to be down there for so much time, and the average VWAP has to be below that price. So, yeah, I mean, before that price was $1.25 or $1.50, and we were trading below there for days, you know, before they amended it and changed it to $1. Give some context, and just because it is down there doesn't mean they're necessarily going to pull out either, but maybe gives them the opportunity to. Swiss helped out with the bailout. Swiss. Yeah, the Swiss are giving them a loan or something. I heard. Doing a double down, Ace. Yeah, I was wondering how much you're gonna put back in. Did your cost basis down? Yeah, we'd have to look at the filing, but I think because I remember that was one part of it, and I'm assuming it was referring to that price, the 125, 150. That I don't know why there's two numbers, but I don't know if it was in that range or if it was one or the other. But that, regardless, that's been changed, I believe, to $1 now, and I think the VWAP and the time frame was in correlation with that price. So yeah, it's not as simple as, oh, it's below $1, it's gonna get delisted or something. You buy more, yeah, for sure. AC John, man, holy smokes. Okay. I mean, you're right. It is a smart play. Yeah. I mean, you're playing it. Did you get out of BBY and GME? I'm assuming you're referring to those. You still running a like theta farm on it, AC, or no? BBY, still kind of consolidating here. I don't think RC was malicious in trying to get retail into GME. I think he's probably doing a good job with the company, and there's a fundamental future with GME. And I think he was trying to do the I think he was trying to do the same thing with BBY. Whether he still is or not, I'm not sure, but seemingly he's not. As far as those type of people setting up these plays, I don't think this is really precedented. So I don't think this is alone. At least not to this scale, if you're saying that this was malicious, basically. Because retail has never had this much, hasn't been ever invested in the market this much. So there's never been an incentive for hedge funds or wealthy people to, or not as much incentive at least, to try and get retail to push the stock one way or another with options or shares. So yeah, I mean, COVID is when got a huge influx of retail, and then they saw the power of it, most likely. Sure, with GME and Reddit, and so they got bots and they are trying to use it probably to their advantage. But I wouldn't say RC was or has. So the stock that he's in, yeah, it's going to get retail sentiment. So yeah. No, he made money on it. I think he made some money, yeah. Companies are looking for liquidity, except for companies that have it, like GameStop.
A typical double-digit EPS growth, which was cut in half this year. They are opening a distribution center. They
Dollar
just
General,
opened
that might be
their
a good
first
one.
store in Mexico. So I would characterize, the near-term performance as more growing pains. This company is typically a high-quality compounder. They raised the dividend. That's positive body language as we view it. And
It could, Grunt. It could.
I think the tone on the call was
Hey, Ryan.
relatively constructive.
From home.
Yeah, thank you for that, Sarah. Corey, what do you think here? Is I was going through the charts that you sent, and for the most part, I'm seeing some sideways patterns, even some up patterns. But Dollar General, a different story. It seems to be showing some recent weakness. Which names are the buys or holds? I mean, what are you thinking about the group too?
I've been missing the streams too,
Well,
Ryan.
I think that there's an interesting disconnect between where investors seemingly think Dollar General's results are likely to be and ultimately where they have the potential to go. They just need to deliver on it. And they've illustrated that while there is some, I think, near-term hurdles, this business throughout the last 80 plus years has been one of operational excellence. And as we come out of this quarter, I mean, there's really three key elements here that make me even more bullish and encouraged about the story here.
Lots
Number
of
one
days
is
to
that
miss. It's true.
sales continue to be very,
I was
very
keeping an eye
strong.
on it a little
They
bit,
were
but
up close to 18%.
there you go, Ryan. Get
in
your
the
free
quarter,
sub.
and
Get
they're
your free
gaining share
membership.
across categories.
Ace did
They're
that for
gaining
you.
share
Thanks,
from
Ace.
higher income consumers, and people are trading
Ace is
into
Ace
Dollar
is
General,
offended that
from
anyone that's not a
peers.
member in this
so
chat.
it's clear that they're gaining share. On second on margins, while there is some near-term
Ryan, you better
pressure
click
that
it
we
where
alluded
someone else
to, I
does.
think that a lot of that pressure
There's anybody
should
else.
abate as we look ahead and the compares get easier as
Ace
they
is the bone.
lap some of the inventory
The
and
ego on
damage
The gifted
issues
member
that they
bomb.
had in the latter half of
Oh,
last year.
we got
And then
it.
on the outlook, it's strong and it's actually better than
More room for movement?
a
Yeah.
bunch of peers. Lastly, so the
We're
comp
talking about
outlook
SPY
is
or
for
BBY? Are we
3 to
talking about?
3.5% same store
Yeah, there's
sales.
SPY.
That's better than many public peers at present.
There you
and I
go
think that
on
there's
you.
actually opportunity to outperform that
George.
in the future.
Let me expand on
Yeah,
that.
I mean,
Which ones is it?
SPY actually
outperforming? As you
kind of
said, it's gaining
broke
market share.
this
Margin
range,
pressure
so
should abate. It has a decent outlook and a
yeah,
strong
it's
position.
looking good for a
I do
long.
want to ask you about Five Below in particular, but I'm curious about which ones do you think it's better positioned than?
Just buy SPY and
I
close
think
your
it's
eyes.
better
You'll
positioned
win.
than very many retailers. Certainly many in the
Yeah, it's broken
specialty
resistance.
apparel space, but
I just actually went long again.
specifically
I
in
didn't
the
want to tell you
discount
guys. I'm
space.
embarrassed.
I mean, for example, retailers
But
like
yeah, right
Walmart
here.
and Target are kind of
This was
guiding
the range
to
I kind of saw it
up
trading
low
in.
single-digit comps, and Dollar General's,
Kind of
just
breaking it right
slightly
now.
above
Unless
that
it's a
with
false
the high
break,
end
but
at 3.5%.
hasn't really
Target's actually
rejected it
guiding
hard,
to
so I think
down
it'll
low
probably
single
just
to
melt
up
up
low
through
single.
here.
So I think that just illustrates the unpredictability and the variability in potential results here.
Just everything. I'm not sure what you're
actually
trying to go
guiding
long or
results
short.
up
But
3 to
it looks like it's got
3.5%
momentum
on
to
a comparable
keep
same-store
rallying.
sales basis. And then just on Five Below, this is a company, while it is discretionary
It's a trap.
oriented because many of the goods are non-consumable in nature, it's still providing a lot of value for many homes in America, with most of its offering that's $5 and below, hence the name of the company, Five Below. And that does resonate very strongly with consumers in an
I mean, you're not at
inflationary
bit buying it
environment
by any means, but
and with a potential recession looming.
Yeah,
It
and
is
Sarah, I mean, you said the
right
customers
at that
have been very
breakout
resilient.
level.
We've
It's-
seen some spending.
We're above
your
it now.
thoughts on Five Below? You said it's a similar
Seems like it's
story.
holding fine. It's not like
Yeah,
hard
the
rejection,
narrative
so it seems like we'll
quite
keep going.
similar with a value narrative and low absolute price point.
It has a
For
has a
Dollar
pretty big
General,
room to go
it's
up
more,
from here, I think.
Consumables, about 80% consumables, where Five is more
I think it's at Five Below.
mix. But they both have,
I don't know if I've
really
ever actually been there. I've
attractive
seen
growth
them.
attributes. I think, different,
Jimmy's
obviously
moving up here
different
with it a bit.
valuations, and levels of growth.
I spend more than average.
But ultimately, I do think that these names will come back into vogue as we start really feeling the impact of higher rates on the economy ultimately. Because
That gas is coming down a bit.
has been to temper some of the spending and just cool off the economy. So names like
AMD's up
these
7%
will
today.
be
Wow.
important parts of
Should've gotten more
portfolios
contracts.
just for stability's sake.
Yeah, thank you for that, Sarah. Final quick thought.
Until May?
Corey,
Here's through 380 till
consumers
May?
and the resiliency. What are you expecting consumers
Well, it's not
to
here
do?
anymore. It's now higher.
Well, I think one of the things that's really clear, especially after today's call with Dollar General, is that people are continuing to trade down, and that even from the CEO of Dollar General, Jeff Owen, that consumers are becoming increasingly stretched. They're relying more on credit. Their savings rates are now increasingly depleted, and I thought it was interesting. He even highlighted that some consumers are, believe it or not, borrowing from their friends.
bit. It's up 6%.
Clearly the consumer is stretched, and in an environment with, again, a potential recession looming, we believe value retailers like Dollar General are particularly well positioned ahead.
Yeah. You never borrow from a friend.
Yeah, I thought
Oh,
they.
boy.
Oh, there it goes.
It's
One more.
wonderful to see both. Thank you.
I thought
Thank you
these
for
were
that
converging.
color
That would be one
about
ticker
that
now.
call,
Is that
too.
not
Appreciate
happened
that.
yet?
Sarah Henry, Logan Capital Management, Corey.
Oh yeah,
Tarlow,
sorry. What
equity
Ryan?
analyst
What you were
at
saying? You're
Jefferies.
happy? Yeah.
Thank you both.
The thing with
That's
Ryan
gonna do it
Cohen
for
is
us here
dismissed
Trading
on him
360.
pumping
I'm
and
Nicole
dumping.
Petalides. Now join me at 2 p.m. Eastern
They dismissed
time.
it
Steve
in pumping dumping
Forbes
BBY.
will be with me on
So,
the 2 p.m. show here on the Watch
potentially he has
Live from the New
freedom
York
to
Stock
speak
Exchange.
about it now.
We'll
I'm not
talk about
sure.
inflation. He also has a new book.
There goes SPY to the upside. Should have gotten more. Turco's 20. Yeah, Turco was ripping. SPY is ripping now. Trends are converging. Yeah, so you're calling for basically like this again. This only was like a month though. I'm saying 3 months? March, April, May. Alright, yeah, I'll check it out. I'm not nearly that bullish, I guess. I think we're getting a bounce here, and this could last through some of next week, but with deal with the banks, I don't think it's over. I mean, yeah, we're definitely still in a big downtrend. I think we're in this sort of like this little range right here, but all my stocks are ripping. All my stocks are ripping. None of them are dipping. The Fed's dropped it back into the market. It does. Let me check this. Check your chart here. Are we still getting scammers on here? Old. SPY's wicking there, but kind of a weird spot to reject. The breakout here was false. Wicking, not ripping. Here's your chart. He's gonna trade. Can't see where 384 is. Let me see. Is it 3 here where we are now in 380? What's this line? May. Rain.
Up
Go
1.25%.
Come again, another
almost
day.
48 points to 39.39,
I thought that song had May in
right
there.
around that 200-day moving average. The Nasdaq 100 up
that a spammer?
2.1%. 258 points to 12,510.
We're working on Jay from the Bay.
The Dow Jones
Puts me bots in there. I should get rid of those other bots in Discord. A little bot battle. We'll see what happens. Don't even have to pay for that kind of action in our Discord.
The most volatile index of the week, up 1.1%.
This is the worst immune stocks.
19 points to 1765 and some change. All right, now let's bring in Alex Coffey. the prodigal son
AC is
returning back to
definitely
fast market.
pissed.
You know him as the co-host of Next Gen Investing with
Love the
Jenny Horn.
streets.
Alex, we have an interesting morning set up here. Kind of a relief rally going on. The markets were jittery, but Christine Lagarde
was he in our
did what
server?
She said she was going to do in early February, which was raised by 50
Anybody
basis
can
points.
reach out to you,
And Alex,
but
the significance of this,
if
I
there's
think,
anyone
was
on
the
our
fact
server.
that not a lot of Fed speakers. We're in the Fed quiet period, so there hasn't been a lot of commentary. Here, all of a sudden, Christine Lagarde comes up, stays
Is your
on
May
path.
timeline because of the
Is
Fed
that a
quiet period?
precursor for next week?
Oh, frick.
Possibly, and I think
I don't-
that I've been watching the
there's no
Fed
happy
tool
monies in
or
the
Fed
server.
funds futures would be another way to look at that, Kev. And
Except
trying to
me,
get
there's
an
happy
idea
brother,
of,
happy puppy,
did
and
this
then
solidify
happy.
something next week from the Fed, but it appears at least now the market's thinking that the Fed's going to kind of take the halfway point. We were pricing in 50 basis points prior to all the financial stuff that's been going on. And then there was this feeling that, oh, now it's all done. There's nothing.
Swiss People's Party are against the state
Pick it
guarantee
right in
for
the
Credit
middle,
Suisse.
25 basis points, kind of stick with the general trajectory that they've been on. And I think that feels about right. I think the big takeaway is going to be, the commentary around it, the guidance for the rest of the year, because we're pricing in like 100 basis points in cuts. From the current
Panic
levels
tech
going out to
short
the end of the year
squeeze.
now. That's very, very, very different than where we were about a week and a half ago.
Alex, when you look at this week in its entirety, what's been missed because of the crisis that was going on with banking and the focus on banking, we missed a PPI number that was really weak and showed significant reduction in PPI. Now, we talked about it on the show yesterday that PPI is not
Oh, did I buy more nat gas?
the strongest
Hold on.
indication of
Oh my gosh, I got more nat gas
much
instead.
like CPI
I'm an idiot.
and wages.
I guess that's good. Spy's coming down.
That was the biggest drop in some of those
I don't think
year-over-year
I like
numbers
nat gas
that we've
here,
seen,
though.
along with a retail sales number. That
Oh, I
was
do.
pretty weak.
I like that,
So
sort of.
if we can get past the banking crisis, which it looks like
All right, Spy's
we're
coming
starting
down.
to here,
A little bit.
a pretty good number that
This
that we
could
had
be an
this week.
engulfing candle.
Totally, and I think
this
that
was a
I think
breakout
upfront,
zone, so
the CPI was, it's still
maybe a little false
elevated.
breakout.
It's still showing
I
price
got 3
increases,
more
but
nat
it's not
gases though.
surprising to the upside to the same extent that it has been for the better part of the year. I think
It's a
both
sign.
of those
I must
reports
buy them.
were possibly volatility-inducing events that could have happened. It could have made things
Brought my
very
cost basis up
interesting
too
for
much,
next
though.
week. And instead of it being extremely or very interesting and the Fed being in a really tough spot, I think that it's still interesting, it's still important, but it makes that messaging easier for the Fed.
Yeah, sure.
They can show that what they've been
can get back
doing
on
is
track.
starting to
Right,
work,
right.
but they can also realistically acknowledge the
candle
fact
make-
that it's not totally normal for
they're
banks to
short,
be
though.
failing overnight. It's not normal for this stuff to be happen. They can
I don't think
address
there's anything that'll
both
just cause
sides and
this to-
say, we're closer to the end.
big move down.
We're going to react to the situation, but at the same time, the general banking system is strong. We knew that there was going to be impacts from our rate hikes. Not
scam
all of them
virgin.
were going to be good. And we can assess things now. But
Ace, I
they're
feel
in a
bad,
situation
man.
where inflation is roaring rampantly and this stuff's going on at the same time.
Green line's where the 3
Starting to
days
see
for a
that
bit.
moderation, particularly
Okay.
in the purchasers' prices index, is important because on that side,
It might be getting rejected right here.
but it's at least some indication that
And
at least
Roubaix.
on the producer side, that those cost pressures are alleviating a little bit, and that's going
If
to
it holds above here,
level off
I think we've
prices.
got till
Probably not gonna come down,
396,
even if we see
25
deflation
area.
at some point.
Sure.
We're probably not going to see all of a sudden those
might not be anything to bring
shelves
it
go
down,
back
though,
to
so-
pre-pandemic levels or anything like that, unless demand's completely gone. And so, just the upward pressure maybe being alleviated, I think.
But
is,
yeah, there's
is
an engulfing
really a
candle.
critical step.
Yeah,
And
we
we're-
also had another
like
chapter
we're not breaking
in the
out
evolving saga around TikTok, with the UK banning it on government phones and the rumors starting to come out that President Biden may ban TikTok in the U.S. For more on that and its effect on stocks like Meta and Snap, let's go live to the TD Ameritrade New Desk.
I
and
know, I've
bring
checked
in
the
Jenny
names.
Horn, the other co-host
I
of
don't know
Next
why
Gen
they-
Investing. Jen, what are you getting here?
Actually, take a short here. This
interesting
long wick, and now it's
because
engulfing.
of reels,
We're at this
because
level.
of the makeup of
Might consolidate
Snap,
here for a bit, but
this TikTok ban is starting to catch some steam, Jen.
No kidding, Kevin. This is really interesting. I mean, especially if you're these names like Meta and Snap that could be pretty major beneficiaries if we do see this potential ban on TikTok pick up some steam, which it does seem.
There we go. If
like
we hold that level.
Very mixed reactions, I will say. I was looking at Twitter.
At the same thing, we're back here at that engulfing.
The analysts in the street are saying versus those that love TikTok, because that is a very loud audience. But we did get news that TikTok really is right now being demanded by the White House or its parent company ByteDance to sell its U.S. arm of TikTok or face a potential ban. Those were reports we got from the Wall Street Journal. Now, TikTok dismissed the report that the Biden administration has told its Chinese owners to sell its stakes or face that ban. A spokesperson actually from TikTok said if protecting national security is objective, divestment does not solve this problem, and a change in ownership would not impose any new restrictions on data flows or access.
AMD 7.5. This is a pretty big pull in the market. 155 billion
data
market
in the
cap.
United States through third-party systems of monitoring.
I didn't realize it until they had earnings.
Vetting, which they are already implementing.
Totally moved spine after hours
they're already working to up that security, but
it stopped me out of a perfect 418 short entry.
Similar sentiment echoed in the UK. So
which
this
I
is
maybe
already
still would have
seen
been
as a
even holding
tailwind
now.
for names like Meta and Snap. Naturally, it would even further be a positive for these names if we saw it also banned in other key markets like the UK. The security minister did hint at this potential banning. We did already hear from the EU as well as the US. They've banned TikTok from federal devices. I would say that seems like the first step naturally. I mean, that was, to me, ridiculous, the fact that that was even being allowed, but now that is sort of a broad adoption. So the next step will be to hear from the Biden administration what happens next. I think the analyst community, Kevin and Alex, is fairly positive on this news naturally if you're a fan of Snap or Meta, but I think there's also a degree of hesitation here because it does seem like things should still work out. There seems to be a lot going on right now behind the surface.
Yeah, I think this is a fluid situation, and it's tough to
AMC
say that
is
this
up
ban
6%.
isn't more bark than bite, let's say. But let's even entertain the idea that TikTok just is no longer accessible in the U.S., which is maybe a lower probability event than it's laid out in some of these commentaries. But let's just assume that it remains unclear to me
these
how
guys
that
don't mute their
benefits
mics.
Snap. Are these creators
It's just
on
me,
TikTok
and I mute my mic.
just suddenly going
I
to
let you guys hear the
make content,
sneezes
or are
because
they
those
gonna
can
flock
sometimes
to a
sound
new
funny.
platform? And if they're going to go to a new platform, which ones are best positioned to receive that content? Probably argue that it's Meta's Instagram, and a second place, if not tied for first, would probably be YouTube through its its shorts as well as its full length content. Snap isn't in the radar of these content creators, and so
that's how support.
It's one of those situations where maybe the rising tide is seeming to
oh,
lift,
no
to
way.
lift
That's
all
awesome.
boats. But if the best thing Snap's got going for it is one of its competitors gets banned, I think it
accidentally,
highlights all you need to know about
accidentally opened
Snap.
I completely agree with you, Alex, and I think that Snap is, we've discussed
Eyes
it. It's
coming
no longer
down.
cool in our generation. I think we've aged out of Snap. I do think
Your
there's
freaking
still
mic.
a market for it. I don't know if it's necessarily attractive to those ad dollars, but I think the focus would be, and why we're seeing Snap react so positively, is just they need any amount of ad dollars. I mean, this is a company you mentioned is somewhat desperate here given its mass selling. I mean, that just paints a picture on the year-to-date or yearly chart. Really, the fact that we've seen that steady right now level just stuck here in Snap around $11, $12. So I think any amount of ad dollars, any market share they could steal from TikTok is seen as a positive for a name that's been pretty decimated.
Jenny Horn, thank you so much for coming on as always.
Jenny
and talk about
Horn.
something, frankly, that you and Alex have to talk about because I don't really know much about TikTok or any of these things. Although I do know about Facebook, I do know about Instagram, I do know about Reels, but I don't know the difference between them, Jen. But thanks for coming on as always, Jen. Like I said, I want to trade it. If I can't trade it, I don't want to do it. But for more on the trading aspect of that, let's bring in Mr. Randy Frederick, Managing Director of Trading Derivatives at the Schwab Center for Financial Research. Randy, thanks for coming on.
I have to pick up some progressive on a big
two times this week, Randy. We're going to get you a chair if you keep
that looks like a
more.
AbbVie chart almost.
Interesting
value
week
growth
going on. It looks like, correct me, tell me where I'm wrong here. It looks like some of the uncertainties with banking are getting less uncertain. And we're getting back to some
special divvy though, $1.50.
Financial data here, which is starting to come in. I mean, these housing numbers were pretty impressive today. in terms of starts and permits. Jobless claims still
now it
strong.
says like a nice
What
short,
are you
though.
seeing from the economic data today and the market in general?
How would
Randy?
insurance do in a recession?
Well, the banking sector is really interesting right now because you're right. I mean, in one way, in some
Gen
sense,
A.
because of the backstop that the Fed put into place,
And they told me to
we've
run, so I
alleviated some of the
ran.
immediate sort of panic type risk. But at the same time, yes, the big giant money center banks, I mean, they might as well be, they might as well be government-sponsored entities. I mean, you don't really think that J.P. Morgan or Morgan Stanley or or Citigroup or Bank of America or Wells Fargo. I mean, can you imagine one of those banks collapsing? That's not going to happen. But at the same time, there are a number of these smaller banks who had a little bit of a bounce here the last couple of days that are now
doesn't know bear
struggling.
market.
In fact, there's all kinds
I
of commentary
suppose it does
about
good in a
some of them
recession.
being
I don't know.
downgraded. Their debt's been downgraded to junk. They're looking for strategic alternatives. You know what that means? That they're trying to figure out a way to stay solvent. So
Wait,
yes, we've alleviated some of the concerns, but not everyone is out of the water by any stretch. The housing market data was interesting. I have a feeling a month from now we're going to see incredibly large numbers, and that's because of this big downtrend in interest rates we've seen this month here in the last week or two. That's going to have a huge impact. I mean, if you've been in the market for a house and you've been struggling to find a reasonably priced mortgage,
Glad I got a Tesla
this little
yesterday.
downtick we're getting in interest rates now is going to give a lot of people a reason to jump on there and lock in. And I think we're going to see a huge uptick next month. So this is a blip, I think, compared to what we're going to see about a month from now.
Alex, I've said my theory before has been when interest rates get volatile, demand for housing doesn't go away. It just sets up in a queue. It waits on the sidelines. And I think that this number shows
the
that
chart called it.
When it dissipates,
I called it earlier too, and it didn't play out.
They come
But,
rushing back into the
yeah,
market.
thanks,
These are
Tenzin. I
big
guess
numbers from starts.
I was a little
and
hasty on that
permits,
one.
And we had good
But this is
mortgage
at
apps this week.
a big
So
break, and
the numbers are flipping.
it broke
and
it
flipping
technically,
really
but
quickly
then you get
in
this
housing.
big wick
And
that's
the
bearish,
supply side of the
and
housing
then an engulfing
situation
candle
has
is
been so short for
pretty
so
good to
many of
trade
these
on.
years
I like
over the
those.
past few that there's just demand, and now the supply is able to actually come online. It's actually better able to meet that demand. But I look at it as that you can take it one step and almost make it simpler. You don't almost even spend any more.
I almost didn't want to
when
get into it
interest
because
rates
I
go up. You just spend it
got
more
stopped
on
out
interest
twice on
and
this
less on
rally up,
home
trying to
in
get the
some
top.
senses. Oftentimes,
But
real estate prices come down as those interest
gotta
rates
stay
go up,
persistent
and so it just sort of
sometimes.
shifts where that money
The
is
best
going.
traders are
But,
the best
you know,
losers.
this is a long-term decision for many households,
Ever hear that
especially
before?
first-time home buyers. You
Sure.
don't wake up one morning and just decide you're buying a home. For many, this is a multi-year plan, and you get to that step in the plan, you're kind of just at the effect of wherever interest rates are. It may slightly adjust your pricing range and where you ultimately end up, but if you've been planning to buy a home,
But
you
it very well
wish you
could
had
just be
zero
consolidating
interest
up there
rates,
too.
but you're probably still going to buy that home if you can make it work and you find something that you like
On a
and
temporary
you're ready
top
to
at
make that
least,
step
looks
and
like.
make that investment.
Yeah, as long as that payment, that number that you get doesn't give you sticker shock, you're probably a little uncomfortable, and then you get less uncomfortable. Randy, couple days now that Christine Lagarde has spoken and stayed on track with her plan from earlier this month, she went 50 basis points. She went to 3.5%. Now all the attention shifts to Jerome Powell. That Fed meeting Tuesday and Wednesday, the 21st, 22nd. You know, they've been in their quiet period, so we haven't heard from them, even with a banking crisis. Your thoughts on next week now, and did Christine Lagarde's actions move your opinion on this at all?
Well, Credit Suisse notwithstanding, I don't think this crisis is as severe, or I guess I shouldn't say it's not as widespread in Europe as it is here. Yes, we did temporarily dip below the 60%, which is kind of that critical threshold on the Fed Fund futures on whether or not they'd hike a couple of days ago. But now that is back up to 75%. I think, and I said this, I think 2 days ago when I was on here, that the right move is the 25 basis point increase. That's what the futures markets are telling us right now. That's a number that isn't, oh my gosh, we were really being aggressive. Now we got to pull back because the banks are in trouble. That scares everybody. And it's not oh, hey, we need to recognize the fact that our actions are starting to, many of us have said this, we expect the Fed to hike rates till something breaks. Well, I think something broke about a week ago, and we're still trying to put the pieces back together. So I don't think we want to continue to really punch hard on this when we see things are starting to crack here and there. So pulling back just a hair, but not cutting it off altogether, I think is exactly the right move. Obviously, we've got about a week for that to happen, and certainly those futures probabilities will change between now and then. But I really do think that's probably where they're going to go. There was a reasonably good chance that was going to happen anyway. Now I think it's an even greater chance, frankly.
Yeah, this is going to get interesting as we look towards the Fed next week. The anticipation is going to be pretty big. And then Jerome Powell, he gets his chance on the 22nd to basically, just like CEO, give guidance going forward. It's going to be incredibly interesting and a great week for the markets. All right, guys, Alex Coffey and Randy Frederick are going to stick around for another segment. Please take our first break of the day. Come back in 2 minutes with more Fast Market. See you then, everybody.
Let's walk through charts, one of the most commonly used features on thinkorswim. Start by going to the Charts tab and entering a ticker symbol. Select Time Frame to adjust time intervals or to favorite a time frame. Select Style to change the appearance of the chart. You can add drawings by selecting Drawings, Drawing Tools, and then Type of Drawing. For symbol comparisons, select Studies. This also gives you access to hundreds of pre-built studies, including a number of classic patterns. The grid icon lets you view multiple charts at once. You can even initiate a trade from the Charts tab. Just right-click anywhere on the chart and select either buy or sell. For more demos on how to thinkorswim, head to the Education Center on tdameritrade.com.
When traders tell us how to make thinkorswim even better, we listen. Because platforms this innovative aren't just made for traders, they're made by them. thinkorswim Trading from TD Ameritrade.
It's a 13-hour flight. That's not a weekend trip.
15 minutes to
I gotta take off. Now, you downloaded the TD Ameritrade mobile app so you can quickly check the markets?
Yeah, actually, I'm taking one last look at my dashboard before we board.
Excellent. And you have thinkorswim mobile?
So I can finish analyzing the risk on this position.
You two are all set. Have a great flight.
Hey, thanks.
We'll see ya. They're getting so smart.
Choose the app that fits your investing style.
Welcome back to Fast Market, everyone. Kevin Hinks back here for our second segment, along with Randy Frederick and Alex Coffey. So, Randy, getting back to you, let's get to our... We have a theme for today with FedEx earnings coming out. The theme for today's show, Randy, 3 trucks. 3 trucks is what I see in my cul-de-sac on a daily basis. So we're going to talk about FedEx. We're going to talk about Amazon. We're going to talk about UPS. So our first truck of the day that we're talking about, Randy, is the one coming out with earnings after the bell, and that is FedEx. Your thoughts?
Well, I mean, a lot of these companies they're obviously staying busy, as you said. I mean, in my neighborhood, you're right. Every single day, I like to go out and wash cars on the weekends, and I watch the FedEx trucks, the UPS trucks, the Amazon trucks. It's like every 15, 20 minutes. It's crazy. So they're certainly busy. There's no question about that. And I know that the consumer has shifted to a services sort of orientation. In other words, experiences, going to restaurants and taking vacations, as opposed to buying stuff. But I'll tell you what, we're still buying a lot of stuff because I still see a lot of stuff being delivered. But whether or not that always translates into the bottom line is a different story. You know, this particular stock has done, you know, like a lot of them, it struggled last year. It did worse than the market. It was down like 32% this year. On the other hand, it's up about 15%. So it's outperforming the markets. This has been sort of a similar theme to a lot of the stocks that we've talked about here for the last several times that I've come on.
Yeah, Alex, this is a company, you know, e-commerce isn't going anywhere. It's going to continue to grow. But Randy said there's different aspects of this that are strong and weak, and FedEx is more international than, say, UPS. They do things a little bit differently. They're talking about restructuring and what a lot of these companies are talking about in terms of lowering, working on the expense side of the ledger. Your thoughts on FedEx?
Yeah, I kind of look at them in that group of 3, and I think it's a fun conversation.
Yeah.
And while we're including Amazon, it's important to note that while Amazon does the shipping a lot of times now, they're also selling the stuff, and they're also, of course, in this thing called the cloud with AWS. So
they got other things.
They got some fun stuff going on, but I think you really nailed the key distinction here, which is while they both show up in our neighborhoods on a daily basis, our apartment buildings on a daily basis, FedEx has a little bit more overseas as well, and that's actually been a pretty big drag on the company for the better part of the last couple of years. And so as those markets are starting to open back up, obviously it seems that we're moved on for the most part, and we hope that we're knocking on wood. We've moved on past the pandemic mostly. Some of those border restrictions have come down a lot, and other economies are recovering at different paces, and things are getting more normalized across the world. It's only going to potentially benefit companies that have that international exposure. Obviously, a strong dollar has made business overseas interesting as well, but UPS has been more insulated from that. It's been more domestic.
Right.
Obviously, crude oil and gasoline getting expensive wasn't exactly great for companies that are driving around delivering packages, but even that's come down substantially now. We're almost 50% off the highs in crude oil quietly as a byproduct of some of the uncertainties that we've seen on the macro front. So all of these things, assuming the consumer stays abundant in its activity and is continuing to buy things online instead of going in stores and buying them in person, there's still going to be shipping. There's still going to be these trucks out on the road on a daily basis.
And there it is, Randy, what Alex just mentioned. At the end of the day, when we look at these three companies, a better economy means more deliveries. A recession means less deliveries, right?
No question about it. And I think his comments about the fuel costs are very important. I don't think that's going to have any impact on Q4 earnings, but it will have an impact on what happens in Q1, because I think that's when we've seen the greatest decline in the cost of fuel. And these companies use enormous amounts of fuel. It's a huge input cost for something like that. So that, I think, will benefit further down the road. But yes, there's no question, if we can avoid a recession, and I've not been in the camp that we're inevitably going to get one. I think now everyone's saying, because of this financial crisis we have going on, that's almost certain it's going to happen. I'm still not convinced that that's true. I think this one's going to be contained. It has been for the most part, as we were talking about earlier. And take a look at the GDP estimates for Q1 right now. They're very high. I mean, people are like, "Are you serious? Yeah. Is that even possible?" That would be the third consecutive quarter of of strong positive GDP. So, that it's that Godot recession that keeps jumping. It's always 2 quarters in the future, and it will always be there, and it never actually arrives. I'm not convinced that's not the environment we're in.
Randy, you brought a different type of trade. You brought a call condor to the show today to look at FedEx earnings. Describe to me what you're doing here in a call condor. It looks like it's a completely in the money with a sort of at the money spread with it. Tell us.
Yeah, so obviously we always want to talk about different types of strategies, and when you start putting options together in 3 or 4-legged type things, the possibilities are unlimited. So the whole point here is to just bring an example of there are a lot of different neutral trades where you're trying to, where your expectation is that you think a stock might stay within a certain range, even though earnings tend to make stocks go volatile. They don't always get volatile, and you've seen it like I have. You get a post market close report, the stock shoots up in the after hours. By the next morning, it's back down, and sometimes it doesn't even change all that much. And so I thought, here's an example of one. We talk a lot about iron condors. Here's an example of a standard call condor that has a neutral bias. So what I put together here was, so we know earnings are coming out tonight. The implied move, there's a couple of different calculations you can use, but overall it works out to just about 10 points. So with the stock right around 200, that means up to about 210, potentially down to about 190. So I put together this call condor that has a different width between what's called the wings and the body. So we're looking out to the end of the week, put on an order to buy the 182.50, and then we're going to sell the 192.50. So that's a 10-point wing. That's essentially a bullish vertical call spread. Then you're going to skip 15 points and you're going to sell the 207.50 and then buy the 217.50. Those second wings are a bearish call spread on the upside. But you got 15 points of room in the middle where you can hit your actual max gain. So in other words, if FedEx post earnings stays between 192.50 and 207.50, essentially you're at max gain. Now, when I was looking at this trade about a half an hour ago, you could do it for about a $6 debit, which means your maximum gain is going to be about $4. And here's the interesting thing. If you look at this stock technically, you'll see that there is some technical support right around, say, roughly 188.50, which just happens to be the bottom break even. And there's also some technical resistance up around that 211.50, which happens to be the upper break even. And again, that gives you 11.5 points of room. And we're talking about a stock with an implied move of about 10. So if it stays within the implied move that the market is expecting, you're essentially going to be profitable on this, assuming you close it out right away. So again, this is where oftentimes when you're trying to figure out how to put together 4 legs, you got to look at things like technical support, technical resistance, implied moves, put all that stuff together with your perspective. And again, this doesn't mean I think that's going to happen, but if it was your perspective that this one might remain within the market's expectation for the move, this is one type of a strategy that you could potentially use that maxes out if it stays relatively flat. But as always, if this thing goes haywire and it goes off a cliff or it goes to the moon, then you've got your risk defined on the wings if it goes outside of the lowest strike or the higher strike.
Yeah, this is still a spread that it's in the Condor family, Alex, but it's a debit, and that's the risk. I got about 60 seconds, Alex. Give us your overall views on this trade.
Yeah, 1 day to expiration is really the takeaway for me. Obviously, an earnings event that is keeping that implied volatility very, very elevated. Once we get the news, we're going to get a reaction. Oftentimes you see, especially with only 1 day to go, tomorrow being that expiration day, you'll see that volatility crash, essentially. And that's what this trade is. This trade is looking for an underperformance of the expectation. And so,
holy smokes, thank you, I appreciate it. Did you guys claim it?
Report,
True to leave?
Guidance, that's sort of what the market's
nice,
looking for.
well done.
We're looking for boring.
Unchanged or a small move.
You smoking the trim.
News-making event, and
so just more lurkers
a really good
blaming these gifted subs.
We always want to think bearish or bullish. Neutral is a strategy.
Thanks, Ace. Appreciate it, man.
Collecting a lot of
Not sure. Yeah, it looks like a little bounce here, so it could be consolidated before another rip.
Thanks for coming on. As always, spending some time with us.
I'm still in my short.
We always appreciate you coming to the show, Randy. Have a great day.
You're welcome, guys.
Not quite convinced yet.
All right, coming up next, cash tag segment.
Big doji
we'll look
down
at our
there.
second stock of the day, and that is travel overall, and we'll trade Amazon. Stay with us on the TD Ameritrade Network. Take a quick 2-minute break and come back with
does a
more
double top up
Fast
here.
Market. See you then.
I didn't get into HST. Rock as well. I'm not sure about that. See the green box? Click on it. Oh my gosh. Math on the dividend yield. Multiply 10 on that position. Yeah, so it's however much the dividend is times how many shares, or yeah, per share. So the yield would be, it would be dependent on what your cost basis is on your shares. I'm going to figure it out that way. But the dividend doesn't change unless they change it. The yield just is in relation to the stock price at that time. How about 22? Is it bottomed? XXII? Oh, is that a... Oh, is that like a... I don't know. Yeah. It could be a nice trade on this one to the long side. Triple bottom. Yeah, this looks like a nice long here. I like it.
The ego on you.
Moi, moi. Thanks, Ace. You're hooking everybody up. Thank Ace on your way in and way out. All you lurkers. I get to see you. Alright, SPY's moving up. This could have been a consolidation, really, but that looked like. Well, I got 3 more nat gas contracts on accident, and I guess I got them at a pretty good price there, right at the VWAP. There's an extra membership in the tank. Wall just halted. I like this XXII. I don't know who mentioned it, but let's see who was that. That was you, Javier. Yeah, this looks like a nice trade, really. I mean, you put a stop for like, you know, just below here somewhere, below that support, and just hold the shares. I mean, you're not guaranteed to get a run like this, but could be 50%. That's pretty good. Kind of a descending triangle here also. Right, so could even get a breakout from those levels potentially. You know, if it broke out to the upside up here. Otherwise, you're looking for an exit maybe at a lower high. Ooh. I think I'm gonna trade it. I might pick up some shares actually. Let's see what kind of buying power do we have. I grabbed some shares. What did I do last time? What's the volume? I don't know the catalyst. I don't know anything on this thing. It had earnings, which didn't upset it too much, it seems like. Got an RSI divergence there on the hourly. That is neat. It's at the very high of the day, so I think that's when I want to buy it. Right? Isn't that how it works? Yep, I'll take it. 20th Century Group. Oh, this is insurance? I bought it. I did it. Thanks, Javier. Good shout out. Good catch. Good looking chart. Nice simple TA. Like simple TA. Western Alliance. Are these insurance companies? Bank holding company. Or financial stuff. Volatility in this market right now is wild. Yeah, you're just getting bounces. Crazy bounces. Let me see what this is. Agriculture, biotechnology, and intellectual property company. Companies focused on tobacco and harm reduction, reduce nicotine, tobacco, and improving health. Huh. 22nd Century is like that real estate company. Also screaming over it. If you're not trading GME, alts shouldn't necessarily screw you over. Oh, I didn't get fully filled. That's alright, I'll wait. Wait for a pullback to get the rest. It only gave me 600 shares. Is there options on there? I could even farm it. Ooh, there are some options. Have liquidity too, a bit. No, that's spread. Right, there we go, in the money. That's a huge spread. Just peed yourself? Shoot, man. Good. Gas moving back up. My 2.5 share. Let's ride it. Ride or die.
So there are these different consumer touch points that UPS seems to be getting.
This lady looks like a girl I knew
improving because they realize that
long time ago.
Means that if a consumer gets to choose, this consumer will likely choose UPS. However, in a lot of cases, though, a consumer doesn't
okay, SPY did double top there. I kind of want to add to my short.
Matters, you know, if a company gets enough complaints, maybe they're likely to change, who they're shipping with.
Okay, I added to my short.
Yeah, that's so interesting.
I like this entry.
Right,
did
Megan.
this.
As
did
much
this.
As we'd like to talk
and
about
this
the
is just more
differences
confirmation of
between
a
the two,
top to me.
I have never once bought something online and got to click Amazon, FedEx or UPS. You get what you get, right? So it's the company that's choosing, not the consumer in any way. It's really interesting. But Megan, thanks for coming on as always, spending some time with us. We always appreciate.
But it is still a little
portfolio
risky because
data.
it could just be
Megan.
consolidating.
Thanks,
This
guys.
being the
You
low
too.
and this being the high.
All right, let's
393,
for
390,
this
390
segment.
range.
We're looking at all three, but we're really talking
So I'd
about
like to see it
Amazon.
break below
and
here and kind of
Amazon
hold.
is in the delivery business, Alex, as you know, but they've got so many other things, right? They've
Someone
got
good as
brick and
man to
mortar,
tell.
kind of a failure.
Levels
If you
on
have to grade
rock.
all of their move to try and brick and mortar. Whole Foods in 2017. I don't think it's going exactly the way they want. They're recommitting
Rockwell,
to brick and
all
mortar.
that.
Not sure if they should.
This.
Give me your thoughts on Amazon in general.
AWS is Amazon. Amazon's future
that's their growth.
is the cloud and all the things they're doing within technology. The rest of their businesses is a very, really important piece as they continue to impact the marketplace as a whole through different things that they're doing. But this is one of the few companies that is in that race to be the holistic ecosystem, that you can come to Amazon and absolutely anything you want to do as a consumer, Amazon can provide a solution to. They're coming from different spots. Apple's trying to do this. Meta at one point was sort of trying to get into this game. I think they've fallen back. Microsoft and Alphabet are the others. There's really 4 key players. I think they're at different stages and they're all coming from a different place. But all of these companies are trying to do everything well, be it content, be it let you interact in terms of buying things from them in the case of Amazon, providing technology solutions, devices, innovations through AI and other
dip
things
yesterday.
Like they do.
Oh, sorry,
through
Rock.
Echo, Amazon
Distracted here.
Alexa products and things like
it
that.
looks very bearish,
All
Tree.
of this is a race to do just a little bit
Depends on
more
your time
than
frame,
their
depends on a lot of
competitors
stuff.
are doing. When I look at Amazon,
You got a
though,
little
I think
dip
of this
bounce.
in the sense of the overall macro
thankful.
environment. This is a name that's basically lost half its value as rates have gone up, as e-commerce
Stocks
has
drop a
been,
lot.
squeezed
If
a
you're
little
having
bit, as
success,
all that pull forward demand
it's
from the
great, but
pandemic just hasn't
you just have to know
stayed
your
on the
timing.
levels.
You're
It just hasn't stayed at those
playing with
tremendously
fire a
high
little bit
levels.
because you're
It's more normalized to more
expecting a
on-trend
bounce, which
levels. And of
usually
course,
comes, but not always. And if
we've
it
seen,
does, you don't know how
technology
high
starting to
or
pull back a little
how
bit
long
just
it will
because
last.
companies have pulled
AWS
back.
So you
growth
kind of want to trade the
has
trend.
slowed.
Because that's how I've
pace
had
of growth
success.
has slowed, and that really put panics through some investors here. And yeah, the stock
Not sure
has
what your plan
had a
is with
horrible
this,
run
but
here.
No doubt, but as we look at the overall market and the pressure it's been under and some of this financial instability that's brought on some fear, the kind of names that are actually
It's
acting like
too.
safe havens the last few days, rightly or wrongly,
Yeah, it certainly
are
does.
names
Well,
like
it's a
Amazon,
big
are
dividend.
names like Apple that are strong in their market position.
But I guess
have
the share
tons
price
of
is not
capital
huge.
that are going to weather the storm more than likely, no matter what the market conditions are.
Holding
And so,
for now.
it
All right,
helps
mate.
They don't have any, to my knowledge, financial banking.
No exit strategy, no plan
And so I
before you
wouldn't look
entered?
at a trade, Kev, that would benefit from a move higher in this
These
name
SPYs kind of
because,
showing
I think
a wick
it's
on
one
that level,
a lot
so
of investors are looking to right now as an opportunity to see a
still
move
just
higher.
consolidating,
Yeah,
not confirmed
This is,
that
again,
this
a
is going to
broken
reverse or
wing
just consolidate
kind
and
of,
go up more.
Butterfly, it's something in the butterfly family. You're buying the 95-105 call vertical, and then you're selling the 105-110 call vertical against
don't need
it.
no
It's a
stinking
$10
plans.
spread with a $5 short spread. It's starting to collect some data, but you need to move a little higher into that range, Alex. And this is a play
Like I
that
probably shouldn't be in this
you don't
short.
get hurt on
Holding
the
up way
upside
too
because
well.
of that $10 versus $5. There's a trade-off though. It costs you a little money.
Yeah,
Costs
that
you about
wick down there.
$4. But
right on that
this
level,
is certainly
too.
something that looks on the upside. And if you target that 105 strike, that's where this peaks out.
I think you nailed the key piece to me when I was constructing this type of trade, or what I would be thinking about when I'm constructing a trade, be it a credit spread or something in the debit spread family. This, of course, a hybrid of both, but since the credit or the debit spread was bigger, I'm going to call
like
this
it
a
anymore.
buying premium strategy. Even in situations where I would be looking at something where I'm buying premium, if I can get to a point where I have positive theta decay, even in buying premium, to me that's a win. Even if it's negligible, I'm no longer needing something to happen to break even. In this case, the break even is $99. That means I just can't have this stock go down.
Found on my
by more
XXI
than
shares,
$1.
Javier,
So
I'm upset with
although
you.
I'm buying premium with this trade illustration, it's still got a high probability of success because it doesn't need anything to happen. In fact, it just needs something not to happen. That's always been
that's how it
what
works.
drew me to the options world, is that you can structure trades that have a probability of success that is higher than 50%.
Yeah, and this is something that targets the upside, but it's relatively flat, and you're basically at or near your break even right now. So if nothing happens, that would be okay for you. But your first goal is for something to happen, right?
Oh, okay. So you have some fundamental thoughts behind that. Oh, that's good.
If it goes down, there is risk.
So you sounds like a long term.
The risk.
I mean, it's at a pretty high level historically, so
paid on this spread right around just over.
You might have a better entry, but yeah, buy and hold for sure.
There's some ebb and flow there, but
EV battery system for forklifts. Oh, nice.
Yeah, final thoughts here is with this kind of trade, we got a little bit more cute with it. If you looked at the risk profile, it maxes out at one exact
60 cents?
figure, and that's right at that short strike. So usually a good rule of thumb whenever you're trading options,
sure, that's hindsight.
Complex option spread strategy.
I mean, I wouldn't have bought it till this day. The break of that
place to start.
resistance level there.
You fundamental trades, and we show you variations
just looking back on it.
Those themes.
But then this would feel like a chase.
As always.
So then I probably wouldn't buy it.
See
how that works in my head? See how it screws me out of trades a lot?
That is UPS. Alex and I will be back to talk about that after a quick 2-minute break.
Definitely bearish now. Still in my short, but we'll see. Dude, let's see, I have 10 nat gas so now I have the equivalent of one big nat gas future. It's nice to have the small ones though, because you can scale in and out. But it's not nice because it costs more. Trading futures is expensive as far as commissions go. I think it's like $1.50 each way per contract. Jeez, is that true? That really actually sucks for my. Or is it per trade? I have to look. I think it's per contract actually. So that's what got me doing the bigger ones, because I was like, I don't want to do so many small ones. I just want to do big ones. I'm doing fewer. Yeah, per contract. Yeah, ouch. That adds up a lot. So anytime you're gonna trade a future, you're gonna pay at least $3 basically, at least on with E-Trade's fees. That's in and out. That's one contract. HST, does HST pay a divvy? Wait, that's not the one that's different than what I'm thinking of. Host hotels, okay. Yeah, I'm out of this. Maybe even go long. Oh, I like the double top, I like the engulfing, just this holding this support range here. Like it's just consolidating, not reversing. New high day. Talking about Mr. Invest. UI is barcoding. Barcode pattern. Yeah, I'm gonna jump out of this. A long here might make sense, really. I haven't been live for the last few days. You have your bell on, Mr. Invest? Notification bell. If you have that on, it should notify you. If it still doesn't, just follow me on Twitter or get on our Discord server. And then when I stream, I tweet it out.
$250,000 that they would be provide a backdrop for, but I think again that's good news on the kind of more immediate picture. But when you are getting reassuring rallies based on those kind of data points and those stories and headlines, I mean, it still speaks to the fact that there's some cracks in the dam, I think, and we're just sort of patching them up at this point.
Ben, pretty incredible range on the 10-year yields today. It hit a low of 3.36 early this morning, and now we're over 3.5. Ben, that is a massive range.
Yeah, well, again, I think a reflection of what we're seeing in terms of investors' concerns about economic conditions, growth, the Fed. We did have some interesting activity today that played out not here in the U.S., but again, with central bank activity being so intertwined recently, I think, and markets think for that matter, it seemed like what we heard from the ECB today was significant and potentially a reflection of what we could hear from the Bank of England and the FOMC next week. Kevin, we saw a 50 basis point rate hike in line with what Christine Lagarde had basically promised for months now. And so she had talked about an extraordinary event was the only thing that would sway her from that aggressive approach towards inflation. And ultimately, well, we did see an extraordinary event, right, over the last week or so, but she went ahead with that aggressive approach. So I think, again, some of the intraday price activity we're seeing in the indices and then also in rates reacting a little bit to some of the central bank activity, what we're seeing here again, and the ECB being the focal point there. Does it signal in terms of what we could get from the Fed and from the Bank of England next week? It definitely signals that they're not as concerned about some of the banking developments as of recent, and her focus still very much on inflation. She was very clear about that.
Thanks for coming on, Ben. As always, that is Ben Lichtenstein, host of The Future Show on the TD Ameritrade Network at 8 o'clock Eastern. Check him out in the mornings. All right, now back to Alex Coffey and our final trade. But now I want to bring in, live from Salt Lake City, Utah, Mr. George Tillis to talk about our third stock of the day, and that is UPS. George, the theme for today, 3 trucks, George. Here's our third truck that congregates in my cul-de-sac on a daily basis. What do you got for us in UPS? They work more on margins than the other firms, don't they?
Yeah, very much so. I mean, look, UPS, when it comes to last mile delivery, reaches over 98% of households in the United States. So it's really a domestic ground concentrated or focus-based business when it comes to parcel deliveries. But also, you got to think about other ancillary businesses, which include things like custom brokerage, logistics, as well as financial services. I think if you look at UPS overall, I mean, the domestic market is about 70% of their sales versus 70% international for FedEx. So if you're looking for a stable, sort of a rock-based company from a domestic transport standpoint, this is the name. Now, looking at the stock, if you look at a 3-year chart, it's actually just been in a trading range. It's pretty remarkable. But between 220 on the upside, about 150 on the downside, we're sitting right in the middle of that range. Now, the other thing is the company recently reaffirmed guidance for the full year. And here's the kicker. The guidance from the standpoint of sales is really conservative. About 1.5% sales growth is expected for the fiscal year, as well as EBITDA growth, which is around 2%. Now, compare that to last year, the company's sales growth was over 3%, EBITDA was around 5%. So the company provided guidance, which met the expectations, and they reaffirmed it, but it's conservative. And I suggest it's actually a good thing, considering some of the exogenous factors we've got going on, risks, economic contraction, slowdown, and so forth. This company effectively is a really stable company when it comes to margin growth. They actually guided slightly higher from 13.3% operating margins for a fiscal year to 13.6%. That's a good thing for UPS, which again, as I mentioned just a moment ago, it's not really expected to grow too much this particular year.
You know, George, one of the things that's been beneficial for UPS in relation to FedEx is the domestic, obviously, approach as opposed to more international. But we're just looking at the Likefolio data, which, of course, is just aggregating basically the sentiment of consumers on things like Twitter and saying, were they happy with their experience? Were they not so happy with their experience? And for the better part of the year, just through monitoring that data and those conversations that we've had with like Folio and just anecdotally, it's clear UPS is the preferred
Holy spy rip.
consumers versus FedEx, and I think that
I didn't take that
Kev
long,
alluded
but
to
I did get out of
this
my
as well
short.
as Megan, that
thankfully.
as consumers, oftentimes we're just at the effect that the relationship the businesses have already established.
That's crazy.
But if you're a business and those contracts are coming up, or you're a new business looking to make that relationship, I think it's becoming more commonplace, the understanding that UPS is preferred. That can only help this company, assuming that they maintain that favorability gap, right?
Very much so. I mean, if you think about UPS, I mean, they've got basically the majority of the ground-based services in the United States. Most of the sales are in North America at 70%. And that's, again,
you're the one that comes in and
FedEx.
just
FedEx is more of an international
predicts everything, and
business,
then one of them's
and that's,
right.
again, something perhaps the small and medium-sized businesses don't necessarily need. And so they're going to partner up with companies like UPS for
this wick down here, and it's bouncing on the support.
Same-day delivery needs.
Looks
I mean, if
too
you look
bullish.
at UPS, they've been growing not just to the last-mile delivery for parcels, but also for same-day delivery, including things like food and perishables by purchasing a company called Roadie. So they're expanding to increase their horizontal footprint across multiple delivery points, across, again, other things that people need on a real-time basis for demand, and this includes things like groceries. And I think that's going to be accretive to the business on a forward basis. And I think if you consider the company from the standpoint of efficiency, it's a very efficient company. Now, gross margins are very low because they have a lot of CapEx and, of course, a huge fleet to manage. It's at 25%, but their net income margin is like 12%. So they're generating high return on equity, also paying a nice dividend, which is close to $6.50 on about $11.80 in earnings. So paying about 3.5% dividend, stable growth, stable earnings, higher operating margins, and free cash flow from operations at around 15% of sales. All these metrics point to a company that's really solid. And I think that really speaks to why the company in a challenging market environment has actually just been relatively stable in terms of price.
George, great job breaking down UPS as always. Thank you so much for coming on the show, George. Have a great day and a great weekend.
Guys.
Yeah, see you soon. All right, Alex, let's trade UPS. This is a name that, frankly, management expects volume to be down. They've guided conservatively. The stock, it's got a chart eerily similar to that of FedEx, right? They sold them off hard during August and into October, and then they've had a slow, not a straight line, but a nice recovery since then. This is a company that focuses more on small and medium businesses. They focus more on healthcare, and what does that do? It leads to higher margins, and that's really the focus of UPS. Now, for a trade, Alex, if you look on the chart here in UPS, it's been range bound now for several months after it came up at this level, up around 191, 192, down around 172, 173, Alex. So what I did ahead of their April 25th earnings release is we went straight for the Iron Condor, and we did it to the April 14th expiration ahead of the earnings event, and we did the 195-200 call vertical, the 175-170 put vertical. We combined those two. It's got a little bit of a short delta. It's got a little tighter. That 195 call a little closer to at the money, but like I said, it hasn't gone much through there in the last several months. It stayed pretty range bound, and it's up near the top of the range. We're collecting between $1.90 and $2 for this, so a good set of risk reward premium here. But you do have about 7 short deltas, Alex, and that's because that 195 strikes a little closer to at the money.
Yeah, my first reaction to this type of strategy is all three of the trades, 3 different individuals bringing those illustrations, are all sort of in that same family here. But when I look at this one, Kev, I think you alluded to it. We don't hear from this company again specifically until April 25th. Barring any surprising news. There's an opportunity for this stock to react to FedEx's earnings. And so there's going to be that additional risk premium right now built into these options because of that FedEx binary event. And in a way, this is sort of a secondary way to get that exposure through UPS. They're so related. I know they're different. I know they target different markets. but the market can't help itself but react to whatever FedEx says in UPS.
And how do you know we know that? If you look on the trade tab of the Thinkorswim platform, there's an expected move, a one-day market maker move in UPS. That's because FedEx's earnings and these stocks are related. That's a great point, Alex, because why? Things move in a sector and they move together, and UPS will react to FedEx's earnings. So we'll watch that. All right, Alex Coffey, thank you for coming on as always, spending some time with us. Have a great rest of your day. Have a great rest of the week. For all of us here at the TD Ameritrade Network, have a great day and a great afternoon. Alex Coffey and Jenny Horn coming up next with Next Gen Investing. Stay tuned for that. Have a great day, everybody.
Many traders may be willing to take on additional risk in pursuit of aggressive growth in their portfolio. More power to them. But if you're looking for a less risky alternative, you might want to consider checking out our Income Investing course. In the Income Investing course, you'll explore investing strategies designed to generate regular income and preserve capital. First, we'll delve into risk and return preferences. You will learn about the different ways to allocate a portfolio and create a payment schedule. Then we'll take a deep dive into the assets commonly held in income portfolios: dividend stocks, bonds, equity REITs, and cash. You'll also learn about routines for managing a portfolio over time. Along the way, you'll watch videos, take quizzes, and perform paper trades to practice your new skills. So if you're looking for an edge, consider your education. Head to the Education tab on Thinkorswim for the Income Investing course and a whole lot more.
Binge watch the market with TD Ameritrade Network.
The dollar, interesting activity.
So now I did some deep research into this.
People are out of the house and engaging with the U.S. economy.
Tune in 24 hours a day, 7 days a week on TDAmeritradeNetwork.com and all your favorite streaming services.
You can also take us on the go with our CarPlay-enabled iOS app and our audio-only podcasts. TD Ameritrade Network, available anytime, anywhere, on any device.
We empower those who act, those who see the correlation between things above
Bye. Rip, rip, rally.
Billion. They also see new net digital media annualized recurring revenue, or ARR, of about 420 million. Well, the street was looking for about 389 million, so a pretty nice beat there. ARR is super important to a company like Adobe, as it's used often by a lot of these software as a service companies to show really how much revenue the company can expect based on their subscriptions. And we know that Adobe has really shifted to be more subscription based now. So that metric rising shows they're doing it very successfully. They did also raise their earnings forecast for the full year between $15.30 and $15.60 per share, with their net new digital media ARR of 1.7 billion. A quarter ago, they actually gave guidance that also beat the street's expectations. So the second time they raised even their own expectations now looking forward, which is something Outlook has been very criticized by the street, Alex. So the fact that they've been able to top analyst expectations now twice in a row, perhaps we're seeing some optimism today. And this name
I have no
hadn't
idea.
gotten
BBY
much
in a
at
day.
all from the tech rally we've seen this year. But now today,
It'd be
seeing
great
some
if it was
nice
green.
gains, still down about
But
25%
barcoded
from
here.
their yearly high.
Nice RSI divergence.
Analysts, making adjustments on the
New highs from yesterday.
For the most part, a lot of neutral ratings staying, a lot of outperform ratings.
It doesn't move with the SPY, so that's
where they are. Price
I don't
targets
know.
adjusted to the upside was the biggest takeaway to me.
I don't think they're going to want it over
Price
150 by
targets
tomorrow,
ranging,
which is a long ways off at
the
this point.
high
But
300s in
we could get a little bit more of a
375,
rally.
385 level, all the way up to
could drop.
431 is one of the highs that
Got
I
the
see,
hourly bullish
coming
MACD
from
crossover,
Wednesday,
which is
of course,
good.
which has that outperform. But
25
because
minutes,
the
this
news
candle will close.
is mostly out here. We just got the
If it was green, they'll have that green over the 9 moving average.
Just
So
because some of these other names aren't reacting on earnings.
setting up
Next on
for
the list, though, I know is one of your favorites. To
some
talk
more
about, and
ups
that's
tomorrow.
Lululemon. Never can you go to a Lululemon
I think they're just
store
stealing on
and
it for sure.
expect it not to be just jam-packed with people.
That's okay. I walked by the Lululemon store that is by us, and it was jam-packed at like 7 p.m. last night on a Wednesday. So that is completely true, and I wish I had more positive news to bring, but today we did get an analyst note from Redbird that started coverage on Lululemon with a sell rating and a $257 fair value estimate. The analyst thinks that Lululemon's international growth and category expansion now bring extra complexity as well as cost and capital to the company. They said that Lululemon's next stage will challenge its ability to maintain the current luxury goods type margins and consequently the degree of premium valuations. Now, part of this note, they did also start coverage on Nike, also with a sell rating, citing some really sharp inflections in China, but that could be offset by some weakness in growth in North America. But weirdly enough of this entire note, Alex, because we just discussed this name, I had to add this. They did start coverage on Under Armour with a buy rating and a $13.50 per share fair value estimate, with shares now nearing their all-time relative lows. They see actually upside from here. So this is really interesting. The fact that of this group, their favorite at this point is actually Under Armour, not Lululemon or Nike.
Yeah, apparently they should walk by some of the stores and just see the amount of people in each one, because I don't even know if there is an Under Armour store, to be honest with you. But jokes aside, going to say upvote here. Lululemon, obviously, a big winner for
shares of
many
FRC?
years.
No,
really facing
I
a
don't.
test over the last year, as many names have, but trying to
Halt it up.
build on some of the optimism that at least the consumer base seems to have on it, given how packed these stores are, at least in our
A little
area. But
bounce
what
by.
I will say is,
Crazy the volatility in these
obviously a
banks.
bearish note.
People
Clearly,
can trade them like
price
penny
target
stocks.
257, but the
Probably
stock
way
doesn't
more.
care at all. Stock's
Yeah, look at that
green.
free float though.
And thank
Wait, free
goodness,
float.
because
Free float's only
feels
181
very
million.
harsh for a name like Lululemon. I think for us as consumers, if you're able to discount, I know it's not good for their margins, but
yeah.
it's good news for us as consumers.
Yeah,
So
you're
our
gonna catch
next name
momentum on these
today
too.
is Signet
You're gonna start getting
Jewelers,
just volatile
also
both
having
ways.
a really nice day in
It's
reaction
hilarious.
to its quarterly update, which was this morning.
Because
And they beat earnings
this getting a
expectations in their fourth
bailout
quarter,
also
as well as
basically.
issuing some pretty solid guidance for
Or someone's
the
gonna
year.
buy it,
Their
or
outlook for their full year sales is expected to be flat or slightly down, but it still looks pretty robust given the fact that the jeweler did expect to see this continued shift away from consumer goods into some of these spending in areas like, experiences and services, which they did mention in prior quarters. Now, the company reported sales of about $2.7 billion roughly, which was a 5% increase on a year-over-year basis, did slightly miss, or basically was in line with what the street had been expecting. Same-store sales were one of the weakest spots, falling about 9%. And the company did admit that their quarterly sales were hit by bad weather in the U.S. in the peak holiday selling season, as well as labor strikes and a weaker British pound weighing on their overall forex, really. Their CFO said that their 2024 guidance reflects confidence in their ability to deliver an annual double-digit non-GAAP operating margin, despite the jewelry retail environment that they do think overall will decline in mid-single digits throughout the year. So to me, fairly discretionary space. I guess that it all depends on the buyer, because if you need to buy, a various item, I guess you would still make that work in your budget. But these are expensive items.
Size up 8%.
So something to consider when right now consumers are more strapped for cash.
Yeah, nothing from this report, though, signaling any stress that you can really see. Beat analysts pretty much across the board. Optimistic outlook, better than expected. Boosting the dividend. A lot to like here in the report, and I think it explains why it's kind of the class of this group, at least today, up almost 15%. So, going to say downvote, though. Again, same situation with Adobe. Earnings out. We got the news. We're getting the reaction. And there's still another here on the list that has a different set of news and is moving a little bit less substantially, and that's Intel. I want to talk about Intel a little bit more.
Yeah, and Intel's chart actually looks really interesting because shares are still holding on to their 20% month-to-date rally, now up about 14% for the year, but just really, seeing this strength that has continued here and progressed even in spite of some of the overall weakness in this market. And shares are up almost 6% now on the session. Susquehanna did upgrade Intel to neutral from negative, with a raised price target to $26 a share from $23. And now, nearly a year ago, back in April of 2 years ago, but in April of 2021, the firm did call for the top of the semiconductor cycle, but is now calling for the bottom of this cycle, at least in terms of the consumer, PC, and handset-related names. The firm did downgrade shares about a year ago, citing several different factors,
kind of right to my line there, 396.25. That was the last little resistance I had there.
Specifically, they said AMD is no longer gaining PC share, and Intel has shown a better roadmap execution, and the work-from-home PC hangover and inventory correction has now, they think, run its course, which seems like it would be good news for this space collectively. But a really nice pop today in Intel in reaction.
Yeah, Christopher Rowland over at Susquehanna. Optimistic on the space, but Intel, one of the key players he signaled out, as you said, but talked about the company's ability to stabilize its market share amongst the competitors. This has been the story for the better part of the last 5-6 years, which has been AMD coming in and really just out executing Intel at its own game. Intel was such a dominant force in this market for so long, and maybe a little complacency spilled in. Maybe a name like Intel a name like AMD was just hungrier and just innovated a little bit better. But the execution gap has been clear, and AMD has really expanded its market share versus Intel, forcing Intel to look within and refocus. And this analyst at least thinking that maybe the worst of that is in the rear view now, looking to stabilize that position that it has in the market, which is still a really, really key part of this market. And if the overall cycle's improving, that can only be beneficial, one would think, for a company like Intel. So, going to say upvote for Intel. It'll join Lulu as the two making it on to the next segment.
The two that they don't really have much to do with each other. They are both seeing a nice green day, which is always positive to talk about. So we'll be diving more into the charts, looking at some technicals with Rick, as well as some example trades in Lululemon and Intel coming up next.
That Intel? Like a lab in there. Oh, I think all my shares? Yeah, I got all my shares of XXII. I just took a kind of a little position here on it. I might scale into it. We'll see. I've got about another $900 or so I'd maybe throw at it. Wells Fargo puts haven't filled. My covered calls. Oh, the covered calls I'm trying to close on GME haven't filled. And my leap, my long leap on GME hasn't filled. Order for this. Close that. I'll take 25 to show you have your millions. You're so selfless, Ace. So cancel. So I'm putting an order. Oh no, I was gonna leave that. That's right, I forgot. That's right. Don't forget legs. I'm not sure if SPY is topping here or it is at another resistance point, so very well could be. The rally today is pretty massive though on Le SPY. I did take a short up here. Such a contrarian. Only when it's rallying. No, I don't like to chase. The breakout here I guess would have been a good play. Oh well. And here.
consistently this year, Rick, to break out, and it's sort of odd seeing shares honestly down 7.5% for the year for a retailer that was at one point one of the more resilient in its space. But considering actually really its resiliency today, given this negative news we got from this analyst, and considering the fact that shares are still up just shy of 0.5%, Alex, what are you thinking then leaning into more of its bullish nature? Perhaps you're still a believer in Lululemon. You see the stores in Chicago like we do, and you say they are always packed.
Yeah, and it doesn't need to be, because there can be varying degrees of bullishness. And so I looked at something that the best case scenario would be a move to 300. That's a very modest move higher in this name, but also one that would be sort of neutral at the same time. And I think we'll just go through the specifics here, and you'll understand what I mean.
Almost getting engulfing. No, you're not. But is it nice kind of?
And so we've done these at times in which we've skewed them.
Support level.
What the risk
a little lower than it,
but this is just your
maybe a rally on AMC. It might be front running GME's rally too.
Butterfly
AMC
here,
starts to go.
Calls, all in the April expiration. So we're looking at buying for this illustration one of the 220 or 290s, selling two of the 300s, and buying one of the 310s. We're able to do this for $1 debit. It's going to give us a window of profitability between 291 and 309. And then it's going to be the best case scenario, a perfect move to 300. So like a lot of these strategies that we talk about, the best case scenario is a move right to those short strikes, and you can see that here. So it's sort of a situation, again, where the closer you are at accurately projecting where this would go, the more profitable it can be. It can expand to as much as $900 in profit here, and with varying degrees of success, depending on where it ends up at expiration, if it's between those break-even points. But risk defined, if you get a big move in either way, or a move below 291, 290 to the downside, just $100 in risk here on this one. So risk defined, limited to that debit spend.
I think that's really well put. And now just to shift here to look at a name that is seeing even more excitement today. That is Intel. Intel shares
Oil's been
just
rallying
up
today.
6% and really having a nice month, up over 20% now for the month, Rick. But
Dollar started moving up there
like
when SPY topped out.
A little bit more cautious on this name. I was looking at the analyst coverage, and of the 20, there are 6 more bearish leaning ratings. We do have still 3 that are more bullish, but the majority, actually 11 of them, are neutral.
Those extensions.
So hopefully you can give us some clarity here with the technicals.
It's been quite a fall from grace for this tech name here. It is a nice day in terms of our move upward here, but we aren't really breaking into any new ground. But first, let's kind of look at how the story has gone so far here. Starting at those yearly highs near 52, we had a longer-term downtrend. We broke through it around shortly after we hit our yearly lows around the 24.59 level. Shortly after that, we had earnings. But since then, we've been pretty much range-bound between roughly 25 or 26 to about 31. So 31 is the spot where we topped out in this range a couple times here, here and here. So we haven't really moved beyond this point yet. So even though the move up today has been significant, it hasn't brought us anywhere new yet. RSI trending upwards strongly, suggesting momentum is on the move to the upside in the hands of the bulls here, but we also haven't crossed above our old relative highs, and we also haven't moved into the overbought area. So there's still some kind of missing pieces here. We'd want to see a breakout in price above perhaps the 30 level would be a good point to watch first, because that was kind of where we mostly closed out in the highs. The 31 level was mostly intraday highs, which can be less significant here. The closing prices are typically more important here. So we'd want to see for the bulls a move above the 30 level and the RSI to burst into that overbought area as a sign of further strength here. Our moving averages are starting to trend upward. Our 2 shorter term ones, our 21-day and 63-day, are starting to shift from a downtrend to an uptrend. So that's a more positive sign as well. Our longer term one, though, our purple 252-day, still flat to downward here. So not seeing a lot of improvement there yet. We'll need to get a bit more upward price action in order for that to transition as well. So in terms of support and resistance, 30 and 31, like I said, to the upside. To the downside, perhaps about 29. This volume profile point of control, this thick red line here, that could be an area to watch as well. But below that, we've got our moving averages that could provide us with some support. The $26 price level would be a 13% drop to the downside here. So we've got a ways to go before that point, and we've got quite a bit of support to have to fight our way through to the downside to get there.
So basically, Rick, with shares trading just 10 cents over $30, bulls would be happy if we closed right now. And I think that's probably actually true for the overall market, given the overall strength we are seeing. But we will leave it there. Appreciate all of your technical insight, as always, Rick Ducat, our chart master. And Alex, given some of the exuberance we saw from this analyst in this note, really on the entire space,
figured out limit buys
they
around
see that we've perhaps reached a bottom in the semi space. Walk us through what you're thinking for an example trade, maybe taking on some of that optimism.
Yeah, looking at something that would benefit from an upwards move in Intel. Investors hoping for that for quite some time, maybe starting to see something build here as it's moved off those lows and builds on that strength here today, up nicely, up over 6%. But let's look at the example trade here in particular. Looking at buying a call vertical in this stock in which one of the strikes is in the money and one of the strikes is out of the money. There's tons of strike availability for this name, and I went ahead and just selected the 27.5 call as the one being purchased in April, selected the 32.5 call to be sold. $5 wide spread, 250 debit would be 1/2 the width of that spread. That would give us a $30 break even. And Jenny, not to sound like a broken record, we've talked about these strategies a lot, and we know that sort of that loose guideline is equal risk to reward. Break even near where we're trading. Well, the stock's trading just over 30. Break even would be 30.
Today.
Equal risk and reward on both sides.
Relentless
it fits
bulls.
That loose guideline for the debit spread, and one that will benefit from a continued move higher. So best case scenario above 32.5 at expiration. Worst case scenario below 27.5.
BBY still barcoding
varying degrees
1060 and 1070.
But pretty straightforward, I would say. One that is looking for continued upside. Obviously, an isolated amount of time here as it expires in April. But if this stock can continue to build on its success, get above 32.5, this is one that will look to make $250 on $250 of risk, not accounting for that transaction fee.
Okay, and markets like whatever you just said, because we're seeing shares now touch once again their session highs. So continuing to build here, now up over 6%. But also important to keep in mind for both of our example trades today, they do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk, like unanticipated exercise or assignment. Now, coming up next, it's time to talk FOMO. We are looking at Occidental Petroleum as Warren Buffett ups his stake once again.
Well, inverted head and shoulders there on Tesla on the hourly. A DJI Phantom? What was that? Yeah, market might be setting up for some chop, like you were saying. I don't know, Christopher ever shared that that chart. It's a big range so far, but we get another bank collapse for a drop, and then another bailout for a rip. DJI, what? Yeah, Oxy. They're flying around a drone. Yeah, a little bounce from the sell-off we've been having. The volume on SPY these last days, it's crazy. No, they didn't mention DJI. I don't know if it actually was or not. No glasses? No. I don't have an FPV drone. I just have the Mavic Air 2. So I guess I could. I don't know. Is there a way to do that? You'd have to get the screen to display to like split into two. No, is that just for 3D? Yeah, you still have to get to like display differently so you can put up to your eyes. Just put a mount on or whatever. I've not looked into that. Oh, you can just use any Maverick with goggles? I didn't know people were doing that. You have to get it to display differently though, don't you? Or can you just jam that image right up to your face that close? And you couldn't have a touchscreen, but I guess got some customizable buttons on your controller. Wait, how would that work? I guess you need like a long cord? Yeah, I need a longer cord. Huh. That might actually be nice for filming. Very disorienting, but oh, the rad move continued. Donro called out all his volume this morning. Let's back up to that high, that candle. Actually, doesn't look too bad on the daily either. You've got that engulfing candle probably building. Totally rad. You can modify. You have to modify the drone itself. Seems like this would. We just have to be the software. $4? Maybe. Yeah, it's had a pretty big sell-off with everything else. See you, Jan. Might be a good dip buy here on old rad. Yeah, is this all-time lows on this thing? Hey. No, not all-time lows, but prices are 1982 prices. That ain't bad. This was the high in 1981 through 1982 on Rite Aid. So buy and hold, but sometimes you want to sell some. Yeah, from when I just quick looked at it, it looks like you just pick up whatever goggles, and then all you have to do is get a longer cord to connect your controller to your phone, so the little short one that comes with it. And then, yeah, you would just have to. I don't know how the image would look in with the normal just app right up to your face. I think you'd have to. I think the software would have to change the image so it'd be viewable at that distance, like VR would be. I think that all it takes is kind of splitting the app. So it's more like binoculars, I guess, than just a straight image, or it's like separated. This is looking like a nice bottom here on GME. Market seeming to want to rally too. I like this guy, man.
Always great.
He's got an awesome attitude.
Good insights and a great update here for the developing banking situation, as it is the story that keeps on giving. Looking forward to talk to him again soon. Let's bring back in Jenny. It's time for FOMO. We're going to a completely other world here. We're going to the oil companies. We're going to big oil, big energy, and Warren Buffett's exposure.
Warren Buffett has been a very interesting investor in the energy space, as he has been adding to his position now in Occidental for at least the better part of the last year. But Occidental is having quite a different 2023 than it did naturally in 2022.
Buffett.
And I think you have to consider right now the state of the overall energy
It's
market.
too early to get in oil.
Reports that Warren Buffett's Berkshire Hathaway upped its stake, taking advantage of these sliding oil prices. The company did buy about 7.9 million shares in multiple trades on Monday, Tuesday, and Wednesday this week per a new regulatory filing. The average price for the purchases was about $59, totaling about 467 million roughly, which brings their total number of shares to 208 million, representing 23% of Occidental's outstanding shares and also marking about a 12 billion stake from Berkshire Hathaway. They really added already this month. I feel like we just discussed this same exact story, Alex, on this show, purchasing about 5.8 million shares on March 3rd, 4th, and 7th. So that was just last week. Now in August, they did receive regulatory approval to purchase up to a 50% stake, sparking speculation they may eventually buy all of the company, but we've yet to see any updates on that. We're just seeing right now Berkshire chip away here. They do also own about 10 billion in Occidental preferred stock and have warrants to buy another 83.9 million common shares for about $5 billion, or about $59.62 per share.
Are Oxy's warrants tradable?
Like not seeing the same strength as it closed last year. The S&P 500's best performer by a pretty sizable margin too. I mean, the other energy players weren't even really close on a yearly basis. Shares are now down about 7% on the year, getting a nice lift today. But it's actually interesting if you look at Berkshire's top holdings and the percentage stakes they have in companies. Really, it goes to show how massive Berkshire is, because Occidental isn't even in the top 5 at this point. Apple's still a huge player. Bank of America, another one. American Express. So it just really paints a picture, I guess, to the scale at which Berkshire right now is investing.
She makes it sound like Shire from Lord of the Rings.
When I
I
was
say
in college
Berkshire.
to in person hear Warren Buffett speak to kind of a select group of students, and one of the things he said alludes to the point that you're making, which is the scale at which the organization that he's operating with, he can't simply go buy some shares in a company and really get real exposure. He's no longer in that business. He's in the business of buying companies and buying businesses. That's how he can impactfully, move the portfolio for Berkshire. Berkshire's value is upwards of, $670 billion. Right now, Occidental Petroleum, the whole thing is about $50 billion. So if you own 20% of that,
Hey, Mark the Shark. Yeah, I'm gonna have to be quiet now. It's nap time. I'll be on here. I'll try and answer you guys' questions or whatever, but I have to keep it chill. I think I shorted. I can't remember, man. Yeah, I did. I have shorts here. Might be quite a while before it comes down, though. Or it might just keep ripping, honestly. Kind of consolidating. I do like this bearish MACD and that red under the 9, though, so... but yeah, I do have some shorts up here. Double down. Buy here. I wouldn't do it in one trade. You know, I'd scale. So I would do it in like 4 trades. Jeez, I'm out of these, man. Just consolidating. Or wants to go again. Whatever, I was up a little bit on it. Shorting, yeah, the features. Yes.
Story. It is an interesting technology, to say the least, but it's still considered quite highly valued relative to earnings.
Dollar chunks, yeah, you're welcome.
Despite the fact that they're expecting a full year of profitability.
Divide your capital into like 4 chunks. So you're going to spend $100. Just spend 25 at a time. Don't do it all in the same day.
Of the last year, George, but how I see this, and I think you did a great job of
and if you've been paper trading, you can do cash secured puts. That's really the best way to get into stocks, but
artificial intelligence, automation,
it's up to you.
Kind of the real use cases for a lot of this technology that things like OpenAI have sort of illustrated and shown to the broader population. But like the immediate benefits that some of this stuff can do. If you can take workers out of the assembly line kind of a situation, you're going to save the company money over time to automate things. The more you can automate and do so efficiently, less human labor probably going to be.
That's right. I remember you're always trading SPY.
So you can see why this company garners
258 on NVIDIA for puts.
It's not going to be the name that excites people the way OpenAI and ChatGPT stole the show and really got the light shining on this stuff.
It's a good point to bring up. Look, you really can't compare the two types of companies or effectively technologies. I mean, OpenAI is open source. A lot of the companies like UiPath, companies like Palantir, C3 AI, these are effectively closed source artificial intelligence software and optimization based companies. So I think if you look at the manufacturing, the industrial space, factory automation, across multiple industry groups, you have to consider these kinds of companies like UiPath, which essentially are closed source software, AI technologies, and that's actually probably a good thing. I think at the enterprise level, corporations are going to be utilizing not necessarily OpenAI, but closed source AI, and that's going to be creating high demand for closed source artificial intelligence software. That's a UiPath, I think, constructs and actually sells into the marketplace. I think the total addressable market is enormous. For a company like UiPath, it just really comes down to absorption and implementation over time. And time is a very key variable when it comes down to the utilization of these technologies on a forward basis. I mean, OpenAI is a fantastic technology, but it also has some of the cybersecurity risks that essentially a lot of these closed source companies like UiPath provide are going to create some value propositions.
Yeah, longer data ones are good, man. Put more into it, hold it, be more comfortable.
So George, really
get bigger returns.
I'm curious because, well, we have seen this name up over 30% year to date. We're still down, 47% from their high, and this name had so many missteps, and you highlighted now this path to profitability. So do you think they're able to actually get there? Because there is this risk with this company from following this name for better half of the last year that we could see, volatile swings now lower following this volatile move higher.
You just look at the analysts. The analysts actually say it's pretty close to fair value. So the earnings profile is improving, and the earnings profile on an adjusted basis for the next 4 quarters is positive. And going historically back, there hasn't been 4 consecutive quarters of profitability on an adjusted basis. So that's important. But the reason I brought up the valuation is important as well, because again, you know, seeing a stock like this, which is gapping higher and maybe going further, there might be a constraint on valuation constraints. And that's why I brought that up, because again, that matches sort of the premise behind why these analysts are targeting prices which are not necessarily exorbitantly higher than the current level of price, because again, it's a growth company. It's just not growing at a reasonable price from a valuation standpoint.
All right, George, we will leave it there. Appreciate all of your insight on this name. On ending the show on a positive note, with this name seriously outperforming the overall market, given some of the strength we're seeing. George Chilla, senior markets correspondent for the network. That does it for Alex and myself for Next Gen Investing for this Thursday. Coming up next, we have the Watch List with Nicole Petalides.
New York Stock Exchange stocks are just off session highs. We've gotten some big news on the banks, and some of these tech stocks are really leading the way. Take a look at the numbers. The Dow right now at 39.51, gaining 1.5%. That's the S&P 500, 39.51, gaining 1.5%. The Dow at 32,199 of 1%. The Nasdaq 12,526. As I mentioned, tech doing well today. Names like Microsoft and Intel are really showing some great signs.
Ranger, nice man.
Is right now
yeah, I've been liking into, or averaging in rather, to GME leaps or some January calls.
All these sectors here. We've had some big news in the last hour or so. I'd like to bring in Renita Young, senior markets correspondent here on the TD Ameritrade Network. And we're talking about what has been going on with the financial sector. You're also talking about the ECB today.
Yes, because BBY moved up out of the barcode.
The European Central Bank decided to continue on with its plan to raise the interest rates to
the double bottom is nice on GME.
By 50 basis points. Now, while some may say that the central bank has been signaling this for weeks, right? Others are saying that they thought that the current banking situation within the banking industry, not just in the U.S., but of course in Europe, that might have made the European Central Bank want to do something different. However, it did not, you know. And so Christine Lagarde, she decided to go ahead with it, and inflation remains sharply high above the target in Europe. Preliminary February data showed that headline inflation was at 8.5%. That's well above the 2% target. And the latest move brought the central bank's main rate to 3%. And so it had been in negative territory before July of last year. As for the U.S., the Fed meets next week, and Goldman Sachs has actually adjusted its rates expectations that the Fed will raise interest rates by 25 basis points instead of 50, but we'll find out what they do next week.
All right, thank you for that. So let's get to the big news here, and this is all about First Republic. And First Republic has been halted time and time again today. I saw the high of 40, the low of about 20 bucks. A lot of volatile trading for these regionals, but we could have another backstop story here. So you have Credit Suisse and also First Republic to tell us about.
Yes, so let's go with Credit Suisse. I'll breeze through it very quickly to bring folks up to date. Now, Credit Suisse, those shares are trading higher because it is taking action to strengthen its liquidity position and trying to do things before the situation gets worse. Now, earlier today, we heard that it's borrowing the equivalent of about $54 billion from the Swiss National Bank. That's going to be under a covered loan facility and a special liquidity, liquidity facility.
Yeah,
it's
just be easy.
Also issuing debt.
Even if we get a rally today, it could come down tomorrow.
Making a cash tender
Gotta be patient.
in relation to 10 U.S. dollar denominated senior debt securities. That's for a total consideration of up to $2.5 billion, and then a separate offer for 4 euro-denominated senior debt securities for 500 million.
I scaled in some here, thinking this was the bottom.
Meanwhile, First
Too much.
Republic Bank shares
Rallied
have
up. I'm
turned
like, oh yeah, it's true. I timed it perfect.
After a report that
And
big
then
banks, including Morgan
by the time
Stanley,
it
JP Morgan,
broke
and
here,
Citigroup,
that's when I knew
may
this
help
inverted head
this
and shoulders was
bank
broken. I'm
raise
like, all right, I'm
capital
gonna
to
wait.
at least deal
And I
with
waited
the
until here,
situation
scaled in a little bit
on a
more,
short-term basis,
and now we're back
and
lower.
assure
So
people that they can meet their
pretty well
requirements
in it as much as I
on
want
a
to be, though.
short
So,
term. Now, the Wall Street Journal initially reported
but
that
if I
these
wasn't,
major banks are
yeah, I would probably
discussing
scale in
a
some today.
rescue of around
Most likely setting up this
$25
RSI
billion
divergence
at
depending on end of
least.
day.
A few of them
How high we
will
close.
contribute about $5 billion each, with the rest of it dispersed
Where's
among
the contracts?
smaller,
Yeah,
more
the
regional
IB on
banks
is
as
crazy.
well. And so sources
What?
for the
And
for the
log
Wall
chart.
Street
I haven't looked at the log on it. I don't look at log usually,
discussed
but
these plans with regulators in Washington, D.C.
sorry,
as well.
kind of got to be quiet.
Yeah,
Over
thank
the
you for
past
that,
2 days.
Renita.
It's
I
not a
really
great drop.
appreciate it. I mean, obviously, this is the biggest news here
Oh, yeah.
today. Watching
Yeah, I think
First
GME's
Republic really
probably
closely.
repeating March.
Right now, still up about 13% as we speak, and the volatility is really evident. Thank you so much, Renita Young. Now let's take a look at the bigger picture. Vance Howard is here, CEO and Portfolio Manager, Howard Capital Management. I'm so glad you're here because today is a big day. You and I were talking about our many years on Wall Street, and today you have the big news that these companies, names like JP Morgan and Morgan Stanley, are reportedly working together to provide money over to First Republic, which is the third largest, has the uninsured deposits, right? It was SVB,
Yeah.
Signature Bank, and First Republic. So they're basically going to give this money and provide these deposits to basically give a backstop. All of these moves that we've been seeing have provided, I guess, some confidence. What do you think is going on in this whole banking system since last week?
Well, you and I remember 2008 very, very well.
Very well.
Like you go to bed at night and Bear Stearns at 38 and wake up the next day it's $1.50. And so this, and I was talking about this earlier this morning, this is the one thing you don't want to see is bank failures. Garden variety bear markets come and go, and you can trade through them with, without with some level of confidence, they're just a bear market.
Right.
But when your banks start to implode, Nicole, as you well know, you got to pay attention, because this is when things are getting real and getting serious. And it's the same thing that happened in 08 when the banks imploded then. So you had SVB, it did implode. You got Signature Banks being taken over. Republic looks like it's being fixed by other banks, which I find that very encouraging. I don't think that the other banks would be coming in to help Republic if they felt this was systemic and there was other problems with a lot more banks. I don't think they would be doing it.
Right.
So I'm very encouraged. We had our byline was positive January 12th, so we moved back about 90-95% back into the market. February it traded as we expected it to, with a modest pullback after a nice run in January. But what happened when the bank news came out last week is that was a game changer. Now, our trend indicator almost went negative, and it's firming back up now, but it did stop us out of a number of positions, so we've had some cash build up there.
Yeah.
But when banks start to fail, you gotta pay attention.
Yeah, and I'm so glad that you're here today, because you really provide the perspective that I always hope to bring on this show, because I remember 2008. We remember that sick feeling, and on Friday it was really uncomfortable, only to have the FDIC step in and provide that. Credit Suisse also uncomfortable. You have the Swiss National Bank, and now here at home, FRC and all these other banks with reports from Bloomberg, Wall Street Journal saying they'll help them out. In the meantime, I know you have a lot of cash now on the sideline. You talked about you have a special tool, stop loss tool. What are you going to do? What is your plan now for investors? Because there's so much volatility, and sometimes that brings opportunity. What are you thinking here?
You're going to have to take.
Sorry, I'm being quiet. I'm just showing you guys.
Markets that are this volatile, you're going to have to take short-term trades and take less of a profit. Have your
not buying any contracts. I'm just getting shares on BBY. And cash secured puts.
Let the mechanics of the market work.
And then actually doing covered calls on those.
We've got 30 to 40% in cash, which is quite $1.5 billion, $1.8 billion.
You could do spreads. But the IV's so high, you're paying a lot.
More bank failures has probably been nullified. But I like the fact that big banks are coming in to help the small banks. That gives me confidence, to be quite candid.
What's interesting is they're not doing it in a way that they're making money off of it. It really seems that it's a straight-up deposit, almost like a gift. These are all reports, of course, but I think you make a great point. It's very much teamwork.
It is.
Which is very interesting. The 40% cash that you have now on the sidelines, which you want to put to work, is that a big amount of cash for you generally when you look back over the decades? I mean, that's got to be a hefty amount of cash.
That's a hefty amount of cash. That's a hefty amount of cash.
Why do you have it the way it is, and what's your plan?
My plan, why we have it the way it is, because we got stopped out. The banks were disturbing to us. We think I'd rather be late to the party than early to the party and lose a whole bunch of money.
Yeah.
And so I'd rather be a little bit late and come back.
Rather be late than wrong.
Wash itself out. There's some great opportunities now, Nicole. You know that. You're watching the market every day. But the question is, can they get even more of a better opportunity, in a week or two?
Right.
So, be a little bit patient here. You don't have to be the first one out of the gate in the market. The market's going to still be there. And, with a good stock or a good liquid ETF, you can trade as much as you want. You're not going to break it. So, and by the way, we're holding a lot of BIL, which is BIL, the ETF for the 1 and 3 month trade. Well, it's paying us over 4. So it's not a bad place to park money right
bonds.
now. Yeah.
Short-term bonds. I mean, this is something that CDs are back. And even though short-term bonds have come off the highs now, right? You had the 2-year bond soaring. I know it's pulled back dramatically over 100 basis points, but still very attractive.
It is.
The 10-year right now is at 3.57 off that 4% that we had seen not that long ago. But still, T-bills are a good way to go, right?
Well, it's non-volatile. It's paying a good amount of an income, and you've got time to sit back, catch your breath, and think, and look at your positions and analyze your positions. I will tell you this: there's some bank stocks I really like, but they're all the big ones. Bank of America, Wells Fargo, J.P. Morgan. Some of the more regional banks, I would not play that stock by stock. If you're going to play that sector, I'd sure play with an ETF and get a whole bushel of them at once in case one doesn't make it.
Right. So Bank of America, Wells Fargo, and you also mentioned J.P. Morgan.
I do like those.
You do like those big sort of money center banks. Wells Fargo is a little bit different. It doesn't go into the Goldman Sachs, Citi, Bank of America, J.P. Morgan, but similar in that it's, the bigger banks, right?
Right.
So what are you waiting on? Are you going to sort of touch in there and get in a little bit at a time, or what is the plan?
Yeah, we'll come back, dribble in at a modest pace, let everything wash itself out. We're getting a good rally today. One thing that I've noticed is you're starting to see the market would sell off in the morning and come back in the afternoon, which is somewhat encouraging. But be a little patient here. It's troubling. whenever you have a bank failure like this.
What about all like the speak? Yellen saying the banking system is sound. Analysts are trying to find what's going on here. You have the Fed that right now we're in a quiet period. Are they going to raise rates? And this comes on the ECB raising 50 basis points. I mean, what are you looking for out of all of these people in the administration? And I'm not trying to talk politics, but leadership.
Well, the Fed's got to lead. And remember, the mandate of the Fed is not to stop inflation. The mandate of the Fed is financial stability for our economy and our markets. That's key number one. So, yes, they need to fight inflation, but maybe they need to tone it back just a little bit. I don't see any way we'll do 50 basis points. A quarter basis points is probably baked in for sure. I think if they don't do a quarter of a basis point, Nicole, that would scare me too, is what are they not telling us?
Right.
But I think a quarter basis point, they're going to hit us with that. I think they're going to be a lot more dovish because they've already crushed 3 banks, right? I mean,
basically because they had free money and then, rushed to raise rates, right?
So they've got to go back to their original mandate, financial stability. So they're going to be, I think they're going to take a step back. I don't think they anticipated this.
There are some people who think that basically the Fed should stop now and end the session and don't do that last hike. They did that last hike in 2008. They did that last hike in 2018, only to have to take it back.
Yeah.
And why? And there's others who come here and say, rip the Band-Aid off, just do 50. It's amazing how when you take 10 people on Wall Street, they're not all saying the same thing.
I agree. I think they need to go slow. I think one more should do it, and then I think they need to stop for a little bit and just see what happens. Let things catch up. I mean, they've raised rates for a complete year.
Yeah.
I mean, let things catch up a little bit. Take a break.
What are the clients calling and asking you about? I mean, you've had clients for your entire lifetime. You mentioned you like the banks, you like treasuries. Those seem to be maybe some places that you think you could park your money safely. What are the clients asking?
Well, they're asking, what do I think is going to happen with the bank issue? What do I think is going to happen with the recession, with inflation? And I give them the same talking points that I'm giving you. It's the way we look at it, the way we feel.
Right.
And again, we go back, I think the Feds run too fast, too hot, and they need to sort of pace themselves. They've done a little bit more damage than I think that they thought they would do.
Right.
And by the way, when you come to inflation, I think, and this is me talking, a lot of inflation's been built up just as basically a 101 economics class, supply and demand. You try to plug back in a massive economy that you completely turned off the light switch to. Well, you created some issues there. And there's supply issues. That's why you've got some inflation there, because people are going to pay 10, 20, 30% more to get the goods that they need to even construct a building like I'm doing in Texas. That causes inflation. But as those goods come back online, inflation will start to dissipate. It'll start to pull down organically.
Yeah, when the balance is back. Understood. Vance Howard, great to have you here on the show in person. Glad you're here. Vance Howard, CEO, Portfolio Manager, Howard Capital Management. Thanks. Later this hour, stand by, because I'll be joined by Steve Forbes to discuss his new book, The Turmoil in Financial Markets, Inflation, the Outlook on the Economy, and much more. But up next, Charles Schwab's Jeffrey Kleintop will talk all about what we need to know about the global markets. Each week he checks in with us. We want to hear what he has to say now, particularly on the heels of the ECB decision and what it means for global markets. Lots of discussion coming up next here on the Watch List.
Nice, Mark. Yeah. I mean, the options are cheap. I'm such a cheap stock for sure. June's a good amount of time. But yeah, that IV, I'm not buying that. See where SPY kind of settles down here. Yeah, I'd give this time. I mean, trying to perfectly time the top, then you could start scaling in, but give it time. It might consolidate up here. You don't know if it's going to break out or not. Highs coming down a little bit. Nice mark. Straddle on Intel. All right.
For some perspective on the big picture here, Jeffrey Kleintop, Chief Global Investment Strategist at Charles Schwab. So glad you're here. Before I get to the ECB, global banking crisis, has it been averted? And it's a different story what's going on in Europe than what's going on here at home.
Yeah, that's right. So, unlike the sudden end to SVB tied to investment losses as interest rates climbed last year, Credit Suisse's problems date back to 2019 and 2020 and 2021, with the SEC delaying the annual report due to some questions about cash flow statements back in 2019 and 2020, and that multi-billion-dollar hit to Archegos in 2021. It's been struggling to restructure and get its business back on track under new leadership. So the recent worries over the stability of U.S. banks made Credit Suisse's situation worse, despite what seems to have been an adequate cash raise back in December. But I don't think it's signaling contagion to other European banks, given that its troubles are unique.
Might have a little bounce up here to resistance, but
really tied to these issues going on in the U.S. It's not really about capital flight. It's really much more about some of these longer dated issues that go back several years and are now being addressed by the Swiss National Bank.
Right, understood. So at this point, we've made it through this part of the story, at least for now. You have banks here
kind of a head
in
and shoulders
America
here.
reportedly providing somewhat
Basically
of a
consolidated up
backstop
here, now
here
broke
for
to the
First
downside.
Republic. We made it through all of these blips. Tell me about what's going on. Obviously, we had the
Big minds.
ECB, Christine
I don't know.
Lagarde, staying on track, 50
I don't like all
basis points. And what do you
spy
think
chatter,
Powell,
but again, you got
thought
good
when
call
he saw
sometimes.
that? And what do you think the Fed may do on March 22nd when we're in a quiet period now, so nobody really knows?
Yeah, right. We are in a quiet period. So the Fed really got its hands tied a little bit in communicating with the market about how it's interpreting what's happening in the banking system. Our chief fixed income strategist, Kathy Jones, believes the Fed is not going to hike rates, dropping its intention to move rates higher. Well, obviously, we'll have to see what happens. There's certainly a wide range of potential outcomes. But it is interesting, and we didn't change our view, that the ECB would hike by 50 despite the banking stress. There's a few reasons for that. The risk of banking sector contagion, as we just talked about,
I got scared and got
appears
out.
pretty limited. Europeans' banks' exposure to U.S. deposits is low, and the Eurozone banking
The move
system
today was the
is
long.
very well capitalized
The
with a
long on
lot
this
of
break.
liquidity.
That was the move.
Second, inflation.
The rest of this is just
Underlying
chasing.
inflation
Even to the
pressures
downside,
remain very strong in Europe.
Downside, I don't think we're gonna get
show
a whole
few
lot.
signs of receding. In fact, we just got some February inflation data in the past couple of days from Spain and France, and they saw very strong month-over-month numbers, like 1% numbers on a monthly basis. So it's clear policy rates need to rise further to dampen demand and return inflation to its target. The other thing is, Europe did a pre-bailout. Banks in the Eurozone have been benefiting from ultra-cheap central bank funding under this TLTRO program, this targeted longer-term refinancing operations, which have been in place for a while. Again, you could call this a pre-bailout, essentially giving really cheap capital to banks so they don't have to worry about these capital runs. Banks have never been more profitable in Europe as a result. Their return on equity is very high, and they've never been better capitalized. And I'll just sum this up to say, all this has been affecting performance. The MSCI Europe Financials Index, which measures Europe's banks' performance,
the longer term
is up 2%
so bearish,
year to date, while the
and all
S&P
the macro
500
going on,
Financials
hard
Index
to
is
flip
down
and just
7%.
hold on to
This
bullish.
hasn't gone unnoticed by the markets.
Not
That
just trying to time the
European
tops.
banks seem to be better capitalized and
Trying
better
to
able to
short
withstand
it.
this, and that's why
But,
the ECB
yeah,
could hike
day
by
like today
50
is a nice
today.
day to just
Yeah, well,
trade
that's very interesting.
trade
And
the
so in the
see.
meantime now, when we talk about what's going on with currencies at the same time, your thoughts on the U.S. dollar, the euro, and any other currency you want to throw in there, because that's a global story, too, that you watch really closely.
It really is, and so much of that is going to be dependent on what the Fed does next week, with the market thinking that the Fed would maybe not be able to hike rates, certainly by 50, which was an expectation just a week or so ago, maybe not do anything at all. You know, the dollar slumped despite what we would normally see is a flight to quality, a flight into the dollar when markets show signs of stress, particularly financial stress. And that really didn't happen. Now, yesterday it jumped a little bit on the Credit Suisse, but that was really the first time we saw the dollar move higher in a while. Today it's back down again. I think the momentum here is perhaps towards more dollar weakness as we see maybe more strength and stability in Europe relative to what the Fed does.
But
again, that could change next week if the Fed surprises the market with a more aggressive policy move than we think they will.
Right. And at this point, what do you think we're going to be talking about in a month
Have
from
stop
now?
losses, do something.
Things that may seem like a bigger deal at the moment. What do you think in a month from now? Because we have 40-year highs on inflation. I know we're coming down from that. You still have the Fed, as far as we know, in a rising rate environment, really changing what they've done. It was free money, right? And then now they're squeezing everybody, and people are, some are saying to me, stop it, stop the cycle
returns.
right now.
Don't be chasing
just
those
end it, do
the
50
percent
basis
though.
points and call it a day. I mean, what do you think in a month
I got
from now
stuck
we're going to
doing
be
that
talking
for
about?
I mean, the risk is that we revert back to
trying to make a new high score on 9%.
Again. I think you set that up
All
well.
you're doing there is
back in the
trading more and
fall,
more
I think is a
risky.
great example of this. The Bank of England had to step in
keep it
and buy
safe,
bonds to bail
have a
out pension
conservative
funds
target,
that were hit by
and
the
just
sudden
be
sell-off that
consistently
followed a
profitable more than
short-lived
you are.
budget, which included some unfunded tax cuts.
That's it.
That brief concern over financial stability. I mean, I remember there was like a 6 sigma move in bond yields in the UK, and we saw a huge move in the pound as well. That was very short-lived, lasted a week or so, and returns quickly shifted back to a focus on inflation, and the central bank kept moving, actually hiked by 75 basis points in England after that. I think if we look at the data, all major regions are coming in better than expected on economic data, including some of the numbers that just came out recently in Europe in the last couple of days. The widely watched global composite purchasing managers index, again, my favorite sort of desert island data statistic, crossed back over 50, which is the dividing line between recession and growth. So we are seeing a surge in growth and perhaps a new wave of inflation that could cause us to revert back to these inflation concerns. So I do worry if some central banks take their eye off the ball, the inflation fears could come back even more palpably in just a month or two.
Yeah, and you called it. I mean, you called the strength in the international markets. I mean, you're on with us every single week, and you really saw what was happening. That's why you are who you are, Jeffrey Kleintop, Chief Global Investment Strategist, Charles Schwab. We adore you. Thank you so much. Glad you were able to be on with us.
Great to be on.
Stay tuned, Jeffrey, because Steve Forbes is next. Steve Forbes live on set here to discuss his new book, Inflation, what it is, why it's bad, how to fix it. I can't wait to have a great conversation with Steve Forbes. We're so glad he's here, all about the recent things in banks, inflation. We'll have a great conversation. Stay with us. We'll be right back.
Up or down tomorrow? Depends on where we close. Maybe no gap. Test of 390. Yeah, we might be down here by end of day. Are we? Yeah, we are. Thanks, Ryan. Appreciate it, man. Thanks for your contribution. Yeah, we had more people in here earlier. I've been having to be quiet, so I've lost some. But yeah.
The end of this whole thing, you're going to see fewer banks being hit. You're going to see more companies being hit, commercial firms being hit, as suddenly the free money is no longer there.
Yeah. Well, we saw so many bankruptcies during COVID. I mean, the lockdowns across the board, whether you agree with them or didn't agree with them. The point is, business was stalled across the board.
And it smashed the smaller businesses, obviously.
Right, those mom and pops.
Much worse than the biggies. But you're going to find a lot of medium-sized companies are suddenly going to, where's the money? They're losing money. They can't get it anymore.
Okay, so more bankruptcies, more companies going out of business, mid-sized companies. Unemployment, you expect unemployment to rise?
I think the Fed, since what they do is lagging. They're too late to discover the inflation, and now they've pressed the economy. When they raise interest rates, tighten up on money and all that sort of thing, it takes several months before the economy feels it. So the economy is in trouble now, and it's like turning a tanker. Big tanker, super tanker.
Yeah.
You turn the wheel, but it takes time for the ship to change course.
Yeah.
The Fed has already overdone it, so stop it. But they won't. What the ECB did today means the Fed will say, well, we won't do 50, but we will do 25. I think this morning they're thinking maybe we shouldn't do anything. The ECB, oh, okay, we'll only do 25.
And you say, stop it, that's enough, it's overdone. It's very interesting that you're saying that. In the meantime, you're talking about the economy that's, you think right now we're having a hard time. Are we in a recession? Is a recession coming? What happened to the soft landing?
Well, if you ever board an airplane and the pilot used to work at the Federal Reserve, get off the aircraft. You're going to have a crash landing. You're not going to have a soft landing with a guy like that. They continuously mismanage things. So in terms of the economy, I don't know when the economic theologians are going to call a recession, but where we're having hard times, maybe it'll be rolling. We see housing, but if interest rates go up again, housing's going to tank again. A lot of commercial real estate, not warehouses and things like that, but offices.
Offices are having a hard time.
Are going to have a hard time.
Right.
So we're going to have some very difficult times, and people now are running through their savings, they're going to their credit card, and so the consumer, the great stalwart of the economy, they're going to be pulling back.
I had one guest come on today. To your point, they're using their credit cards. They have very high rates now. They're not even going to be able to pay those back. You know, auto loan delinquencies, they're digging into the savings. One guest came on and said on the, I think it was the Dollar General call, people are borrowing from their friends to pay things. I mean, it is, you don't borrow from your friends. It just seems like a snowball that really has started rolling, and it's a little scary.
People have gotten accustomed, without them being conscious of it, that there's always a rescue check coming.
Yeah. Yeah, that's right. And we've seen that now with these banks, too. The rescue checks have come in. That being said, the bigger picture here is the USA, and I don't want to really try and talk too much about different administrations, but really the concept of what the government is supposed to be doing. Socialism, these banks, you know, we had one say banking is not a free market, it's a highly regulated monopoly. The government decides and socializes the losses, picks the winners. There are a lot of people who are nervous that the U.S. is on the track of Venezuela or something like that. You know, what are we doing right and what do we need to work on?
Well, what's happening now, especially with the push from the far left, is we're doing modern socialism. You know, the old socialism was you nationalize this, you nationalize that, control the means of production, all that sort of thing.
Yeah.
What we're seeing now is socialism by regulation. They don't have to take over an industry or a company. They can do it by simply regulation, make your survival dependent on their whims. And they're not even satisfied with going after companies. They now want to socialize us. That's where the kitchen wars are coming. They want to do away with gas stoves. Biden says, oh no, we're not. They just put out regulations which are going to kibosh them. How about your dishwasher, your washing machine, your shower head? They're ruining everything. Anything that makes life nice, they want to get rid of.
Right. In the meantime, all of this sort of chaos, what's been going on, and with all this with the banks and what will the Fed do, you always see opportunity. I know you want to preserve the principal, the wealth. What are you telling folks now?
Well, one way or the other, we're going to get through it.
You said this is a buying opportunity. I know you actually said this is a buying opportunity.
And the thing is, yes, we know about falling knives and things like that. But if the fundamentals are there, you will be bailed out. So I always tell people if they ask, have two sets of minds. One is your retirement fund, and the other is your non-retirement fund. And your retirement money, yeah, have a reserve. You never know what may come up. But always put your money in. Never sell. And if you can't babysit the thing, do some index funds, you'll always come out ahead. This country always recovers. I'm old enough, go back to the 1980s when we had dinosaurs around, and the economy recovered after the disastrous 1970s. I think we're going to see some big changes in 2024. You're already starting to see it in the red states versus blue states. How stark can you get? States that are doing well, states that are doing poorly, states that attract businesses and people. So in that sense, and in terms of other opportunities, take health care, which there's a race now. Is the government going to control it and wreck it like they have in other countries? Or are we going to get real consumer markets? One thing that's happened, as you know, is employers now when they offer health insurance, it's with a very high deductible. So people are paying more out of pocket than ever before, and they now want to know what are the prices. They want a comparison shop, so to speak.
Right.
And so you're going to begin to see in the next 5 or 6 years a real consumer market, and a market, 20% of the economy that was all third party. That's going to radically change. That means two things. Delivery health care is going to change enormously, huge opportunity, as well as the enormous breakthroughs that are coming, like vaccines for cancer and things like that.
Sure.
Big things are coming.
When we think about the young folks, we were just talking about the kids in college, and I know you have advice for someone who's young and up and coming and what they should do and how to make a buck, have, a dollar is worth more compounded, but also just, education here in America versus other countries. There's a lot that we need to get done, right?
Well, and the wonderful thing, this is what's nice about a free society, is you can change course, not have to riot in the streets as you do in some other countries to get something done. Is precisely, look what's happening in the States now with education savings accounts, where the parents will control the money, not the school bureaucracy.
Right.
That is huge. And you're seeing parents. I was talking to a woman the other day, mother of two. She and a group of parents have gotten together. They're starting their own, they rented a classroom, and a lot of subjects they're teaching themselves. Hiring somebody to come in, so you're going to see a whole array. So in terms of education, in terms of health care, and those GPTs, oh yes, actually they're going to be a huge boon in being able to do big things in health care and elsewhere. So get through this nonsense, create an environment where people can be productive and creative again. It'll happen.
I want to talk more about the economy. I know you're an economic prognosticator and you've received so many awards as such, but I also just feel, as you're mentioning Chat GPT, and I think about Microsoft and Amazon and Apple and Meta, I think about our tech names, I think about semis. Are there areas of the market that you like better? We saw Buffett take on more Occidental Petroleum. We have the banks sort of fluttering around right now. Are there certain sectors that you say, this is where I would get in?
Well,
certain names.
If you don't mind having your hand bloodied with the knife falling, but it'll stop eventually. The banking system today is in much better shape than it was in 2008, 2009. What we're seeing now are bank runs. In the old days, you had rumors spread by mouth. Now it's a nanosecond with the media, social media, and that's a disaster. But people begin, like advertising. Once upon a time, people, should say this, took ads literally. We'll lose weight in 10 days, 50 pounds. Well, we hear that now. We're a little skeptical when we hear the ads.
Yeah.
So too, we're going to be more skeptical about when people say with 15 exclamation marks, the world is coming to an end. And yeah, we'll adjust to this new world we're in.
So you do like some of the banks. What about some of the social media companies? I mean, we've seen some of the social media companies jumping on the heels of the possibility of banning TikTok. If. Would you ever get into some of those kinds of names, or not so much?
I think you got to look for new names, because you've already seen. Whoever would have thought 4 months ago Google would be staying up at night worried about a real threat to their search engine.
Right.
And now everyone knows about the GPT and chat. Boy, talk about instant.
And they are working, and he actually
and they're at the stage of baby talk. They have a lot of flaws now, but that's going to change.
Right.
Remember those first cell phones we had? We used to call them cell phones, big as a shoebox, weighed like a brick.
Yeah.
Now they're supercomputers.
Yeah, my mom had one in her car. As we talk about these different industries, you talk about cell phones, and I say the car. What about EVs and the transition to EVs? I mean, do we have the materials, the electricity,
no.
The push for EVs? Tell me about your thoughts on EVs.
EVs may be great. But if they're great, the government doesn't have to subsidize them. And in terms of making it, the idea we're going to get rid of oil and gas is preposterous. Just take one wind farm, typical wind farm. You know, you take take a gas turbine, serves 75,000 homes, size of a typical house. You take the typical wind farm to supply juice to 75,000 households, not a turbine the size of a house. It is 20 square miles. I mean 10 square miles, 20 turbines, each taller than the Washington Monument, 50,000 tons of concrete, 30,000 tons of iron ore, and for kids, 900 tons of unrecyclable plastic.
Oh,
you
they
take
won't
a
like
couple
that,
of those.
you're right.
You take a couple of those wind farms. They have more unrecyclable plastic than all the straws in the world.
What about what's
So
going on?
I don't see the future there.
You don't see the future there. I mean, you made it really evident. What about the future of space? A lot of, we have space exploration. Now we have, the others have come to take a look. They've entered our world. I don't know. There's all kinds of. You can get on a ship and exit for a brief period for probably 250,000. What do you think about all this? That we're seeing on space exploration. Of course, national security, which is really important as we have spy balloons, flying around.
China is tracking all of our satellites and have killer satellites up there. Yes, that's huge. But the thing about space is that the technology there is finally going to give us truly supersonic aircraft that can take us from New York to Los Angeles in 2 hours, Tokyo 4 or 5 hours. And it's amazing that technology has been dead on the water for half a century. It takes the same time to go from New York to LA today as it did 30 years ago. And that's going to change. So in terms of going up in space, fine. But I think travel on Earth is going to be revolutionized.
And you like that, yeah. So you're not panicked. You say this is a buying opportunity. Last thought on America? Go ahead, give it to us, Steve Forbes. I'm waiting.
Bullish. And the only regret I have being old is I want to see how it goes. I don't want to leave this show.
No, you're young. Don't let the old man in, like Clint Eastwood says. Steve Forbes, Chairman and Editor-in-Chief of Forbes Media. So glad you are with us, and his new book, Inflation. You can go ahead and get that today. Thank you, Steve Forbes. Still ahead in our second half of our show, we're going to look at the financial volatility that we've been seeing and what it means for your retirement planning. Here's a look at winners and losers in the S&P 500.
in terms of some of the concerns associated with the banking sector. So it was pretty well absorbed, it seemed like. Again, indices on the move higher, exactly what the bulls were looking for as we head into the late day trade this Thursday.
Yeah, Ben, I think you probably thought it was very interesting when Steve Forbes told the Fed, stop it. It's overdone. That's it. Did you hear when he said that? He basically said, stop the rate hikes. That's enough. Good to see you, Ben Lichtenstein. Thank you. Tony Drake is with us, CFP, Drake and Associates. Thanks for being with us. Your thoughts here as we're waiting on the Fed on March 22nd. What do you think they should do or not do?
Opinion doesn't hold what Steve Forbes does, but you and I have been talking for months. This is overdone. Think about it, Nicole. If you're in a cold part of the country, you cranked up that thermostat too high to 90 degrees. You come home, decide it's too hot, drop it to 70. It takes time. It doesn't go from 90 to 70. That's what we're going to see with this market. They were so late to the game. I think they're really going to overdo it here. Chances of this so-called, soft landing, I think, is probably past us, right? So their job is to raise it till something breaks, and we certainly had a few things breaking this last week.
So now what? Is there opportunity that could be coming out of some volatility that we're seeing? What are you watching?
Yeah, there's been some great names that you could have gotten in and out of quickly in the banking sector. I think some got, some got thrown out with the bathwater there, and there was some really big bounces as some of that panic and that emotional selling took place. But I think it really depends on what the Feds do here. I think we're likely going to see zero, but they have to be feeling pressure to do 25 basis points just for their credibility. Although I think any more rises at this point would be a policy error. A pause is certainly what the markets need. It's what's needed for stability, but it's tough. I mean, they're commingling two very different issues. The stability of the banking sector and monetary policy can't continue to mix those. You really have to try to separate them.
Right, understood. And for the retirees, you talk about people who can get in and get out, and the traders here do it all the time, and it can work really well. But for retirees, they really need to preserve that principle. People are still looking to treasuries. What are you telling those folks?
As you know, Nicole, we work with retirees. That's the main core of our business, and they're nervous. Whether, people are calling in, they're asking for advice. Should I have retired? Can I stay retired in this economy? For those retirees, sequence of return risk is a real thing to contend with. Losing money early in retirement has a big impact in the longevity of their portfolios, but it really boils down to time horizon. And if they've planned, accordingly, they have a bucket of safe money for income. Great area might be some of those short-term treasuries. Then they don't have to worry about this instability of the market if you've shored up your income for 5 or 10 years. So having that plan where you think about that's important. Another great thing to think about right now is tax strategies. If your IRA is down in retirement and you don't have a lot of other income otherwise, a Roth conversion might be a great time to take advantage of this. If it's down, you're going to pay a tax bill on a smaller account. When it rebounds, it'll rebound income tax-free. We know tax rates are going up in January 26, so this could be a great opportunity to take advantage of these lower rates and potentially your smaller IRA balance.
Yeah, so something like a Roth conversion, and that would be you pay the taxes now and you're sort of tax-free afterwards. In the meantime, do you have certain sectors that you like more than others? I mean, we have what's been going on in banks, but we've spoken about so many different kinds of stocks and companies. What do you like and look for versus those that you might stay away from?
Yeah, we still really like some of the international markets. We're keeping that exposure smaller. Of course, it could be volatile. But I also really like some of these plays that are going to benefit from the infrastructure spending that's yet to come this year. I think with all the news in the media about, all the volatility we've experienced, and certainly all the bank stuff, interest rate hikes, not a whole lot of attention has been kind of looked in that direction. So those could provide some great opportunities. You have to be careful. There's some names in there that are going to get a little bit beat up with high interest rates. So you got to choose them wisely, but there might be some great sectors there with some opportunity in the volatility we're experiencing.
Interesting, Tony, to have you on today, especially when you say, Fed, that's enough. You're another one in the that's enough category. Tony Drake, CFP, Drake and Associates, thank you very much for being here. Appreciate it. Next up now, we're talking about consumer discretionary stocks. We have a great panel for you. Max Wasserman, founder, senior portfolio manager at Miramar Capital, and Mel Casey, senior portfolio manager, FBB Capital Partners. Thank you both for being with us. We just talked about the consumer, and they certainly are feeling pinch, and there's discretionary versus staples. Max, what are you thinking about the overall group? And, the idea here is that things will get better, right?
Yes, thank you for having me on. I think the market's bifurcated between what I call the average household income, which is roughly around $67,000 a year, and those in the upper income, and they're spending differently. So the people who are in the average income, commodity inflation, prices of eggs, gas, milk, everything's affecting them. Higher interest rates is hurting them on credit cards. So they're spending differently, and they don't have as much discretionary items that they can buy. So more of the day-to-day is eating up their income. The alternative on the upper income, they're just spending differently. They're not buying hard goods like they used to. They're more experiences. So they're traveling more, hotels more services, and they're experiencing rising costs too, but they're able to absorb it right now.
Yeah, and last year's losers, this year's winners. I mean, we've seen it time and time again. And Mel, that's what you're referencing. Tell me a little bit about the group.
Sure. So consumer discretionary is a challenging sector for a couple of reasons. As you said, one of the worst performers last year, one of the best this year. Some of that's mean reversion. A lot of it's driven by just two names, Tesla, obviously, and Amazon had tough years last year. And as the sentiment around interest rates has evolved in 23, they've recovered, but they're dragging the rest of the group with them largely. It's a very top-heavy sector. Certain sectors of the S&P 500 are very top-heavy. This is one of them. So even when you're taking a passive ETF, passive approach here, it feels like an active bet. Our approach with clients is actually to try and barbell that. So within consumer discretionary, we're looking for more staples-like names. So like clearly, you need to be exposed to Tesla and Amazon. That's where there's a lot of long-term growth. Believe in that. No problem long-term with that. But at the same time, we need to counterbalance that with names like McDonald's or TJX that actually hold up a lot better as if we do go into a recession.
Yeah, thank you for that, Mel. Max, you had a name similar to McDonald's, I guess, which would be Starbucks. That was one of the names that you liked today, right?
Yes, we like Starbucks a lot. I mean, right now, they're about 47% of the stores in the United States are drive-through, which should help their margins. Also, about 70% of their beverages are cold beverages, which are doing very well. And now with China being open, and over 6,000 stores are now completely open in China without restrictions, and we think that will drive revenue forward. And it's an affordable luxury. Nobody really is giving up nobody's trading down usually on Starbucks. In slower times, they do very well. And now that the marketplace is open, that we think China is going to remain a growth for them in the future. And the other company we like a lot is General Parts, because we like the automotive replacement parts. They own about 19,000 Napa Auto Centers, and it's a do-it-for-me. Average age of a car is 12 years old. And with rising interest rates, people are keeping their cars longer, and they need more repairs. And they spend about $800 to $1,000 a year on repairs. So we think that's an excellent place too.
I'm glad you brought that up, Max, because when we talk about genuine parts company and that people are keeping their cars longer, which they are, it's the longest, it's 12 years, I believe, as you said. But as we move to EVs, there's going to be parts that need to be replaced there too. But batteries, these EVs will lose value at almost double the rate of a regular car. I was reading an article that was talking about $2,500 to $4,000 you lose in value. You lose $5,000 a year on your EV, and to replace some of those parts will be so expensive. I wonder if Genuine Parts Company, will they always be a winner? Do you think they'll sort of move with the times?
Sure, I never say always to any company, but yes, I think they're positioned very well for it. I mean, 30% of the revenue is also in industrial parts, so they do very well there too. But keep in mind, as cars get more complicated, you need them to do it for you, and that's what the Napa Auto Centers do. Yeah. Also, EVs are a very small portion of the market, at maybe 3 to 5% at best, and so it's going to take a long time. So, and if you can't afford to buy a new car and you have to keep yours longer, that's going to be the trend. It's going to be a trend for a long time, and we think they're well positioned in that part of the market.
Pull me out of my hibernation.
Yeah. All right.
Thank you,
and then Mel, quick final thought here on the S&P 500.
The green box.
Well, it's interesting where we stand. We're constantly looking at expectations, earnings expectations for the year ahead. We're down about 11% from the peak where we were probably about a year ago in terms of consensus estimates. Usually about 20% decline is the full experience there. But we're getting close to where it's probably a reasonable opportunity. I mean, people look at the PE, but the denominator can change and continues to change. So I will point out that there's still an expectation of 2% year-over-year growth in earnings. That doesn't really jive with everything else that we're seeing and feeling. So there might be a little bit of downside from here.
Mel Casey, SVB Capital Partners, Max Wasserman, Miramar Capital. Thank you both very much. And thank you, friends, for being with me here on the watch list. I'm Nicole Petalides. Dow's up about 300 points. Keep it right here. Oliver Rennick, Market on Close, next.
The ego on you.
Thank you, Ace, again. We're in nap time right now, so I'm being quiet, but appreciate it, homie.
The ego on you.
That would be so jacked. I don't think those bots can do that. That would be really messed up, though.
Note still, the Russell, where a lot of those financials call home, is trailing the NASDAQ by a full percentage point. Why? Because big tech is the hideout. And we see mega caps up across the board. After a couple big days, Meta is trailing some of its peers a tiny bit, but they're all up, and they're up pretty sizably. Apple, crucially, higher by 2%. Alphabet and Amazon up 5%. We're going to talk chips as NVIDIA is making a big move right now. That being said, Bitcoin is a tiny bit sluggish today after a couple huge days, but that's kind of what it does. It leads the charge. It wakes up first. It tells us where we're going in terms of risk appetite. And now we see what happens next for the crypto world, because I still believe that will be a leader here in terms of risk on, risk off, especially when it seems like the biggest part of this risk on move is tied to an expectation that the Federal Reserve will be a little more chill. However, I think we're learning here over the last couple days that we're going to get something from the Fed, at least 25 bips. So that's where I am a bit curious here that we are still getting some of this big growth tech trade, because that's the one that's tied into the valuation idea that many still link with the Federal Reserve as being one and the same. They see rates go down, they think, okay, time to buy these expensive tech and growth themes. Look at the chart of NVIDIA, for example. I mean, the thing is like breaking out. Technically, it's hard to argue with what's happening. That stock is having a great day, and it's adding on to recent strength, because don't forget, we've been in an intermediate term rally now heading back to October. So it's a breakout day for NVIDIA on the chart. Usually the type of thing that you don't want to fade when NVIDIA is doing this. Big gaps up off of old resistance, now becoming support. So that's why I do think that we should be keeping a close eye on what Bitcoin and some of the other high beta assets do, because potentially this is a market that's trying to find the most optimistic interpretation of our scenario right now, and right now that does involve the Fed. However, today I think pretty much confirmed, maybe not confirmed, but definitely edged towards some kind of hike from the Fed. Maybe that's why Bitcoin's a little bit sluggish. It was the first to move. Some of the risk-on tech stocks catching up to that euphoric style dance that Bitcoin does whenever there are rumors of a potential Fed pause or pivot. But the ECB went 50, and the dollar is not actually down that much today. Greenback has been hanging in there throughout the session. This morning, my point was that if the greenback doesn't get slammed on Lagarde doing 50 at the ECB, then I think that implies the Fed will be moving as well. Don't forget that before this banking event, we had 50 basis points locked in for the ECB, and then recently also the odds were favoring a 50 basis point hike from the Fed. And as that was happening, we saw the dollar creeping back higher. So the market had been gearing itself up for a little bit more aggression from Powell after last month's inflation
the ego
trends.
on you.
And so the dollar hanging out at 104 after yesterday's pop against the backdrop of a hawkish ECB, which could easily have driven the dollar lower today. I think that's telling us that we're getting at least 25 bips from Jay Powell next week. And that's where bonds come into play here, because we've got kind of an interesting move in bonds too. As I pointed out for the 10-year, you know, even though we've had some giant swings, they've been fairly well range bound in the case of the 10-year yield. We've had that upside of 4% that's been tough to get through, and we've had the downside around 3.45 to 3.5 in the 10-year that's also been hard to get below. And so now we're seeing that 3.5-ish on the 10-year yield act as some support for yield, and we've got a pretty big sell-off in bonds and yields going higher today. If the market is moving past this event as a non-crisis scare, as a wound that we can patch up and move on from, we may just default right back into some of the major themes from a macro perspective that have been giving stocks trouble over the last year. Now, of course, we're going to get a very important update next week from the Fed. But today, as you see regional banks up, it's not a big move, but there's definitely a tone of relief in the market here today. Staples are the worst performer on the day, so investors don't feel they need to own those right now. Here's what I will say, though, is we'll continue to watch First Republic Bank. It does seem like this is really the potential next risk point, as now larger banks are working to support them. The bounce today is not that impressive compared to the sell-off of the last few days. So I'm not saying that this event is past us. However, there are definitely some signs here that the market is trying to move on a bit today. And doing it as ECB goes 50 basis points, I think, is a particularly complex situation ahead of next week, because it does suggest we will still have some hikes left from the Fed to throw into all of this. Let's bring in Renee Young, Kevin Hanks, talk about our session here underway. It's a pretty interesting day here. Let's start with the banks as the main story, Renita, and then we'll kind of look ahead maybe to thinking about what all this means for the central banks. Firstly, with FRC, what's going on? They're going to get some help. It's like we're doing this like musical chairs of the money at this company. It's going to go to other banks, and they're going to put it right back into FRC.
Yep, you're right. So with FRC, we saw shares halted a couple of times today. We've seen this stock incredibly volatile during this session, going down really far and then up. Now it's kind of middling a little bit, still in the green though. But it's reports that some of the big banks are coming together to essentially, on the short term, sort of bail out this stock in around about $25 billion of funding to help out this bank, First Republic Bank. And it'll include Bank of America, Wells Fargo, Citi. And so this is, of course, on the short term. And the Wall Street Journal reported this earlier. They say that the banks have also discussed these plans with regulators and officials in Washington, D.C. And that the deal, this is interesting, it could be structured in a way that these banks are giving back some of the money that they took in from the panicked First Republic depositors when they pulled their money out of First Republic and they ran to these big banks. So that's a pretty interesting move. But any right now rescue, Oliver, it would only help the immediate issue of depositors bailing and this failing stock price at the moment. It does nothing to deal with the broader issues happening in this bank, in First Republic, the tougher business environment, the higher interest rates, and some depositors possibly never coming back. And to give you an idea of how this hit has taken a toll on First Republic, its market cap has fallen from $21 billion on March 8th when the SVB crisis kicked off to about $5 billion.
Wow. Incredible stuff. Good report on the details here. Money leaves, money comes back.
Yeah, it's the way it flows.
Yeah, it's pretty interesting, but ultimately it's kind of what the banking system is. Money gets moved around.
Yep.
Kevin, thinking about the market's response today, you do have this kind of relief rally in banks, but the bigger move is in the tech stuff. The bigger move is in the NASDAQ. How do we put that into perspective? What does that mean?
Yeah, you look at this move in the semiconductors and information technology in general, the NASDAQ leading the market higher. You would think, Oliver, in a day where we're recovering, that the Russell might lead us. But the Russell is up, but it isn't up near as much as the NASDAQ. The NASDAQ is clearly the leader, and it's the most high-profile names in the NASDAQ. It's NVIDIA, it's AMD, even Intel is up 5% today, Oliver. So this is a pretty broad rally within, both the NASDAQ and the information technology sector of the S&P, semiconductors. So, yeah, you're right. The leadership here is back to remember some of these names that were really beat up earlier in the year and at the end of last year, and basically so many, the news flow on these was all negative. Well, I think it has to do with where rates have gone. I think it has to do with the overall where we are on the calendar, where we are in terms of the levels of the S&P. But they went. This is a market that opened close to unchanged or slightly lower, Oliver, and it's been straight up since right after the bell.
And nonstop here too into the last hours. We're making highs as we speak. There was also some pretty strong bullish commentary this morning that was sort of a sweeping bullish note on chip makers. Take us through that, Renita, because it certainly has helped some of these names.
It definitely has. So it called for, over at Susquehanna, a bottom to the chip market and upgraded as a result Intel, Qualcomm, and Skyworks, which we don't necessarily hear a whole lot about. We hear the banner names more often. But let me take you through some of these upgrades that Susquehanna made on these three. I'll only give a couple of points for each. But on Intel, it is raising the price target to $26 a share from $23, giving it a neutral rating from negative. And Susquehanna says it's based on its ability to stabilize in a market, or stabilize its market share in a market full of competitors, right? Another part of it is with Intel. It's taking Intel from or raise the price target to $140 a share from $130. pardon me, it actually raised the price target to 26 from 23 on Intel and raised it to a neutral from a negative rating. And it said that Intel's ability, or pardon me, Qualcomm's ability is for the successful refocusing of the mid-range market share and differentiating its product services from others. And then on Skyworks, the upgrade comes from its refocus on the Chinese market with the continued growth operations and opportunities, including with Apple. And so the fact that it also trades at a discount to its peers, Skyworks I'm talking about, compared with its peers, it is an attractive investment option when it comes to chip stocks. So Susquehanna is really bullish on chip stocks right now, looking for a long-term recovery.
You know, there's optimism in the air when even Intel bears throw in the towel. Okay, and actually it's had a great week here a minute. All right, thanks guys. Much appreciated. Kevin Hanks, Renita Young, some of the explanation for today's move. Let's try and talk about the macro that we're all focused on while balancing it with some options flows with Mr. Jem Karsan, Senior Managing Partner at Kai Volatility Advisors, back with us here in studio. Jem, so let's firstly talk about the options situation, because that's what we spend a lot of our time discussing. It seems like from last time we spoke, we kind of like somehow threaded this needle, because we spent time talking about this whirlpool that was in the market, and it seems like we're stuck.
Yeah, when we were here last, we talked about Feb 15th to 17th, right, being a near-term top. That's what we got. We didn't get at first, what felt like a liquidation. Narrative follows price. Now, all of a sudden, there's kind of a tail appearing, and there's more fear here. That's kind of how these things work, right? This is March OPEX coming up. It's a quarterly OPEX. That matters. Why does that matter? There's more put positioning. There's more structured products tied to this March OPEX. There's more skew broadly in the market. Dealers are short put, long call, and particularly in certain parts of the market. I heard somebody earlier come on and talk about how tech has been outperforming Russell. That's been a major player this week. Not a coincidence that it's happening this week. All of the put positioning, the grand majority of it has been in tech. It's been well documented. I've talked about it for a while. As you approach OPEX, that put positioning that dealers are short is natural Vana charm buyback that happens exactly in this window. That's been incredibly supportive for the tech sector while positioning has been quite weak, especially after all the kind of negative flow we've seen for all this time. There's a lot of value in the Russell that isn't real value, that is really susceptible into a real liquidation, particularly
from a credit perspective?
From a credit perspective, absolutely. Value is not, that term is obviously not always what you think it is. That doesn't mean high discounted cash flows over the long run. There might be a lot of problems when interest rates goes higher and these companies can't refinance. So that's the macro perspective, but that stuff went up and a value growth rotation due to flows for quite some time. And now you're seeing the readjustment now that the positioning has gone the other way on the boat. So that decay from the NASDAQ has really been a defining force in this massive trade, tech versus Russell.
Right now, it seems the market's still very myopic about what the Fed is going to do, that this is really all that matters to these companies. Or do they go 25, do they go 50? As soon as there was a whiff that the Fed could drop some of that aggression, we saw this high valuation growth trade come back. Are we getting to the point, though, where that will run into a wall if the underlying situation deteriorates enough?
It's frustrating for the Fed, right? The Fed came out and this was actually, in my opinion, very well telegraphed. They were out there selling calls. We talked about it, not literally selling calls, out there trying to get the equity market down, to get speculation out of the market, right? This is, I think this was all relatively telegraphed. If you look at the banks that went under, crypto and tech, right? That's what we're looking at. That's where the speculation has been. That's what they want out of the market. So, in my opinion, this is something that the Fed actually wanted to an extent from the equity market. The problem is there's
clearing out the froth still.
Clearing out the
We've
froth.
We've done tech, consumer, why not banks?
Trying to use the wealth effect, right, to bring down economic growth. The market rallied 20% off the bottom. And we keep getting hot inflation numbers and keep getting more and more speculation. That's exactly what they don't want, right? Now the problem is, as they do that, and they've been looking to pause, by the way. Why do they want to pause? Because there's a lack of clarity at this point. It's been 5%, 4.75% move in interest rates. with very little pause. And we just don't know there's a lag. We just don't know what's going on yet. So they've wanted to pause. The problem is the word pause is read as pivot. It leads to a 20% rally in market, which makes things hotter. And it's a really tough situation, right? So the Fed has been selling calls, trying to dampen the upside, remove the speculation. It's worked, right? And they've done that by talking yields, up. The problem is now that we're getting this liquidation in the short term, we've seen an overreaction by the bond market. Dramatic reaction. And the Fed does not want the long end of the curve coming down like it has. So expect that now. The headwind is actually, in my opinion, not this bank story that you're hearing about. This is not 2008. There's always a tail in banks, as you mentioned. That exists. You can't get rid of that. But the real story is that rates have to go higher. Yields have to go higher at the end of the curve, the back of the curve, while equities go down. And that's a hard combination.
This week, will they surprise next week?
I do. I think. It's going to be a quarter. I don't think they're going to come in and try and shake the boat, but I think Powell's going to try and talk up the yields in the back end of the curve. This is not what they want. They do not want the long end of the curve coming down and stimulating. I mean, just today we had housing starts come in super hot. 24% year over year in multifamily investment. I mean, what do you think happens now that the yields along the curve have come down by as much as they have?
Mortgage rates are going to boom next week.
Exactly.
Right?
So this is not what the Fed wants, right? From an inflationary perspective, it's not a problem. But they do want the equity market down, the froth out. So they got that part. Now they got to try and thread the needle again and raise kind of yields in the back end of the curve. So I would expect some of that. I think that's the next headwind that faces the market. The Fed is still selling calls that, don't fight the Fed. The Fed sold puts for forever, right? In the short term you may win, but in the long end you're going to get bled out.
Thinking about over this next couple of weeks here, the next month or so, as you like to think about things in kind of month chunks, it seems like there is a level right now in the S&P that we've kind of been, it feels like we kind of keep going around. We keep talking about these same areas. It's like this market can't get too far from 4,000. Is that still basically the kind of line in the sand over the next month?
One thing we said last time is knowledge is vol dampening, right? And the reality is the more people kind of understand the positioning, understand the structural dynamics, the more it dampens volatility. This was a window for there to be liquidation. People were broadly prepared for it. Yes, we got a decline. Yes, we got some bank issues. But for the most part, people are well positioned. And because of that, as you reach OPEX, you get buyback of stock and all these things we've talked about. So stair steps is still the name of the game. There is a secular headwind. Again, the Fed is selling calls. They don't want the froth in the market. They will continue to take it out if it rallies back. That doesn't mean you're not going to get rallies back because people are short, because hedging is out there. And it's, by definition, liquidations can't happen when people are prepared for it.
Okay. A very macro Cem Carson today. All right, I like it. Appreciate it.
Great.
Always a pleasure.
Thanks for being here.
Cem Carson, Senior Managing Partner at Kai Volatility Advisors. Looking for 25 bips next week. And a Fed that still wants to keep that yield curve as afloat as possible. When we come back, let's talk some options trades. Alex Coffey's in the corner. We're also going to talk some trading with Gareth Soloway. So we got a very busy show here this afternoon. Moves we've seen in Intel for a while. That being said, it's been up at 30 bucks about a dozen times since November, and every time it has failed right here. So if it starts to break out, then you've got a really big deal for Intel after essentially a triple bottom down at 25 bucks. Last trade you got, UiPath, is that right?
UiPath, so this was actually a name that we talked about on Next Gen today. It stuck out to me just because of the massive move that it's making. All of this in response to an earnings update and analyst pile on. But this one goes out a little bit more time. So the one key distinction between all of these, the one key theme is unlimited upside, bold up, optimism. On this one, it's a pile on to a huge move here today of almost 17%, just over 17 bucks here. And this particular trader bought 23.88 of the August monthly 17.5 calls. So same style traded within the same ilk as the one that we looked at in Intel. 280 debit, though, means a break even of 2030. It's a pretty big move still required, but for a stock that's swinging around, 10, 15% at a clip like this one has been known to do, it's got plenty of time for that to potentially happen. $668,000 trade. Compare that to the Intel of just over $1 million, both, of course, dwarfed by the JP Morgan $15 million max loss.
Yeah, that's our big whale out there today. Okay, Mr. Jamie Dimon, was that you? All right, UiPath bullish trade, Intel bullish trade, JPM bullish trades, in sync with the market's vibes. Alex Coffey, thank you, sir. Host Next Gen Investing. All right, what a day here. We're mooning. The NASDAQ's now up 3% as we've got the dollar back down, still kind of within the range it's been in. Russell's still lagging. Bitcoin trying to wake up again, back to 25.2 almost. So it looks like bulls are jumping in and stampeding into the close here. We got 30 minutes left and really just no sign of breakdown whatsoever. This has been a powerful rally all day. We'll be right back.
and said, okay, if the Fed goes 450 basis points in less than a year, we might be in trouble depositing in this bank.
Right.
So I think there's, people talk about moral hazard there, but what are people supposed to do? But I'm uncomfortable with the whole nationalizing the banks thing, that every deposit is guaranteed kind of takes a lot of people in that direction in terms of what's going on here. So I think the stock market rally is right, because that's what we're supposed to be talking about here. I think that's correct, what's going on right now. I think the crude oil weakness is likely based on what's going on with yields specifically, not all of the weakness, but definitely the economy is going to be weakened by what's going on in the banking system, which will do a lot of the work for the Fed. Regardless of who bailed out these banks that were in trouble, whether it was private sector or public sector, that money comes from somewhere. And as Jamie Dimon said, lending will now be restricted. So there's a lot of pressures on the current inflation. And you can now safely say that maybe the Fed's part of the work has gotten easier. But we are now at inflation or hard landing / recession. It's binary now. There's not going to be one or the other any longer. There's no soft landing, not possible at this point.
So we've narrowed our options now to the lower extreme.
Yeah, and I'd prefer recession because stocks can go up in a recession. So as long as the inflation starts to get tamed, that's what you look for as a medium to long-term investor, in my view, is we go into a recession. Okay, people suffer. I hate that. I honestly hate that. I'm not being flippant about it. But as a stock investor, and really that's what my job is, tell people how to look at the different markets. If I were a stock investor and we went into a recession, I started to see inflation ticking down, I would then start to back up the truck for the next 10-year rally.
Got it. All right. And that's what we look for, basically, is, that's a potential for a recession to kind of shake out the last of the remaining froth. So it seems like we've at least got one leg lower. The question is, how deep is that next leg going to be? We'd like to get the framework increasingly narrowed down. So appreciate that possibility of soft landing now going away. Bob Iacchino, appreciate it. Thank you very much, and the tattoo tip as well. I'll keep that in mind. Bob's chief strategist at Path Trading Partners. Coming up, let's get our Schwab panel in here and talk about not just today's rally, but what's ahead next week. Tomorrow we've got a few data points, but it doesn't seem like anything has gotten in the way of the market's optimism for what comes next. Stick around. ask for. It's happening, by the way, as 10-year yields are higher. Let's talk bonds with Colin Martin, Director and Fixed Income Strategist at Schwab's Center for Financial Research. Get us started here thinking about some of the big picture subjects. Colin, good to have you here this afternoon. Equities are okay with this recovery mode we're in today, and okay with bonds selling off, as we made so much extreme movement to the downside in yields. I guess it's a nice reprieve to see something different.
It is nice, but it has been a pretty wild past couple of days. I mean, the movements we've seen in Treasury yields have been like nothing we've seen in years. I mean, 20, 30 basis points up or down on a given day. But like you alluded to, Oliver, it's generally good news, right? It started off this morning with the ECB hiking 50 basis points, which can be interpreted as a sign that things are generally okay. If members of the ECB were seriously concerned about financial stability or the risks of a big banking crisis, maybe they wouldn't have gone 50 basis points. So I think that can kind of nudge the Fed along to potentially hike next week. And then, of course, the news with First Republic Bank, of course, we can't comment on individual stocks, but that was generally good news. Now, we don't think this is the end of the banking concerns for the next day or week. You know, I don't know when it's going to end, but it's certainly a step in the right direction. It looks like we got a bunch of those problems taken care of, but we'll see how the next few weeks evolve. And our hope is that we don't see a few more of these banks kind of come out of the woodwork and maybe sharing the same problems of the banks that we've seen recently.
Okay. To your point on the other banks coming together right now to provide some support, I want to read a statement while we bring in Randy Frederick here from Yellen and Powell together, talking about 11 banks announcing $30 billion in deposits into First Republic Bank. Show of support by a group of large banks is most welcome, they write, and demonstrates the resilience of the banking system. I saw someone say a couple days ago, Randy, if we were reading these things from a developing or emerging market nation, we'd probably be shorting their bonds right now. I mean, is this the type of stuff you really want to hear? Like the government coming out and saying, hey, everything's good, guys?
Well, I mean, I think anytime you hear that, you have to take it with a grain of salt. I mean, certainly this is an unusual situation. I can't remember a time in the past where we've seen a bunch of other banks go to a little bank and just say, oh, yeah, we'll take care of you here, have some money. It's just kind of an odd situation. I mean, it is better than just letting them fall apart, certainly. But I just think I don't think I wouldn't call it a crisis, but I don't think the anxiety or the uncertainty or the concern that investors have over these regional banks is over just yet. And I would just say, there might be some opportunities out there. And if you're interested in sort of stepping in as traders, I know we're always looking for a dip to buy on. I would just say, don't throw everything into it right now. Maybe nibble away in very small quantities, because I think we've still got some more volatility. And I think there's probably a few others out there that we haven't heard about or heard from yet. What happens if there's another bank similar to this one and they aren't able to get the same kind of a capital infusion? You may have some issues. So it is kind of a strange situation, and I do hope it eventually calms down, but I got a feeling it's going to take a little while.
Okay. When we think about the role the bonds played in this, should we be looking at treasuries, Colin, and worried that higher yields could potentially exacerbate further problems at banks, or is that term lending facility that the Fed opened up as a result of this kind of prevent this from happening again? I mean, or do we look at this and go, hey, part of the problem here is they have these unrealized losses. If yields keep going up, those losses are only going to get bigger. Not good.
Yeah, I do think the new facility is going to be a big help. It kind of allows us to temporarily ignore at least those unrealized gains, and or unrealized losses rather, and that's important if we do get to see some banks see some deposits pulled. It allows these banks to kind of post collateral, get enough money to make their depositors whole. It is a risk though in the grand scheme of things. I mean, but this is what happens with banks. If when yields rise and you hold a portfolio of bonds, it's likely that the value of your holdings will decline. The good news is over the past couple of days, we've seen yields fall so much that they're likely off those lows. And given the changing landscape and expectations for Fed policy going forward, we might not see yields rise too much from here. I mean, that was pretty much our outlook even before all this happened. It was expected that the Fed was likely to keep hiking rates, but we didn't think long-term rates were going to rise much. If anything, that supports that thesis.
Okay. The potential here for this to have a major effect on the plans for the Federal Reserve have so far been a positive for the stock market. And today in particular, are you surprised at all, Randy, by the strength after the ECB went ahead and did 50? Because it seems like after that, we're pretty certain the Fed's going to do something too.
Yeah, in fact, I was very surprised by that, to be quite honest with you. I mean, we see the markets just flatten out or maybe, stabilize is one thing, but to get this kind of rally we had in the afternoon, especially when you look at what some of the areas where the rallying took place was in tech stocks and some of the more cyclical names, which for the most part, have been the ones that have been leaders throughout the beginning of this year up until now. But, this is kind of an interesting scenario to see that, but keep in mind, we've had a big down day followed by a big up day followed by a big down day. That's what volatility is all about. Just because we shot up today doesn't mean we might not be down tomorrow. I'm not saying that will happen, but we are in a volatile time. We've still got volatility well up into the mid-20s. So that means that, again, this is not over yet. Anytime you get an up day, that's a positive. But I would say the all clear flag is not waving just yet.
The volatility situation pretty muted today, kind of drifting back down toward the mid-20s. Does our floor kind of keep coming up, though, Randy? Like, where do we have to keep kind of shifting our expectations here and how to think about VIX?
Well, I mean, we've been at 20 for pretty much the whole beginning, since the beginning of this year until here just recently when this happened. It's been right around 20, which that in of itself is, I mean, people will look at the VIX and say, hey, the long-term average is around 20. That's true, but you got to keep in mind that long-term average includes periods of like 07 and 08, and it includes the pandemic spikes that we saw well up over 80. The mode of the VIX, which is the more normal level, is actually around 13. So we've been elevated for the entire 15 months of this bear market. And yes, we have now moved up into a higher level. I don't think it has to stay up at this level, but until this stuff sort of calms down and we stop having to have cash infusions and big deposits and bailouts and government backs, when all that stuff kind of goes away, which is liable to take several weeks, then I think it will probably settle back down to the 20 level. But right now, it's probably going to stay in this range for a while.
Okay. Colin, what do you see? What's the status right now in terms of the credit markets and that spread between quality and some of the higher yield stuff that was early and susceptible to some of these problems?
We're still very cautious. So we've seen high yield spreads really gap out over the past couple of days. I mean, they rose over 100 basis points in just 3 or 4 days. They're down a little bit today, which isn't surprising. They tend to move along with the stock market. They're a risk asset, so if risk assets are performing well, the stock market's up, you tend to see spreads come down and high yield bond prices rise. I want to piggyback on some of the comments Randy made. We don't think we're out of this just yet. I mean, there's still a lot of risks here. Something we've been saying for a while on the bond market side, and as it relates specifically to high yield bonds, is that when the Fed hikes, things tend to break. Now, we've been saying that for a little bit. It seems like everybody's saying that now because of what we've seen over the past week. But just because we got a few nice, snippets of positive headlines, it doesn't mean that this is over. When the Fed hikes, economic growth slows, spending slows, financial conditions tighten. We've seen that over the past week where financial conditions have tightened significantly. So that just makes it difficult for a lot of riskier corporations if they're seeing their earnings slow and their cash flows are declining and no one's willing to lend to them. We think that's a big risk. So we're still playing it pretty safe right now. We're focusing on quality, and there's probably going to be better opportunities down the road. We're not looking to wade in just yet.
Okay. Guys, thanks for taking us here into the bell. Randy Frederick, Colin Martin, some good thoughts for us to process as we've got one more day left in this week before we get to the Fed Focus next week. 60 seconds till the bell. We'll see you on the other side. We do have some earnings. FedEx and Groupon this afternoon.